There we go. That's better. I didn't transition properly at all. Good morning, guys. Good morning. How are we going? How are we today? Happy Monday to everyone. Happy Monday to you guys, traders. Hopefully Friday didn't catch anyone out too badly. See how we are. Not sure if we got is Dirk coming in on the background? I'm not sure. It was just me, Jonatan. Let me know. But how are we going? How are we doing? Hello, Marina. How are we going? Logan, Hussein, Tamil, Niju, we're in it again. Matthew. Let me get my screen. That is working. Let me message Johnson. All right, it looks like we're having some background technical difficulties. I assume you guys can see me. I can see me on the YouTube, but on my screen on the stream platform, I can't see anything. It looks like I'm not here. My screen's not here. Nothing's going on. So I'm going to assume you guys can. So hello. Looks like we do have Dirk coming in at some point. I might need to refresh my stream in a sec, guys, but I'll wait till we get some stuff up and going. Yeah, Fed definitely not dovish, my man. Not at all. Right? We got the pump. They are dovish. They're certainly dovish right now. So we'll see what the other tangential comments come out from the Fed this week. But I would say right now they're definitely leaning dovish. They're going towards those rate cuts. Jerome Powell acknowledged the problems in the labor market. What they're seeing, inflation's still looking a bit tame. Obviously, they're still worried about the inputs from tariffs. I'll see where that goes. So as far as today, this was some stuff. I'll try to clear this up a little bit for you guys in a sec. This is a trade I took just earlier this morning. Hopefully you guys can see that. I can't see what I'm doing, so we'll run with it. But yeah, so jumped in by these lows on euro dollar. I was expecting us to actually pause a bit higher. Mike was short, so hats off to Mike. He cleaned up that trade very nicely. But so for today, with that roundup, the sort of consolidation, digestion of Friday's moves after Powell speaking, probably get a bit of technical consolidation trading through here at the moment. Dirk.
Oh, finally.
You made it.
That was so weird. No, I was there the whole time, but I could see myself, but on the screen I wasn't there. You couldn't hear me. I don't know.
I was about to say, I can see you on the YouTube stream and it's showing up. On EV Mux right now, I'm blank. My chart's blank. You're blank.
I can see you on both now, and hear you, most importantly.
Yeah, I might have to restart myself and then come back. So I was just waiting to see if you.
So I switched from Google Chrome now to Microsoft Edge, something I never would do, but apparently here it works. I don't know. This is a little bit a piece of buggy software still, in my opinion.
Yeah.
But anyways, we're here now, and I'm back from holiday, refreshed. And the markets have done quite a bit, so I need to do some catching up actually today as well. So I haven't looked at the markets. Just my auto trading strategies have been trading for the past 2 weeks when I was on holiday. Ironically, that was the worst 2 weeks of the whole year when it comes to auto trading. I basically had in gold and in NASDAQ, I think it was like 12 losers in a row. It's crazy. I haven't had that all year, but that shows how important risk management is. If I would have risked something like 2%, then probably the account would have been blown, at least the evaluation account at the 5ers. Lucky I only risked something like 0.2%. Still, there's some work to do for me. More on that later, though. So that's maybe...
Yeah, I'm not surprised. Yeah, I do have some comments on that, so we can get to that. Probably just let me reset my stream now as well. See if I can get this working properly, and I'll come back. All right, I'll hand it over to you for a second.
All right, I'll share. Switch to my screen here. Here we go.
Yeah. I'll be back, guys.
I'll be back. See you in a minute. So, how's everybody doing? I can see we have quite a number of people already. We have Widot. I hope I'm pronouncing that correctly. We have Rahul here joining us, who is short an Aussie dollar. We can have a look, of course, at that later. We have Raza Hussein Bimani. Welcome to the stream. Logan is here. Yeah, we can see him either. We have Enrique. Yeah, ETH. Sure, we can talk about that later too. Some interesting developments. We had kind of like what I want to call a mini altcoin season. We have Complex Coin joining us. How you doing this morning, afternoon, evening, whatever time zone you're living in? J1, however that is pronounced, and so on and so forth. Quite a number of you already joining. Yeah, we're seeing, and that's always the funny thing, when you're on a holiday, when you come back and you kind of look at your charts, at what you've been drawing before you actually went to holiday. So that was kind of my last drawing I did back then. That was around about 2 to 3 weeks ago on the S&P 500, for example, where I said I have this target zone of 6,500. If we reach that one, it could be possible until end of November or somewhere in November also to reach 7,000. So we have reached the 6,500. We bounced off of that. Then again, bounced off this blue moving average, which is the 8 weeks moving average here. Very important one in trends. Market likes to turn when markets are trending very strong, likes to respect this moving average very often, as we've seen here, and to a certain extent also here. This 6,500 points moving average is, by the way, the Fibonacci extension, so the 1.272 extension from the whole move that we saw from mid-February 2025 all the way until we kind of bottomed out, not kind of in early April. That's the extension. The next target here would be the 1.618. I don't know if we're going to reach that. We can discuss, of course, about this later. Same picture we are seeing right now on the NASDAQ. My first target here was 23,900, has been reached as well. The extension target here would be 26,000 points. Let's see if we are going to reach this. We have for sure a number of important things coming up this week. First of all, we had Jerome Powell in Jackson Hole, kind of indicating that, yeah, we might soon see, as far as I understood it, interest rates being cut, maybe in the September meeting already, which is not in the too far future. We have then, of course, the GDP growth rate. Pardon me, guys. Sorry. Which is coming out on Thursday this week with a forecast of 3%, which would be quite amazing. Remember, the prior one was minus 0.5%, so we kind of had an indication of a mini recession there. Then, of course, we have personal income, personal spending coming on Friday. So more important than this, in my opinion, is, however, that we are going to get earning numbers of NVIDIA, I believe, this week as well. So we are getting the earning reports in 2 days, that is. So that's going to be, in my opinion, at least when it comes to the NASDAQ, an event that is probably more going to influence what we are going to see for the rest of the week than any economic data released. So be aware that there can be quite some volatility, especially if you're trading the NASDAQ. Then we have, and I want to spend some time also talking about this later, gold, which has pretty much done nothing. I remember I said when I left for holiday that we had this kind of compression zone, and it would look like we are breaking out of that compression zone. Well, not much has happened. It's still moving sideways, an extremely difficult market at the moment, more difficult than normally already to trade, because we've really gone from this steep incline in prices to this consolidation pattern, which basically has been going on now for what is it, April, May, June, July, August, for 4 months, almost 5 months to be more precise already. So let's have a look at that later and what is the most likely outcome. We can discuss a little bit when it comes at least to swing trading. How can we position ourselves? As I said before, on my day trading scalping system for gold, which is a trend following system, I'm in a drawdown at the moment because obviously trend following system do not work very well in choppy markets. How to approach something like this, how to solve something like this. If we have some more time on our hand, we can talk about that later again. Let me quickly see. I got a message from LJ. He has difficulty rejoining. Yeah, it seems a little bit buggy, the software at the moment. So yeah, guys, what do you want to start on? I saw some people here mentioning gold. Maybe we should start with that and then later go on to US dollar, Aussie dollar, euro pairs. So the way I see it here on gold right now is, and feel free to share your position if you want, is that I've said that many, many times in this whole move to the upside. So I'm talking about this whole move which has ironically accelerated over time. So you normally see like moves slowly flattening over time, but gold has been accelerating. And this is first of all a sign that there's, despite the good risk on markets. I mean, we have seen good performance, especially in US stock indices. We have seen somewhat good performance in Bitcoin, although it lately has difficulties overcoming the barrier of 120,000. We still have been seeing gold for basically all of 2023, 24, and for most of 2025 trending upwards, with the angle getting steeper and steeper. And that is a sign that there is quite a lot of uncertainty still in the market, that, especially institutional investors, they're not trusting the US dollar that much anymore, and they are looking for alternatives. And not everybody obviously wants to invest in Bitcoin, so a lot of them are also looking and investing in gold more actually than they are investing in Bitcoin, of course. Now, what is very characteristic in this move for gold, and this is really what's playing out at the moment, but longer than usual, is that we are not sometimes, seeing those periods where gold likes to move sideways, a little bit upwards, and it breaks out again. Then we had this fractal here, which looks a lot like what we've seen in the beginning of the current consolidation, when it breaks out to the north again. And then we have now this very long consolidation. And the good news here is the trend is still unbroken. So in order really to see a long-term change of market trend, we actually would need to see a lower low than the one we had here. So something lower than 3,123. That's still a little bit space to the upside. If we see a low below that, then we can start discussing about, is this whole move maybe over? Are we going to enter a mini bear market where maybe we will trace all the way to 3,000, or maybe even something like 2,700 or 800? However, what we have at the moment, and it looks a little bit like gold really doesn't want to break out of this, is sideways markets. And this is unusual because such a long sideways market we haven't seen for a very, very long time in gold, right? So if you want to be a little bit more generous, that would be your bottom, that would be your top. I think we can even draw this maybe here. There we had it like 1, 2, 3 times touching. So we are oscillating somewhere around up here, 3,450 and 3,270. So not much going on there really, right? And the problem is here now that we've gotten very used to gold eventually trending up. So always, I mean, it didn't really matter, with some exceptions when you were buying gold. Maybe it mattered, if you bought all the way up here, leverage, and then it went down again. But overall, if you look at this whole trend going up, if you're a swing trader, if you have a little bit of a longer breath, it didn't really matter when you bought gold because eventually it would go up. That's always, this is why people always say, in a bull market, it's always easy to be correct. Everybody's a genius in a bull market, correct? The problem now is that we have entered this extended range for gold as a sideways market, but people are still betting on the long side. And as they get more and more frustrated, because once beginner traders usually lose maybe 1, 2, or 3 trade, they tend to continue trading with higher leverage because they want to make up for the losses. So they re-enter the market, maybe think like, oh, the breakout is coming now. Then they get stopped out again, or they get margin called, the account gets liquidated. And so it seems like it still takes some time, until this speculative notion of retail investors is kind of flushed out of the market. So the go-to strategy here, in my opinion, at least when you're swing trading, you can do 2 things at the moment. You can try to sell up here, so around 3,450. LJ, welcome back. And
finally.
So clearing the cache worked, or?
It didn't work the first time. I then had to go manually find the folders and delete everything.
Yeah.
So doing it through Chrome didn't work, but manually delete everything. Now it's working.
But it's really, I have to give it to the Edge browser. That seems to work pretty well for me. I saw in a recent test also, by the way, that it's like amongst the best browsers now, believe it or not. And anyway, talking about gold here, so you could fade, sell gold if you want to honor this range we're in at the moment at around 3,440 to 3,450, or you could buy down here at around 3,270. Now, we have had the bull market support band catching up quite a bit. And remember what I always tell you, in trending markets, those bull market support bands are really, really good in as a reaccumulation zone. So if you plan on swing trading gold, or if you maybe even want to hold on longer to it, to buy here, you can see it honored it here very well. It honored it here. If we go a little bit back, the last time we were in this zone was here. And I mean, look what happened after this. Now, that doesn't, of course, mean that this is going to happen again. We never know. We don't know what's going to happen economically. We don't know if Nvidia is going to have good earning reports, although that's probably not going to affect gold that much. But it seems like Nvidia is affecting everything at the moment when it comes to earnings, more than any economic indicator we are seeing this week. But if I would choose now that I want to build up, let's say, a position in gold for the next 1, 2, 3, 4 weeks, around this area where the yellow moving average and the red moving average, the so-called bull market support bands, and you can find those, by the way, also here as ready-made indicators on TradingView. Bull market support band, so that's a simple 20 weeks simple moving average and a 21 weeks exponential moving average. They work very well. Not always, of course, but it's better than hoping that the price is going to go up again. So is it really for gold for me? What's difficult at the moment, and this is really the trap I'm in at the moment with my gold scalping system, where I try to catch moves of $15 with a risk with a stop loss at $9, is that the shopping market is, of course, not favorable for a trend following system. So I get like 10, 12 times in a row stopped out. I mean, that's part of trading a trend following system. This is why it's so important not to risk so much per trade. That's okay. One thing you could do now, if you are also trading a trend following system, is you could apply something like a percentage ATR filter. That's something I, for example, do on Bitcoin scalping, where I say, if the 20-day volatility, for example, on Bitcoin is below 2.5%, I do not trade at all. If it's over 2.5%, I trade with half my position size. If it's over 4%, I trade with full position size. If it's over 6%, I trade with 1.5 the position size because I want to harness the volatility. We like how to apply that, how to calculate that. I think that would go a little bit far. Maybe we can do another workshop on that in the future, or special on this in the future. But this is something I found for any trend following system something very worthwhile that you look at the volatility, and if you see like, well, the volatility is in a very low percentile, so it's so low as it always never is, or unexpectedly low, then you just don't trade with a trend following system. It's best actually to not trade at all. Like, for example, for my Bitcoin trading system, scalping system, which by the way made 10,000% since August last year, which is insane, but in the beginning of July until yesterday, it stopped trading completely because the 20-day volatility was below 2.5%. And that was good, because if it would have continued trading, it would be in a drawdown of 50% now. So that's really, really good. It's very hard because it requires us to be patient. And of course, that is something that's not easy, including for myself still nowadays, to really stand there for 2 months and do absolutely nothing. It's like, oh, but I have to do something. I want to earn some money. Well, you could be happy. You can be happy that you're not losing money, which you probably would have in a state like this. So my mistake that I didn't apply this on gold, the ATR percentage filter. So that's something I'm going to do this week. Same for NASDAQ, by the way, also a bit choppy. But yeah, I don't know. How do you see that at the moment in gold? I know you usually have like more insights at, where could be turnaround points. What is the pressure side of the market we potentially could see later today?
Yeah, so I mean that choppiness whilst you've been away has definitely been there. It seems largely we've had a very particularly last week, right? We had a very back and forth between the outlook for the Fed, where we're going with that. At one point we're 100% pricing rate cut, and then like a 7% chance of 50 basis point rate cut. Right? Then we flipped back to about that 90%, then we went down to 80, then back. It's been back and forth that whole week. And then obviously Powell came out and spoke on the Friday, gave further context to everything, and that shuffled the market around. So it seemed most of that early trading activity through the week, though, was sort of a lot of short covering and just jitters around those particular comments, right? Now we've had at least the interpretation, I guess you can say, of what he said, very much more dovish. Where that filters out to, because often, sometimes Jerome will speak and then they come back after and say, hey guys, no, you actually took that way too hard, too much, too fast, too quickly, all right? We weren't being that intense, all right? Calm down. So we'll see how that plays out with some of the other Fed speakers coming around, and obviously keep eyes out for like a little leaked thing through the Wall Street Journal or something. They've done that a number of times now as well. So, but yeah, so no surprise, like you were talking about the algo stuff you had going on, that we're having trouble because we had a lot of fake outs because of that, where you'd have certain market structure building up and then just denied and just collapse, and it was very all over the place, very, very mixed week last week. Gold in particular, like you're talking about, I mean, gold for some time now, I've been talking about this with Mike as well. It's just a lot of chop, a lot of very lack of conviction of the direction. I've sort of been playing gold as these larger, peak points, top to bottom. We form channels and stuff coming through. And within that, any of these interim ranges, I'm just ignoring. So until we get to either the tops or bottoms, then I'll consider positions. That intraday trading recently has been very, just rubbish, quite frankly. So
it's very comforting to hear that you were facing kind of the same problems. Yeah.
Yeah.
Because how it is sometimes, if you're all by yourself and you have like 10, 12 losers in a row, even after those 26 years, I'm still like, is that me? What am I doing?
What am I doing? Have I lost my edge? What's happened? Yeah.
What's happening?
Yeah. No, definitely. Last week I went back and forth, or I'd have a great trading session through London, then give a lot of it back through New York, and end up like marginally up, or as flat, or a touchdown, and then the next day, same deal, back and forth. London was very good last week, but coming into end of London into New York just made it an absolute,
Which is also weird, because normally normally if I have a good day in gold, I usually have the major winners during the New York session. I kind of always have the London session for me is always we have a big move, and then gold kind of goes into flat lines a bit because it's waiting for. That's at least my interpretation for new impulses of New York coming in. And it seems like last week, everybody was up early and doing their stuff already during London session.
Yeah. We had these weird. A number of the days actually kind of repeated sort of the same price action, which is easy to see in hindsight, but in real time, it was very looking like we'd actually run the opposing direction coming into New York. People had settled down about the Jerome Powell speech, kind of had some idea, and then just flip-flop constantly. So yeah, it's definitely a bit of a mess on that last week in particular. The week before had 1 or 2 days like that, but the rest of the week was status quo, more sensible, rational sort of trading. So where we are now, obviously, since Friday today through Asia and everything, we've been consolidating these highs after that very impulsive drive from Jerome's comments. I wouldn't be surprised if we probably, at least for today, we do keep consolidating this area, and then probably more likely coming into tomorrow to get a break higher or a deeper retracement and then continue on. As far as gold, where we are now, I'd be leaning more to this consolidating here and then driving higher rather than us breaking down. But that said, it depends how much, if some of that very sort of strange trading activity leaks back over into this week as well. Because at the moment, you can see the odds for the Fed rate cut are still only 87%, which per the price action that we've had would imply differently.
Yeah.
So one of these two characters is a bit wrong. So either you take it that the market is now underpricing the probability of the Fed rate cut, or the spot price per markets right now is actually overpricing it.
But I think the poll here on for the Fed watch is always overreacting a bit too. I notice, once after Powell speaks, you have like the huge changes, and then it kind of goes back a bit to equilibrium. So I wouldn't be surprised to see that going maybe down to 75% or something like this.
I think we're at 69.5% just before Jerome Powell.
Yeah.
So that prior week we had started the Monday week before last, so 2 weeks ago now. We're 97, dipped back to 94, then to 85, back up to 89, 93, down to 82, back and forth. Eventually then priced in 100% chance plus a 7% of 50 basis point, then went back. So I think we are going to get a lot of that chop still. I would say this is probably more, I think with now how much, and given these past 2 weeks, what the market is sort of expecting is that, yes, we're going to have a rate cut, right? And Jerome is, I think, finally going to the position of saying, like, look, if I don't do it, someone else is going to do it. We know where the forward outlook for this is. So either I can try and settle the plane a little bit more gentle myself and set up some infrastructure or framework going forward for whoever is left as far as the other participants, that kind of thing, to try and nudge it well. That or else does nothing, keeps sitting on hands. He gets replaced. Someone else comes in and just dive bombs rates very aggressively. And then you could end up with a real issue because it's too hard, too fast. Very quick switch of pace. So I think he's got one of those dilemmas right now. And you've seen that Trump also trying to attack the larger Fed voters. And sort of, I feel like he wants to throw a grenade in there for the new Fed chair and make it someone that all the other voting members don't like so much that they would potentially even consider quitting.
Yeah.
Because they're just like, why am I even here anymore? There's no point me being here.
That's the thing, though. I mean,
you can replace people.
Yeah. You're supposed to be, as a member of a Fed committee, you're supposed to be unpolitical, independent from politics. And then you get like pressure, and all this stuff coming from the direction of Trump and his minions. And I think eventually you say like, you know what, I'm not paid well enough yet. It's not like those are like super well paid jobs anyway. Even Jerome Powell, what does he get, like $200,000 or something per year, I think, which for this position, I mean, for a normal person, you would always say, oh, that's a lot of money. But for that position and that pressure and
that scrutiny and public eye and everything, it
should be like 10 times that, in my opinion. And but anyway, it's also good to see people not doing that for the money, obviously. Something we rarely see in politics nowadays. But yeah, eventually you stand there and say, like, why do I have to put up with this, with all this blackmailing, with all this pressure? I'm just going to go away. Usually, if you're in a position like this, you will do well after that as well. Being invited as a speaker. We've seen that with Yellen, for example, a lot, very lucrative jobs.
All that back end stuff that they get. Yeah.
So I mean, it's a golden handshake, usually, not like for normal people that lose their jobs and have to get a new job as quickly as possible. I'm not going to afford any rent anymore. Who's that?
I was going to say, this is a guy looking at potentially that Trump could throw in as that grenade individual.
Who's that?
This is David Server. So he actually used to be part of the Fed and everything, right? He used to be a state member of the Fed. Yeah, and he's had a very different...
and of course, your orange suit,
yeah. He's definitely had a different change of style since sort of stepping back from some of these things. But he's someone that does have those Fed credentials. That would be that type of grenade outlook that Trump would throw in. I mean, just tell me just that picture alone, without any other further words. This is a Trump pick. You know what I mean? Right?
It's like, do you remember that movie Idiocracy?
Yeah. God,
we're getting closer and closer to that, really.
And because the other thing is, he's dating Kellyanne Conway.
Okay.
Right, so you see political ties, all that like this is just seeming like more of a higher likelihood of that kind of left field type thing that he will throw in, especially after his pick for the BLS, right? After that firing, So he seems to be fully.
You know what?
Not doing this.
In a way,
just doing it a bit more indirectly.
In a way, this is like one of the most American pictures I've ever seen, I think.
Exactly. That's what I mean. Like, without any words, this perfectly sums up.
Yeah, really. That comes up, you'll immediately tell, okay, that was Americans.
Presidency, yeah.
And Trump. That's a good one here.
Yeah. So I wouldn't be surprised if puts in someone like this, tries to force everyone else to sort of shuffle out, because they go, why am I here? I say this and that, and I'm using my brain, and it's just thrown in the bin anyway. I'm wasting my time. I've served, enough public effort. I'll just go focus on my family or something. Right?
That suit screams bullish. Absolutely. By the way, what profile picture is that? Oscar Piastri with a croissant on his head?
Yeah, that's got a pastry over there.
Oscar pastry. I get it now. I get it now. All right. I love it. Gonna wait until Formula One starts again. And you've maybe
this weekend
already just now. This weekend, is it Holland or what's coming up now? Netherlands or?
Netherlands, I think it is,
nice. That's basically around the corner for me. So maybe you saw it already. Maybe you've heard about it. Good news. And guys, I want you to leave a like if you're watching on YouTube here. The 5ers have C-Trader coming up as an alternative to MetaTrader 5. So if you are like me and you don't like MetaTrader 5, in the future there will be C-Trader available for you, which I've never worked with it, but from what I've heard and from what I've seen, it's a far more flexible tool, a bit more modern tool, goes more into the direction of what we are used maybe from TradingView. So that's coming up for you to basically get your trading to the next level and allow you to automate your strategies and use all kinds of beautiful plugins in a more easy way than is currently possible with a MetaTrader 5. That's really super exciting that it's coming up. And what is this here? Lance Stroll for the win. But I heard he's making a comeback, by the way, Lance Stroll, not to Formula One, but something else. I'm very happy that we're going
Get
to
him out of
see Valtteri Bottas next year, probably again,
Mm.
driving for Cadillacs. He's one of my favorite, not only drivers, I think he's a very good driver, but also one of my favorite characters in Formula One.
Yeah, he's our other resident adopted Australian.
Yeah, I know.
You know, yeah.
I remember last time he was in Australia.
Yeah. No, it's great. He has to serve his penalties and such first, though, I think.
Yeah,
right?
but no.
Yes.
He doesn't have to serve them because they
No?
expire after 12 months.
Okay, so by the time he races, he won't have
Yeah.
to.
I know that was the discussion, but he doesn't have
Yeah.
who's going to be the second one? Is that really Lance Stroll on Cadillac? I don't think so, no. It's gotta be Schumacher. It's like in Germany, it's all you see. Is Schumacher going to drive for Cadillac? Not talking about Michael Schumacher, obviously. I'm talking about Mick Schumacher.
Mick Schumacher, yeah. Look, I think if Lance did drive for Cadillac, his dad must have paid them a lot of money to let him in, right? You know?
Yeah, probably. Maybe he should form a team, Lance Stroll, and what was that guy? Name of a French guy that crashed a lot. That had this very bad crash in Haas, where he almost died.
Haas.
Broke into what's his name again? I forgot.
That burnt his hands.
Yeah, exactly. Yeah, where nobody thought he's getting alive out of that car, but lucky he did.
Romain Grosjean.
Thank you. That's
Grosjean.
him.
Yeah, there we
exactly.
go. Yeah.
And we got some questions also coming in here. Will the spreads be the same on C-Trader as on MT5? I suppose they are going to be that. We don't have all the details yet. We just, at least I just heard this morning about it. And I assume, everything is going to be the same, just the platform itself. You have more choice there, whether you like more MT5 or whether you like more C-Trader. I'm for sure going to check it out. There's another nice announcement coming, by the way, this week, but we cannot share that yet. So you might want to stay tuned, especially want to tune in tomorrow again to hear about some more great news. And by the way, also tomorrow, as if I read that correctly, Jonatan is going to announce the winners of last week's giveaway. Greetings from Jonatan. He has sadly come down with a flu, so he's taking some well-deserved rest today. While LJ and me are trying our best to replace him today entertain you. Let's get back to the charts, I would say. What else? I saw somebody asking about Aussie dollar earlier. Somebody being short on Aussie dollar. I don't know who it was. Maybe you want to leave a comment again. So we know who you are, who was afraid a little bit of getting stopped out with a loss at the moment. And I mean, if there's one person here amongst all of our in-house traders who's specializing in Aussie, it must be you.
Yeah, look, Aussie dollar, definitely. So first of all, C-Trader, absolutely amazing. You guys will be seeing that coming. I think Dirk as well, you'll really like C-Trader if you jump into it. It takes a little bit just to get used to first setting it up, when you're used to other platforms like MetaTrader, that kind of stuff. But I'm sure as well with the algorithmic and sort of coding stuff, you'll find it much better. Same with backtesting and things as well. So yeah, Rahul. All right, short Aussie dollar on the 15-minute traders at entry right now. So you're pretty similar to where I am. I will say, as you can see here, I am long. So I guess that's your first input. Now, I will say as well, with today's trading, like I highlighted earlier, I think today we are somewhat in consolidation mode for this higher range after that impulsive drive from Friday. So I don't have particularly overwhelming conviction on either the upside or the downside across all the majors right now. I think right now we are trying to find our footing. So my approach today has been to just take little bites out of the market, right? So I wouldn't expect, say, hypothetically, if you're short from here, I wouldn't expect us to then all of a sudden be finding some kind of test point of the lows from Asia and then collapsing right down, right? That's probably not going to happen. we've had the more dovish comments from Powell. Right now, the market is definitely still sitting on that and acknowledging or accepting or believing in those comments and the interpretation, more importantly, of those comments. So until we see some kind of change, I would just be cautious. As far as the Aussie dollar, we did have that slight break through these tops. The peak point just around 65 cents from Friday. So I wouldn't be surprised if we actually get a further run. The Aussie dollar is definitely faring a bit better than some of the other majors today. So beyond a general retracement into, say, down towards these Asia lows somewhere, if you're short there, I'll get stopped out, you'll clean up. That's fair, but I wouldn't be seeing extended moves. So if you're trying to play the range in this higher overall basket that we've created from Friday's price action, then you're probably pretty good shout. But yeah, I still do have a slight tilt to the upside that ultimately we do get that run and push higher. Then from there, get a more of a decent pullback. But
I think if your entry, Rahul, is where LJ has the blue line a bit higher than that, you're pretty much in good shape at the moment, no? Could like potentially put your stop loss to break even or something, although I of course do not want to influence you in your decision making here. Yeah, but we all know when it comes to Aussie, LJ tends to be right very often.
Yeah, and so to give the counter view, so what I'd say is I haven't liked the price action on the euro. So this was a trade I took earlier. I ended up jumping out of this just here when we sort of peaked, started pulling back. So this was a trade I took when I was on the stream with Mike earlier on ABL. So the fact that euro dollar is not quite picking up, I don't like that influence, because if we see this actually break these Asia lows and fall out of bed, then you could run much lower. Because ideally what I was looking for earlier today was a retracement to about 116.80 on euro dollar. So if we put these guys here, you can see that's basically where the pivot point is for today. So I'd call that the more neutral, fair value kind of price point as far as spot for euro dollar. We haven't seen that yet. So very much you could see that come further. I know Mike was looking for those shorts still. Now, the final third piece of it all is often when I've seen these impulsive drives year after year, NFP after NFP, Fed speech, Fed minutes, Fed whatever. If you, especially coming into the back of like closing like that into the end of the week and come into Monday, the sort of low from Asia does tend to be the low that you get, right? And then you get another test of the upside, sometimes either failing just before those tops, then get a proper retracement, or you get a slight blow off top, and then you get the retracement the next, Tuesday, Wednesday, the following 2 days, right? So that's the primary reason that I don't particularly like shorts right now. If I was interested in shorting, I'd be waiting for a bit of a higher entry to have confidence. Right now, I'd say you're playing like 50-50. So if you size something right, you've got your risk reward, your calculations all in check, then you could be playing both sides as we're going back and forth in this consolidation range, but just don't expect any wild breakouts from the range for today. So what's your thoughts on that, Dirk? I know you've missed a lot of the past while I was trading. It's hard to give commentary.
It's still true, basically, what we've been talking about when it comes to the US dollar for really the past months already, We've always been saying, we are favoring, I hope I'm quoting you correctly by now, not very much a friend of buying the US dollar at the moment. So if we have a choice, rather shorting it. And if I look at this is always, I said it in the beginning of the stream, I always like that when you're on holiday, you come back, you still have your drawings on the chart and you get to see like, how did it play out really,
Played out, yeah.
And this is, for example, a drawing here that I did July 22nd, 2025. I think I did it back then during our ABL podcast. Where I said, for the upcoming 3, 6, 9, maybe 12 months even, I prefer on looking for opportunities where I can short the US dollar. And so playing a game of a weaker US dollar, so a lower Dixie, if you want. So now I kind of drew this, which I mean, right now we are kind of following that path. And see, last time we spiked up here to 100, which was end of July. We were pretty much reflected by it at the moment. So that's my favorite game at the moment to play. One strategy could be here. Those bull market support bands also work as bear market support bands, obviously. So every time we kind of tick here into that direction, and we did, by the way, that last week, Thursday and Friday, use that to sell the US dollar. And you can do that by buying Aussie dollar. You can do that by buying euro versus dollar. Dollar yen obviously is something you would need to sell then, but dollar yen is a bit of a special case in my opinion always. And so not the main pair I probably would use to trade this. I would more be inclined on using either Aussie dollar or euro dollar. But that's pretty much, the path I'm at the moment following with my option strategies. Although I would like to see a little bit of higher volatility. That's like in general something that I don't particularly like about the market. And this is probably also the reason why we see the choppy markets at the moment. If I look, for example, here at the VIX for the S&P 500, we can see we are at very, very low levels there already.
Yeah,
very low levels. Like historically speaking, we are probably like in the 80th, 85 percentile. So it doesn't get much lower than this. And usually when you see that, you sooner or later have a correction in the markets. Now, volatility always builds up, goes higher, ironically, when markets go down risk on markets. So you could expect like maybe we are going to see a correction in the S&P 500, in the NASDAQ sooner or later, with the appropriate reaction also in gold then, with the appropriate reaction in the US dollar, obviously. So that is something, at least when it comes to, when it comes to all assets at the moment, especially also options, where I say, like, I need to be a little bit cautious. When it comes to options, I'm the one selling. I'm the option writer. So my risk is always unlimited if I don't hedge it. And the lower the volatility, the implied volatility is, the less I get for my options. I get paid for my options. So I'm very, very conservative at the moment. It's kind of a trend we've seen since the beginning of July, really. That doesn't mean I'm still in US stocks. That doesn't mean I'm still in Bitcoin. But you guys know I've been slowly fading out since the beginning of the year. And I think, if I'm not mistaken, August and September, historically speaking, are usually also not very easy months for the stock markets.
Yeah. I feel like trading in general, because you got the European summer, I've always found this period of the year, pretty much every year for the past 10 years, is always choppy, difficult. It's very convoluted, that type of thing.
Yeah.
You always have a couple small days or spikes of clean trading action, but then the rest is very, very messy. Because of that lower liquidity, you're in this weird, like, mid period often all the time with central banks.
Yeah.
With jobs data, that kind of stuff. Yeah. So
I have a friend who is responsible for the Euro US dollar book for a large bank. Obviously, he has a lot of option positions, and he always tells me, I earn my money in Q1 and Q2 every year. Q3 and Q4 is just to defend what I've earned.
I agree. Yeah. Definitely. The other thing we did have, as far as the yen, there's been increasing pressure from the Japanese finance ministry and everything to actually, okay, look, we really need to get off this lower band, get out of this zero to negative interest rates kind of area. So it is interesting that we are seeing, I mean, that's always been a gradually elevating thing. A lot of time it's been a bit of a fake out, but it seems now they're kind of waiting to pull the trigger properly to announce that themselves at the same time as the US kicks off that next portion of rate cuts to actually get bang for their buck, to, shift the currency back, vocalize it enough that all the companies and everything are not caught off guard, and say, yeah, this is coming. So I wouldn't be surprised if, yes, we still do get that big tumble in dollar yen.
But I mean, traditionally, the Japanese have a very difficult time to apply change, to change their policies, and in general, when it comes to change, we've basically seen this game, let's be honest, since the mid-90s.
Yeah, I was about to say, is 25, 30 years enough, or do we need another 10? We need another decade to get through it.
Yeah. Like that time we've been in this low interest rate environment, and it's a good or a bad example, good example, if you want to say, like what deflation actually also can do. You basically bring a country to a still stand. And I still remember, like back in the 80s, when I was like 10 to 15 years old, and everybody was talking about Japan, like that's the next big thing. This is where all the growth is. Well, yeah, not really anymore for the past 25 years. Yeah,
what else? Read in tech, and then everyone else caught up. Basically.
Exactly. That's the thing.
Silicon Valley, we can play this game too, and then it went on from there. So.
Yeah, now China is playing the game, and it's getting ahead of everybody in the West,
right? Yeah,
and of course, still, especially in, I mean, you gotta give to the Americans, the US Americans, always there also. They kind of have this mentality of, okay, let's get stuff done, whereas we Germans, we are like, oh, everything is bad. We're always good at maintaining a bad status quo. And that is, I so much dislike this about my country.
I know. You guys, lacking that sort of...
We were great. Made in Germany was great 50 years ago.
Yeah. You're just riding the back of that still.
Yeah, really. Quick.
Yeah,
sorry, you wanted to say something.
I was just going to answer this. So, Wesley, look, I mean, definitely. Look, a lot of people take off holidays for this period, and it becomes one of those like self-fulfilling cycles where, because some do, more do, and then everyone does, because yes, you do get that sort of lull period. If you have the optionality and the choice, look, probably go on holiday most years this time of the year. Around that, sort of last week of July, coming to August, maybe you come back the first or second week of September, something like that. That's sort of your zone that is a bit not so great, put it that way. So you're probably your best bet to take time off there. Q4.
That was the reason why I was 2 weeks on holiday as well, but I wish...
Yeah, exactly. Case in point, Dirk was just off for 2 weeks as well. Yeah, so there you go. Yeah. And then Q4, because that's how things go. So you get this massive pump, Q1, Q2, stocks, everything running off, a lot of activity, all this kind of thing. It then dies off whilst people are waiting for that consolidation of the past 2 quarters. We've got more direction with data, with the Fed, with every other central bank around the world. You get, profit taking, that kind of stuff. People consolidate books, that sort of thing. Then you come closer towards December, and then you get a further Santa rally because things are now a bit better priced to actually jump into something, right? So Q3 is often a bit of a mess, put it that way.
Yeah.
So if you had to pick one period, that's probably the best period. So
absolutely. Yeah, I somebody or a couple of you were asking about BTC and Ethereum also earlier, so I would like to jump a little bit in this.
Yeah, definitely do that, because I got a chart piece to add to this once you...
Oh, okay, nice. Yeah. So when it comes to Bitcoin, if we look here at the bull market, basically is still intact. So let's start by this. Very simply, we have a series of higher lows. So in order to really break this, we would need to fall basically to 96,000 US dollars to get an indication at least that this bull market is over. However, one thing I'm a little bit concerned about is I've always said, where is it? This one here. I've talked about this a lot the past years, that normally a bull market ends when the price of Bitcoin breaks out of a logarithmic regression, the green bands, and somewhere tops here at the red bands. if history repeats itself, we don't have much time for this anymore to happen, because it should happen until, let's say, latest mid-November. That's not a lot of time anymore. Now, Bitcoin, of course, can move very fast. We've seen that over and over again. But in order to do the same stuff we've seen in the last bull markets, I mean, growing from 111,500 to, if we would touch the upper or the lower red band now, we would talk about 250K. That's a lot. Yeah, it's not impossible to do that in, what is that, September, October, November, let's say like 2.5 months. But I wonder what the catalyst for that would have to be. The other model, I always like to quote the Bitcoin power law model by Giovanni Santostasi, Italian physicist, says mid of January, end of January 2026, we're going to top out around 200,000 US dollars. I don't know if we really are, or if the decline in alpha, the alpha decay, is already higher than we anticipate it. Alpha decay meaning we cannot expect the growth rates anymore of 10x or 100x. Obviously, if you are an asset that has a market cap of, let's say, 10 million US dollars, it's easier to get to 100 million US dollars to do the 10x than going from, what are we, roughly at 2 trillion US dollars to 20 trillion US dollars, which would put us into the vicinity of a market cap of gold, for example, then the 10x. I don't say it's impossible. I doubted myself this year a little bit, because I've been starting to sell Bitcoin every month since January, but maybe my notion was correct there. I know everybody's very, very excited right now because of what we're seeing here on Ethereum. So finally, the altcoin season seems to be there, after every altcoin nerd has been talking about for the past 2 years. It's finally there.
That's a long time.
I mean, it's true. For me, it's guys, I'm not investing in any altcoins because my opinion is eventually, versus Bitcoin, everything is going to zero. And just one look at this chart here, Ethereum versus Bitcoin, I think highlights this. That's spectacular, what we've seen here. But the overall journey, especially since Ethereum switched to proof of stake from proof of work, is that it has lost value versus Bitcoin. Now, if you are speculating with altcoins, I don't want to keep you from this. Solana, for example, still has like some catching up to do, in my opinion. However, be aware that jumping at this point onto the train, could lead to, doesn't have to, but could lead to something we've seen 4 years ago in 2022, where you basically buy at the top and then you go through a long period of tears where you basically lose money. I did a video, I talked about this on my own channel, Good Bad Bitcoin, here on YouTube. I think I also posted something about this on ABL back then. If you compare the performance of altcoins over a period of 4 years versus Bitcoin, 98% of the altcoins underperform Bitcoin. Plus, you have, apart from Bitcoin, is 75% chance of losing money, and a 35% chance of those 75% of losing more than 90%. So if you give me like the choice of, well, Dirk, you can invest into the top 50 altcoins, but the altcoins, there's a 98% chance that they are going to underperform Bitcoin. What am I going to choose for the next 4 years? Well, obviously Bitcoin. Why should I risk that? The only altcoins that outperformed Bitcoin, I think, were Binance Coin, Ripple, and Solana, if I'm not mistaken. Even Ethereum had a negative performance over the past 4 years. Not now anymore, but when I did this analysis, we were still trading down here at 2,500 US dollars. So please be careful. I see that every 4 years that everybody suddenly gets crazy and overexcited about altcoins and basically get those laser eyes, and we're only going up and everybody's getting rich and turning $500 into $1 million or 500 million US dollars. And that's almost always the end of the way for this cycle. So whether you believe like the bull market top was in already or it's coming somewhere between November and January, there is not much time left. And I'm very much believe that for large parts of 2026, we are going through a river of tears again as crypto investors.
Yep. Then you'll basically be holding just like everyone else with Ethereum for the past 2 years or so,
and I mean, you know how it is in crypto. In crypto, it's like it's so emotional. People get so attached and married to the altcoins. Yeah, this is going to be the next big project. This one is involved, and that guy is involved. And you boomer, you're only holding Bitcoin. So boring. You only made like, what did I do? Like 7x in 2.5 years. So boring. I want to make 100x,
not 80x. Yeah. What's going on? Yeah. God. Yeah.
Have fun. Stay
yeah, exactly. Yeah. Never get married to a position. That's
that's the thing.
Don't ever be
something we see in crypto all the time.
Yeah, and stocks in particular as well, because often stocks too. But at least crypto gives you that quicker indication whether you're right or wrong, because it does have that high beta.
Yeah, that with stocks to my friend who has been investing in Tesla already for many years.
Yeah.
Of course, by great margin, but he basically has a shrine at home worshipping Elon Musk.
And then they buy at the wrong time, thinking we're running right on.
Yeah.
And then they're holding it for 5 years and still going like, no, it's all good, man. It's like, come on. Right?
You had something to say about Bitcoin. I'm really nosy.
Oh, yeah. So, okay, so Bitcoin, I'll jump into my chart. Hang on. Where am I? Here. So this was something interesting I was looking at. So as far as the PMIs, so we had the PMIs last week. I tried to bring it up here. For some reason, my FX book is not showing the actual things for PMIs. I brought it up on this guy here. It's not as clear to see, but where are we? PMIs are here. So we're looking at about 49.5, and this is something I've been talking with Mike on ABL a number of times, and I think we spoke about it too at one point on the ABL pod. My expectation that PMIs will start increasing probably more rapidly than the market is currently pricing. So the next 6 to 12 months, market pricing is sort of 52 to 53 PMI. And as we've seen, this was the flash PMIs, but already starting to print significantly outside of market forecasts. So I've got this added question over this next period that, given that, this is sort of the beta sensitivity to the PMIs increasing. And just like you were talking about, are we going to get that upcycle in Bitcoin? Or have we got too much alpha decay, it's not coming through, or it might be delayed, or we've got a new regime formulating. So this is, you can see as far as the sensitivity in terms of beta to the PMIs, Bitcoin is out and out away, has been in the past at least, right? More sensitive to that. So we could get that further impulse through that stuff coming through to have at least an extra effect on Bitcoin and actually start driving us higher. If you get that double bubble of PMIs and things getting better, whilst rates are still coming off, and assuming jobs then still hold relatively all right, the inflation kick through isn't too bad. You might get that perfect scenario for Bitcoin to absolutely fly.
Do you have these numbers also for example, the S&P 500 and NASDAQ? Because I would assume the beta must be pretty much the same.
Yeah, it would be. Yeah, it would be pretty similar, just with a similar, not quite as much sensitivity, obviously, as far as the whole thing. But yes, they would. Yeah, follow the same, different multiple, but same linear. If you put it on a log scale, they'd be the same. Put it that way.
Yeah. I mean, the correlation between those and Bitcoin, I think, is like 0.93 or 0.9, something like this. So in terms of
total return, obviously Bitcoin's going to, we're not seeing the S&P go up another 100% from here, right? But
yeah.
but as far as
Of course,
correlation,
yeah.
yes, not total return, but correlation, yeah.
It's interesting to see gold also, like basically being in nowhere land there as a reaction.
Exactly. I mean, the other point with this is that this downdraft period, this trough for PMIs, I believe is the longest trough we've ever had for PMIs in the history of recording. Now, obviously, the economy has changed. Manufacturing is a different kind of piece of the economy. We're not so heavily based on those hard industries anymore these days, but still so I would say it's become less of a core indicator than it used to be. And a lot of people, a lot of macroeconomists, all that kind of stuff, still very much put in that core basket. I would say it has much less weighting, but we've been in such a trough for so long. And even arguably with the Trump administration trying to do what they're doing for manufacturing, I would also say it's odd that we haven't seen it fully pick up, and that seems mostly implied by that rates picture suppressing things at the moment still, with the forefront of potential tariff impacts. So if these things get settled, plus the rates come down, they should give confidence to these businesses to accelerate this stuff, especially with the positivity of the Trump administration and willing to back this type of stuff, because that's obviously their political message, I guess, right now, or story that they're trying to pitch. Anyway, so I just thought it was an interesting thing to consider or to look at, and particularly as far as that Bitcoin cycle with that. So
definitely very interesting. Yeah. I mean, it kind of like also, while you were reloading earlier, I was talking about some of the predictions that I made also a couple of weeks ago. And I have to find this again. I think it's here, which have been becoming true already. I had this target of 6,500 from, I think I put it in like 1.5 months ago for the S&P 500. Extended target of 7,000. This one, I don't know, if we're still going to see that. If I look at what you just showed me, maybe that is the catalyst that could drive us there, together with interest rate cuts, obviously. Same in the NASDAQ 500, first target 23,900. We've reached already my extended target, which is the 1.61 Fibonacci extension from the correction move when we had this V-shaped recovery, would be 26,000. One thing I just want to look at right now is, do we have like a lot of, I want to compare something. I always have difficulties finding a good S&P 500 here. SPX.
Yeah, I always think the same on TradingView. Hey,
I'm always looking for all under, but SP 500, whatever it's named here.
Yeah, I normally go to SP 500 and yeah.
That's Vantage. I don't have a lot. Wait, but we can do it in a different style. Let's just take this one. SPX 500U it is. Okay. SPX 500U. Here we go. This one. So
we're running you guys some of the charts as well in a sec. We're pretty much consolidating sitting here right now. So give it half a minute and then we'll give you a rehash soon. Don't worry. Yeah, sorry. Continue. So,
yeah, no worries.
Just saw some asking about it. So
I'm just wondering. Here's the thing. Like, no, that's not really a correlation. But normally when we see interest rates coming down, the first reaction of the stock markets for a couple of weeks is also that it tends to go down. There are some exceptions for that, where that is delayed, especially, of course, the COVID times. But also, I mean, maybe that was the reaction also when when in August, when we lowered the interest rates, shortly, a couple of weeks after this, we saw this decline in the stock markets. Obviously, because there's a reason that the Fed is lowering interest rates. It could be a special case now, of course, because they say, well, inflation has come down, job market is stable, economy is recovering. We We don't have any reasons, to keep the interest rates at this high level anymore. But I would be a little bit cautious because, of course, like on the day of that decision, and maybe the day after this, the markets are always celebrating this. Ooh, everything is going up, but take it with a grain of salt. It potentially could lead with a little bit of a delayed effect that we see a correction in the markets, which also suits like the low volatility in the VIX we are seeing at the moment. No.
My call has been for markets to get a retrace through this period. I thought we would have actually started seeing it more properly and heavily.
Yeah.
And we haven't just yet. It seems like we were potentially on the way for that before Jerome Powell on the Friday. It's like, the NAS got obliterated through that week. All the tech players like Nvidia down, Tesla down, Facebook down, Apple down, Amazon down. Literally, the whole boat just slaughtered. And if Jerome didn't come out and speak the way he did, we would have had carnage, right? So That was definitely what I've voiced over the past quarter. Was looking for that downdraft. We've had very, very much optimism priced into markets, that kind of thing. They're pricing in a very good outlook. I think there is a slight underpricing that the good outlook could actually be a bit better. But per current inflation knowledge, as far as what you can be reliably or have high level certainty on, we're probably still a little bit over front running that a touch. So I wouldn't be surprised to see that come down, go back through that midpoint, come into a bit more of a concern point, and then rally from there. And you get that Santa rally, Fed cuts, Jerome Powell being out. Now we have direction. Cool, right?
There's also like still, which kind of bugs me, this fact that Hershire, what are they called? From Warren Buffett, the company Berkshire Hathaway, that way around, that they are sitting on in percentage the largest amount of cash, like in percentage in comparison to the whole asset under management or the whole equity. It's not really assets under management for them, of course, in their history. So this could either be that Warren Buffett is seeing something we are not seeing. They say everything is so overvalued. I'm sitting on cash now. I'm going to invest in short-term treasury bonds because I get maybe 3 or 4% in those. The risk, the additional risk investing in stocks for maybe 1, 2, 3% more per year is not worth it at the moment. Or it really, like some are speculated, could stem also from that there is an internal handover slowly from Warren Buffett to his, what is it called in English? Successors, no? It's not predecessor, successor, no? And slowly, so he kind of, he's kind of making his share available in a state that the new person in charge has liquidity to invest into and doesn't need to defend all decisions of Warren Buffett anymore.
Exactly. I think it's both, because obviously Charlie passed away. I think he also would have seen that, that's the current market positioning. Since Charlie passed away, if Charlie was still around, I would expect that he would have also hung around a bit longer. But then that sort of brought that timeline up probably a year or two. I think he's also watched Ray Dalio step down from Bridgewater, right? And there definitely was a bit of a churn period between that happening, because they did still have his old portfolio, his old construction, the way they handle the firm, investment decisions, that kind of stuff, and tried to have both sort of going on at once and amalgamating it into the next session, which now they seem to have sorted that, and they've done well through this past period. But they were getting blitzed between that. So I think he's wanted to make it as clean slate. Look, I'm out. I did my thing. It's now up to you.
Yeah, maybe it is.
I don't have any opinion. You guys are the new crew. You guys understand tech. I know I don't understand tech. That's why I never invested in it. If I had, I would have done even better than I did, but I didn't know it.
Bitcoin is red poison squared.
Yeah, exactly. Yeah. So I think that's.
Ray Dalio is kind of a special case as well, no? He's also become kind of a perma bear, in my opinion, who has been saying now for the past 10 years, the way our economic system and the inequality of wealth, the wealth distribution of the world is not sustainable anymore. We are going to see riots. We are going to see a revolution kind of thing, and which is surprising. It's something probably he never would have said when he was still in charge of things.
I think they were always looking for it and priced very well, but I think he is a bit wrong on that. I think there is just a different tolerance for certain things, and almost like people somewhat expect it. It's the same way as a trade. Like some people kind of expect that there will be some chaos. Like stuff is going on, it's all a bit chaotic. So hence, when something's expected, it doesn't fully blow out the market, right? Right. And so I think that's the thing, even from a social aspect, which is why we don't quite go to that full regime of absolute chaos, because people are like, yeah, no doubt everything is going a bit wild. Have you been living under a rock? Yeah, obviously. So people kind of they reset to a new baseline, a hedonic standpoint or whatever, and they're just like, yeah, this is just how it is. And they kind of chill out. So I think he has been a bit wrong on some of that stuff. I think he's right in acknowledging that there is that risk on the edge, which obviously is kind of where he often operates with that and trying to take advantage from those very fringe risk type aspects, almost like a Nassim Taleb type thing, want to take advantage of those very fringe outcomes, and then they really accelerate there.
I mean, that's the thing, those fringe outcomes, they're notoriously hard to predict. It's like it's. I mean, and all probably
that all comes down to the pricing, how you structure a trade. Right?
Exactly.
What he's saying, he can be completely wrong about what he's saying. Yeah. But when the smallest thing does pop off, it cleans up. Yeah. Because I would say the same thing about Nassim Taleb, where he's constantly like, if you listen to him, it's basically like, don't invest, don't trade, don't do anything, don't.
Just because he was one time correct with a fringe, with a fringe occurrence. And it's like in mathematics, you would probably say like it's entropy, If it's low entropy, it's kind of good to predict, it's reliable to predict. But something like saying, we're in the summer, tomorrow in Berlin, it's going to be 23 degrees centigrade with a 90% chance. That's a low entropy event. Whereas a high entropy event would be something, tomorrow is going to be 42 degrees and rain with 100% chance or with 5% chance. That's high entropy. And I get it that people are always drawn to those high entropy events, which basically are black swans, or can be also white swans, obviously. For example, in 2 days, if NVIDIA, of course, is going to report like triple the earnings that everybody estimated, that would be also a high entropy event, a so-called white swan in this case. However, those are not tradable, in my opinion. You can protect yourself with stops or with options positions if you are long-term in stocks investing against those, but do not trade them. It's really like trying to forecast, is the next NFP outcome going to be higher or lower than expected? It's a game of dice by the end of the day. It's not tradable, in my opinion.
Precisely, and I think we're in a new environment where you get a lot of both going on. A lot of the time in the past, you have something that affects every market, and that's the current regime. I think you've got pockets where they're in the doldrums, it's doom and gloom, and then other places are going really well. And you've got this mixed bag, mixed basket, right? Because now the whole, particularly the bond market, has completely shifted as far as the structure and everything. We had 30 years of just one-way train, and that got disrupted after COVID, and now we're trying to resettle all the other markets after the low to no financing costs. And so you've got a bit of a digestion, a bit of some market, like stomach rumbles before it settles out. And so I think we're still working through that right now. But what do you think about this stuff from what I was saying as well? What do you always think about that interpretation when you see markets moving a certain way just before news?
I mean,
it's always interesting, isn't it?
Yeah, it's interesting, and you cannot completely make sure that information is not out there already for some insiders. I know where like if you go onto the dark web, I've heard about that. I've never researched that myself. Like groups,
I have.
that
It's a great place for a lot of stuff.
that
Yeah.
get like their hands on earning reports of companies prematurely. So let's say like if you knew already how are the numbers of Nvidia going to be in 2 days, of course you could position yourself already accordingly. When it comes to Paul, I don't know. I assume that's very difficult. How do you want to get your hands on his transcript before he reads it? I would assume, I mean, I don't know how the process is, if he's like sitting down and writing it all by himself, or if he sketches out his ideas, what he wants to say, and has a writer doing that. That potentially could be a leak. But I'm sure there are like Chinese walls and other security measures also installed, but you never know. It could, of course, be nowadays also something that goes into algorithmic predicting. So basically, what large language models are doing, saying if somebody begins a sentence like this, there's a 70% chance that the sentence is going to end like this. And maybe if Paul says something like this, then suddenly the AI, the language model registered, oh, that's probably means there's a high certainty of confidence that he's going to hint that rates are going to get lowered soon in September. That could be the case. I don't know. If that is the case, it's like really high and sophisticated stuff. I don't know. What's your opinion about that? It seems like you've been on the dark web more than I have been.
Yeah.
Because I've never been.
Yeah. So as far as the dark web stuff, COVID one was one of the big ones where all those videos were popping up in China. This was September back in 2019, long before we had any of this shit, ages before. There was all this stuff going on, and I was kind of like, okay, this is an actual thing. This is kicking on. I remember talking to some of my friends who have long-term holdings, that kind of stuff, asking me about whatever, should I buy this? I'm like, no, don't buy anything. I'll show you these videos, blah blah. And they're like, oh yeah, as if though we're going to get like some virus going. If that was a thing, would have heard about it already. What are you talking about? And then right after that happened, they're like, dude, you're on it. I was like, yeah, I didn't just come up with this. I showed you actual hard evidence. You can find this stuff. Yeah. But anyway, as far as when you see this stuff, you're not always going to have that interpretation or that raw data or videos or some kind of evidence to look at you. A lot of it's going to be insiders that have people in the room giving a little nudge and a couple of text messages, or they're just watching body language or that kind of stuff, right? Now, the other thing as well, sometimes when you run up just before something, it's because everyone knows these data points are coming down the line. So there's sometimes front running for certain things. So once you get right up to the event, people go, okay, I've hedged it out long prior. I've made up a decent portion with like options trades, which have now approached those levels. You take that, clear out those hedges, that covering, that kind of issue. That, or say depending where you're positioned, you might wait until just before the event to cover, just in case, right? Because something has been sort of somewhat priced in. So through that week, you can see downdraft, 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 downdraft. We came down to relative support levels through here that would then be reasonable to look to hedge out, say something, this is an example on the euro. And this is what I covered on Friday on ABL. Obviously, we don't do a 5ers stream on Friday, but we do it on ABL and in the 5ers Discord. I held the session there that this was starting to get priced in. So on the point that Jerome Powell said, okay, they are being more neutral, which in this instance would have been a hawkish inference. It's not full hawkish, but they're just sort of neutral. Your lower points to target would have been about 115.50. On the inference that he does come in higher and surprise the market after it's been fully priced in, this is your first point of call, second point of call, third point of call, and we stormed right through there, right? So that's when you get some kind of outcome where you've got roughly asymmetric odds to the upside rather than the downside on making the call, because the prior week's price action has already priced in a lot of the expectations. Now, those expectations come in wrong, you write back to neutral point. And that's pretty much all we did. We really just came back to the neutral point of putting rate cuts back on the card per where we started the week. So technically, we've not actually made any excess gains. We're just back to sort of where we were. Right. So a lot of the time, if you're a fund or something like that, you've got large size, you're going to move the market, that kind of stuff. Running that up, depending on their portfolio position, it might be fair for them to start adjusting according to that. And that's basically what we saw. So like Dirk said, you always got to take the context with the prior knowledge, the prior information, the priors of everything coming into it. Has it been priced into the market? Is it still up for grabs? Or is it something where someone's got leaked data, leaked info? They've got someone working at one of the, the BLS or something that wants some extra money on the side and leaks data. That happens all the time, right? They have all sorts of checks to try and stop that, but you know that someone's going to do it, right? And certain firms are going to be privy to that and front run that.
Yeah, but it really makes you wonder. I remember like 10 years ago, it was a viable trading strategy that you would, for example, during economic decisions or releases, have your VPS as close as possible to the news and server and the exchange server. So you would be one of the first ones who could react with positioning if the news is like vastly different from what was expected. And I know people who made millions with that because they were able to execute their trades in 1 millisecond when the average, even institutionals back then, needed like 1 to 200 milliseconds just because of a physical distance. I mean, imagine that, you know?
Yeah, it's a speed of light. You're going down to physics now.
Yeah,
now data can travel through a fiber optic.
It's like I have one project, for example, now where I worked on a mathematical model for short-term price prediction on Bitcoin, for example, for a very long time, and I'm right now gathering data to kind of prove or disprove my hypothesis I have with this model. And I need very granular tick data on Bitcoin. So I'm siphoning this data off of Binance. 1 day of data is around 30 gigabyte. Just 1 day of tick and order book data.
Really?
It's insane, really, to handle this type of data. But this data is on a nanosecond level. So it's passed by the not millisecond, nanosecond now. This is where we've gotten already now. So I wouldn't be surprised, to see somebody out there, maybe some hedge funds, somebody with a large budget in developing things, or even some private investors that are just really, really good with all this AI stuff that are able to use these language models to predict, like, sentence starts like this. That means there's a 75% chance the sentence is going to end like this. And if you have a certain degree of confidence, like, for example, 75%, then they enter the trade before the sentence ends. And maybe this is why you see moves like this.
Yeah.
And obviously it's technology that's not out there. Yeah, it's a mathematical, like everything,
exactly.
It's mathematical model, always entropy. Yeah. And I wouldn't be surprised, to that once that alpha from a model like this is decaying, also something like this suddenly becoming available to retail investors. It always becomes available to retail investors.
Now you got AI, which makes it much easier. Yeah. Firms that couldn't spend the massive amounts of money to build that themselves can now do it very cheaply, and then it arbitrages that out, and it doesn't have the same effect. Right?
I mean, even something like what I told just now, you could also go to a company, buy that data. You would pay around $1,000 per month to get this data. Yeah. But you can also download it yourself or start collecting it directly through an open WebSocket API of Binance. Of course, that takes some time to collect it, but that way you save your money. This is something that was just not possible even 4 or 5 years ago. That was not possible. You would have gone down the way of paying a company $1,000 minimum per month per exchange to get that data.
Yeah, precisely. Give me a sec. I might hand over to you. I just got to pop to the bathroom, so I'll come back.
Sure. All right, guys. So what's next on the menu? I saw somebody asking about gold. We covered gold during the early session already of this. Both said gold pretty much stuck in a pattern of consolidation. So right now, if I would like to go long gold, I would wait here until we touch the yellow line, which is currently at around 3,326, or the red line 3,266. Especially the red line here from the bull market support bands lines up very nicely with this natural support we have on gold. So this is where I would consider swing trade longs at the moment, swing trade shorts up here at the resistance, which is between 3,445 and 3,450. In between that, I'm not really looking for positioning, at least when it comes to swing trading, because it really could go in both directions. It's a typical market where it's more wise to stay at the sidelines and not force yourself into positions. It's a low volatility environment. These low volatility environments are really not very good for trading, and it doesn't really matter if you're a contrarian trader or if you are somebody following the trend. So you really want to be careful. I said it earlier, on my scalping system I had like 10-12 losers in a row because I didn't, for gold at least, apply this percentage ATR filter that I use for Bitcoin to stop trading when the volatility falls below a certain threshold. Difficult market at the moment. I hope by the end of the day, not by the end of it today, but by the end of the week, especially after Nvidia has broadcasted their earnings report, that we're going to see a little bit of pickup in volatility again. What else do we have here? Gold, yeah, we talked about, really not that much to see. Yeah, and we said it earlier. I see some comments on that. Where C-Trader is coming to the 5ers. So in the future, I think even maybe starting today, I'm not so sure about when the rollout is actually going to happen. You are able to use C-Trader instead of MetaTrader 5. C-Trader and MetaTrader 5, of course, both are not brokers. They're just the software, you can use to execute your trades. I personally haven't used C-Trader yet. I have heard a lot of good things about it. Supposedly much more flexible than anything you can do with MetaTrader 5. So you might want to go later to your account page, to the 5ers Hub, and check it out if it's already available for download, and try it out. LJ said earlier, it takes a little bit of a learning curve also to get into it. But I mean, this is true for everything in trading. And probably the learning curve for MetaTrader 5 was even a little bit higher than it will be for C-Trader. But I'm sure within a couple of days you'll be able to use that as well. If I have some time later this week, I'm going to for sure also check it out and see maybe if I can port some of the stuff that I do on MetaTrader currently to C-Trader. Average price, yeah, that is something I'm really missing on MT5 as well, that you see like, oh, this is my average entry if you have multiple positions. If that is possible on C-Trader, that makes things, of course, much easier, right? Okay, what else can we look at? We only have like 20 minutes left. We looked at the SP 500, we looked at NASDAQ, some of you trading the DAX, which is holding up a little bit better at the moment in comparison to other, especially the US indices. We talked about Bitcoin, we talked about Ethereum. What else is there to talk about? Euro dollar, we talked about actually also already, because we talked about the Dixie. Anything else you are looking at today, LJ?
Not really. I mean, today's tough. Like, we got a slow day today, right? I mean, we've already tapped in on this. It's consolidation after the big moves on the Friday. That's pretty normal. It's pretty bog standard. You need that digestation, if I can say that properly, from the prior week, and sort of traders waiting for a bit of confirmation that yes, the aggregate market is agreeing on those prior moves and the general sentiment, right? So we do generally seem to have that. We've got a slight pullback through today as well. Sensible. We're still very much in that higher range. So from here, at some point, if we don't get a deeper retracement or pullback, you would then assume traders go, okay, yep, we've agreed on this as far as the market, and then possibly get a run higher. So that's pretty much what I'm looking for now. I expect today, even going to New York, to be further consolidation, and probably Tuesday, Wednesday, we start to get more of a directive move one way or the other, right? So outside of any other Fed commentary that might come through today, or could even be always, we have that side portion from Trump of him saying something. He tried to fire off a few shots at Powell, obviously, right after he spoke. Which, funny enough, he was like, "Don't even bother cutting now. You're too late. You're out. All right, just you might as well just leave it. You missed the boat." So, see what happens there. The other portions with Trump commenting on that stuff, he has started to take some direct attacks at some of the other Fed speakers. So just like Cook last week as well. Outside of that, I think, yeah, it's very technical, consolidatory day. Best bet is probably playing those techs within the type ranges we have carved out from the Asia lows, and then also considering where we opened and the high from Friday into late New York.
Mm-hmm.
Right?
Will you excuse me for a little while? I need to go to the place you
just
went as well.
Yeah. No problem at all. I'll bring up my chart for you guys. What else have we not looked at? We can have a look at the option stuff that I do look at occasionally for the NASDAQ most days. So 23,489 for today is the expected 0DT options position for today. Let's go over to NAS. From what I was looking at before, I didn't have a clear trade input per the options pricing for today. For that same reason, we are very much consolidating. Let's get back into this. There's something you guys can see. So, God, that line is way too wonky. My freehand drawing there, not good enough. That's a bit better. Picasso, guys, Picasso. So this is basically the trend line through here. I could put an actual trend line if you guys are actually that anchoring on it. But we're pretty much right in that point, as you can see. So this is the general cluster of support through here. So from this band here, we maybe just draw this guy. So these two wicks, which is right what we've come and tapped into. Now, as far as that options pricing, if we go back there, you can see we're at 489 today for the expected price coming towards New York. 489 does have a slight lift up here, so you could look to give this a bit of retrace. You're pretty much buying off the support here. So this is a reasonable trade idea. But further extension beyond that, as far as today, I would be unsurprised. I would be very surprised. Just like Dirk was talking about, we've got NVIDIA earnings and things coming through. So that is very much going to move the market very heavily. Just like last week, NVIDIA was what spurred the extra kickoff and the dips in the NASDAQ. And then that goes and bleeds over to all the other major firms, tech firms, Apple, Amazon, Facebook, the whole bit, right? So until we've got that sort of sorted, I would be cautious as far as large runs on the NAS or any of the US indices for the time being. You'll see that impulsive drive once we do have that coming through. But where we are positioned as far as today, since there's not much as far as great available trades, we are in that consolidative type scenario, like I was talking about. Some kind of trade off of this level, right by support. You've got a clear, defined area that you punch through here. That's going to be a break. You could definitely run longs off that today. So will we get that high? Probably not. I'd be looking at, first point of call up here and then towards top of late Asia. Probably what I'd be looking at. So I go here, and then you've got like T3 somewhere up there. So there'll be 3, target 2, and target 1. So roughly 2, 3, 4, 6, 9. The options were at 8, 9, if you guys recall. So a slight tap up towards those highs there, about 23,500. And then you've got this higher area, 23,530, we'd call it, probably just a bit below that wick there. So I wouldn't expect us to go and challenge highs and keep running, at least for today. So Dinesh asking in EU sells, what do I think? EU sells are tough. I wasn't this long earlier before. I'm not currently long or short EU right now. I would consider jumping into some kind of long at some point. Would I consider getting further short from here? Probably not, since we've had this sort of tackle around this area. I'd rather buy support. So it depends what area that you're short from. Because ideally, I'm looking for a retrace to 116.80 before then getting long and coming into tomorrow, even targeting somewhere up towards the highs. So I'd have something probably like that looking for tomorrow. Now, I'm not sure that we'll actually punch that far today. I think this could actually be the point where we've tapped slightly out of Asia's low and this dip low that we had coming into early London. And from here, we just build. So this area here becomes like the fake out kind of zone and we actually drive on. So what area are you short from?
I can kind of see where Dinesh is coming from there, honestly speaking. If I find my screen, here's my screen. And I mean, if you just, maybe you're coming from that kind of on the daily chart, where I can see why that seems to be attractive to think about shorting euro dollar. But then again, we are very close here to the 8 weeks moving average. That is always an area where price doesn't just pierce through it. It has trouble. So you might want to be careful. Of course, if we go through that, there is potential to go all the way down to 115.20, not today. So don't, but throughout the week. However, I can as well see what LJ just said, that throughout the week we might be trending a bit higher on euro dollar. That would be my favorable scenario as well. I'm not a big fan anyway of just drawing a trend line on a daily chart and then trading off that. It needs to be more confluence added to that.
Exactly.
Maybe this is where you are coming from, Dinesh. Maybe you want to share with us like where your entry is and what your thoughts were about the position, so we just don't have to just assume things which maybe are not correct at all. Yeah, euro is bullish fundamentally. I don't really think like euro necessarily is bullish. I think it's more that the US dollar is bearish.
Yeah. And arguably, though, euro is bullish to a degree as far as, the ECB's got one rate cut left.
Yeah, true. Yeah, that's that.
And then they that, right? And then so the differential per now, the US kicking on. Yeah, so you do get that somewhat double bubble, but the majority, like 66-70% of it is going to come from the USD side.
By the way, is something I haven't seen in my lifetime as well, that the EU is front running the USA when it comes to interest rate decisions.
Yeah. No, yeah. Normally the ECB is always late playing second fiddle to the US.
Exactly that. Yeah.
So yeah, I wouldn't be surprised if ultimately we do end up getting that eventual push towards the 120 on euro dollar. I think it would just be later and a bit slower than market was originally looking at.
Are you looking at Swiss yen? Because it's like one pair. I'm not looking at all at
Swiss yen.
I notoriously like to not trade with Swissy at all.
Yeah, same, to be honest. Very, very rarely. I don't like how much the central bank gets involved.
That's the thing. That's the thing.
Yeah. I mean, right now, I would say yes, Swiss yen higher. So on that point of the Swiss National Bank getting involved, they have voiced that they don't like the amount of strength that has been at the Swiss, and they have said they are willing and looking to, not just willing, they're waiting for the exact point to intervene and push that back the other way. Because they've tried shifting rates, they're right down at zero again. It's not working. the Swiss end up strengthening after they drop rates further. So you can see they're getting very frustrated. Now, it's going to be one of those timing things because obviously anytime a central bank or anyone, even though they're massive entities, even they themselves can't just dictate or move currency markets, right?
Yeah, and especially when it comes to Switzerland, we've seen that. I remember 2015 when we had this floor price towards the euro of 120, and they defended it, and then one day they just said, okay, we are not going to use that as a floor anymore, and euro Swiss went really in like 2 seconds from 120 to 0.93. I remember that so well because the gentleman I was working for back then, who was a currency options trader, lost on that day like 50 million euro just because of that move. And I was sitting in front of my screen and thinking like, oh, Jesus Christ, you earned for this guy like 2 million this year, and now he just flushed 50 million away. It's going to be an interesting discussion
when
it comes to your bonus.
Getting paid, or exactly.
And it ended up with me losing my job because the argument there was like, oh, the year was so bad, I cannot afford you anymore. It's like, no, you cannot afford yourself anymore. That's the problem.
God, dude. Absolute carnage. So right now, okay, any Swiss pairs, generally I would have that bent towards up, like strength. Weakness on the Swiss. So strength for any other cross pair. Overall, with having that backdrop, I would be worried getting into certain things against that. There seems to be slight indications when I've looked at some of the other Swiss pairs, whether it's Euro Swiss, Dollar Swiss, that kind of stuff, where at certain key points we've defended certain areas despite other political stuff or comments going on, or the yen falling, or other risk-off things where the Swiss has unnaturally sort of held certain levels and started to pick up. So long as you're not trying to go against that, you're probably doing okay. Now, the Swiss yen, I don't like this cross pair at all. They are too closely homogeneous as far as characteristics. Same with both their interest rate differentials. They're very susceptible to those other portions, and then they can just blow one way the other. I don't like the franc yen. Just looking at this purely technically, where we are not taking into consideration any of those pieces, this does look bullish. You can see we've had this break here of this head, fallen back down, come right up again today. I would say we are heading back for this cluster of price up through here, right? So you've got the R1 just here, as you can see. That'll be your first point of call, and then potentially a further drive up to 185 up there. But I just don't like this pair at all, personally.
Yeah, it is. I agree with you. It's like I just looked at a very long-term Swiss dollar Swiss chart also, which is kind of fascinating. The weekly chart since 2003. It's basically just the Swiss franc going strong against the US dollar more and more and more. We came all the way from 160 down to where we now 180, 0.81 and a half. 0.80 actually this right now, 0.8030. And these are characteristic of a currency pair on asset, where something more is going on behind the scenes that I cannot really grasp. So political stuff. I mean, I get, of course, that the Swiss francs in recent time, ever since Trump has become president, has kind of become the world's risk-off currency. Let me put it like this. If you are like a large pension fund, institutional investors, you might think like, oh my God, my US dollar exposure is already so high. What if that orange gentleman, starts really going crazy and destroys the economy over there? So I might buy some Swiss treasury bills, even though, like LJ just said, you're not going to have any return on investment on those probably. But it's the same like we saw for a long period of time in euro treasury bills, where especially where you had like negative return on investment. So you basically pay interest rate to buy those treasury bills from euro, just because
but they're forced to, right?
Security,
Yeah.
And And so kind of the same scenario we are seeing in Switzerland right now. It's normally, I mean, if you look like at a long-term chart, for example, of euro dollar, and I know this has nothing to do with the daily activities that we do here trading wise, at the 5ers with scalping or even swing trading, but this is more of a natural move where you have, swings to the upside, downside, and then somewhat it always kind of returns to market equilibrium in the middle. So in many cases, it looks like an RSI, like a momentum indicator. This is a more of a natural currency curve you're going to see. If you look at the Dixie, for example, you're kind of seeing the same pattern. If we have that to the downside, like we have, for example, in dollar Swiss, like where it's really over decades just into one direction, that makes me a bit wary. On the opposite, you see something like this, for example, if you look at the Turkish lira long term, which is like the total opposite. But there's also like, why in the world, if I look at this chart, why should I short it? Why should I sell dollar Turkish lira? There's like no reason for that long term. I very much bet against the market odds, and for not as severe, of course, because there are in between obviously large up and downs also here in the Swiss francs where there's the US dollar, but the momentum still is more to the downside. So I would be very careful with long positioning there. It's against the market trend, long-term market trend.
Yeah, it's concerning when, the Swiss had the tariffs put against them.
Yeah.
And the Swiss still,
yeah. Right. That's the point. Yeah. Exactly.
And they're reducing rates and they're doing it. And this is why I'm also very concerned with the Swiss National Bank coming in heavy at some point and having to smash this out because nothing is working for them, right? So,
and probably amongst the next to Japan, like one of those countries still depending very much on central bank intervention. We don't see that often anymore. You don't see that with the ECB. You don't see usually that with the Fed, the direct intervention. I'm not talking about interest rate. I'm really talking about, buying or selling their own currency, to make it weaker or stronger. You don't see that very often anymore nowadays. And it's such a small country, actually, which is amazing, no?
I also found out the other day they've got all the underground bunkers and everything, right? They've redone from World War II.
Every house has like a bunker,
yeah. They have them from a distance, so yeah.
But it's the same in Singapore. When I was living there, you have a small apartment, but you still have a bunker where you can go if I don't know. Whatever happens. Natural disasters, they don't have those. It's too shallow, the water, no earthquakes. I don't know, the Japanese invading. It's like...
But for Switzerland, like they've got enough to house the entire plus another 1.5 mil odd of the entire country's population underground.
It's crazy.
Like, that's impressive, yeah. That's the place to be apparently. If everything kicks off. So it's that or Australia, right? We're way out here. It's like, all right.
Yeah. Another one of those currencies, by the way, where I'm always extremely careful to touch it is like the South African rand. It's very easy to get burned on this, to the upside and downside, because sometimes you have those crazy moves suddenly where the rand gets stronger. It's really, really, for me, very hard to jump. Numerous times I've tried trading this with options, and numerous times I wished I hadn't done this because I lost a lot of money with it. Because if it starts moving, you cannot be fast enough to hedge it. All the spreads are like crazy then.
Yeah, just like the peso as well.
It's one I've never touched him.
Yeah, and particularly since Trump 1.0 and now Trump 2.0. Yeah, it's very chaotic. So, yeah.
Are you trading the Kiwi versus Aussie?
Not versus Aussie at the minute. I have looked at it a couple of times, but I've just found better setups, I guess, on like Aussie dollar. The dollar crosses as far as that's concerned.
I mean, it's a bit like gold and silver, no? Like silver being the little brother of gold, kind of copying what is going on in gold. And I think you see the same with Kiwi, that it kind of follows what the Aussie dollar is doing.
Yeah, and that's the thing. Like sometimes there's a good differential, but other times they're very in the same boat, so they kind of level each other out, right? And so at the moment we haven't had the clear divergence right now. They're tending mostly to get thrown in that basket of fringe tariff risks, or hence more tariff risks to the other what do you call them? Builder countries, manufacturing countries, like through Southeast Asia, that kind of thing. And then we get hit as a tangential effect because of trading partners, that kind of thing. So even though Australia and New Zealand we're completely outside the tariffs, we're basically got nothing compared to everyone else in the country, in the world, I should say. But we still had that slight hit per that economic activity. So.
Although it could be potentially a nice trading strategy as well, if you say like sometimes there is a divergence between those two to look like how's the average divergence, and then trade the return to the median again.
It does tend to have very clear ranges, and the housing structure is very similar, the debt profile is very similar, all of that kind of thing. And then you do typically then get Australia does better first, then New Zealand plays catch up, or other times when Australia is sort of flat, New Zealand gets hit. So Australia might come back from doing really well, but we just sort of neutral. But New Zealand will actually take the hit because their economy is a bit more fragile. So there are those differentials there to play, definitely. Yeah, definitely a good one to look at, to be honest.
Agree. All right, I see we already are passing the 2-hour marks here. Didn't I just see Mike in the background? Who's taking over, by the way, today?
I believe it is Mike jumping in.
Okay. Are you staying around, or?
I'm staying around. Oh,
wow.
Yeah.
Double shift in this volatile market.
Yeah.
Also not bad. So I'm we're just going to wait until Mike joins us here. Maybe quick recap of the last 2 hours. So really it's a bit of a difficult phase at the moment. We are seeing many pairs, most pairs actually in kind of a consolidation phase, especially I think gold, since a lot of you guys are trading this is very predominant there, that we are in this sideways range. It's choppy at the moment. A lot of strategies, including my own strategies, as I said multiple times during the stream, that were working for the past months really well, are struggling at the moment because of this low volatility environment, which brings me to that percentage ATR. But maybe I'm going to talk about this next Monday then, when we have a little bit of time. So I think also, as LJ highlighted numerous times, it's really the time to sit a bit on your hand. There's nothing wrong with waiting on the sidelines. Don't trade just for the sake of the clickety-click action. Really wait for the clear signals. And sometimes really that means that for days or even weeks, that you have to wait a little bit until this one perfect trade where all stars align is presenting it to yourself. It's worth a wait. And it should be part of your trading strategy as well, to think about what actually are phases in the markets where I should not trade. Because we always think about, when should I trade and how should I trade, but we rarely think about when shouldn't I trade.
Exactly.
So philosophical.
And then we got C Trader coming as well, guys. So that'll be available for you. Definitely check that out. C Trader is great as well. C Trader basically works as like a cloud system. So if you guys have used, MetaTrader, it's going to be individual to the terminal. Once you use C Trader, they'll be updated to a cloud system. So whatever account you log into, it'll be the same for every single account. So you don't have to re-up every single time, changing your things if you've got multiple terminals open. There's a lot more customizability, a lot more tools. It's basically just a new age version, right? Rather than MetaTrader was started back in 2005. It's a great platform, but a number of things are a bit antiquated these days. So C Trader, definitely try it out. I've been using C Trader for about 10 years now. And I love it. That's where I've got the majority of my stuff on, particularly for that cloud aspect. You can go log into another computer, a laptop, you're doing something remote, maybe you're on holiday, wherever you are. It aggregates all that stuff for you just in one basket. So yeah, definitely check it out. For sure.
So you might want to use actually this quiet times, maybe today, maybe tomorrow, to get accustomed with a C trader. So once volatility or more clear patterns return to the markets, you're ready to start with a new tool. And that being said, I'm going to say goodbye now and hand over to Mike, who's already impatiently waiting in the background, signaling me to get the heck out of his live stream segment. I'm just kidding, of course, So see you again latest next week, and have a good start into the week, and let's see where we are next week then. Take care, everybody, and bye-bye.
Brilliant. Cheers, Dirk. See you later.
Hello.
Hello, hello. How are we doing? Big Mike, Iron Mike,
Good.
in the house.
Good.
How are we
I'm
going?
good, buddy. I'm good.
Yeah, bro.
Do you know why I'm good?
Why are you good? Because you've been cleaning up on Eurodollar shorts?
Yeah, baby. Yeah.
Nice.
Yeah, baby.
That's good to hear. Good to hear.
I am currently up I think it's 1.4%, something like that.
Oh, it's mega. That's good.
About 1.4 on my new bootcamp, phase 1. Basically with just one trade. I was going to get in further sells, but I just didn't like. I was in meetings, so I couldn't give it the attention that needed. So otherwise, I would have done. But alas, we can't catch them all.
Yeah. Not Ash Ketchum over here. You gotta like all the one.
Exactly. You can only catch so many of them. So yeah. Hey guys, how you doing? Good to see you, Kavika, Stephen, Kim. Who else we got? Bunch of you guys in. Hope everyone is doing well. Those of you who caught the ABL segment earlier on this morning, you would have seen this was the trade that I caught. So in the end, that was actually my TP. I literally had a TP just here at 69.5, I think it was. And reason being was I was expecting us to come and take these lows down here, and we just kept on pushing. So initially my TP was somewhere about here, I think it was. And then I just saw structure change on the 1 minute, and I was like, no. There's some more profits to be had there. And sure enough, I had marked out this area as an area that I thought price was going to come back to and retest, and it certainly did. And we've sold off even further from there. I'm not sure how far we're going to go today. We've got London obviously closed. London's not operating today. So we've just got the Europeans, and Asia's basically closed now. So we are waiting for New York to open, essentially. Meanwhile, Europe runs the show. I don't know if that's a good thing or not. Might not be a good thing. Europeans running the markets. This could be dangerous. This could be dangerous. So yeah, Dinesh, good to see you, mate. That's going to be our last Monday running that intro, LJ. That's kind of
actually.
That's the last Monday ABL intro. So yeah, it's going to be a bit weird with that. I think I'm going to have to have that somehow. I'm going to have that playing in the background for me.
You need a variation
during the day.
Yeah,
exactly. That intro works nicely. Get you in the right mood. NX Master, good to see you as well, my friend. Hope you're good. So yes, that was my trade idea. I'm now waiting to see us come down to test either this level on the 6180 or the 50 level. I'd prefer the 50 level. But I'm not even sure if it'll happen today or not, because yes, New York will open and they'll move some things around, but I don't know if there's going to be that much to really look at. Let me just stick this up the top here because this is my fib level. Let's hide that up there. And then let's take all of this stuff and let's put it away in a box and stick it in there. And then what I can do is I can hide the box. So the fibs are basically actually from the move here. Now, you might argue that you should start from the actual impulse, but I actually still see the impulse as liquidity as well. So that's why I've started lower down, where the move really kicked off. And basically taking us up to the highs up here. Interesting enough, I did actually have a alert set up for us to cross that level, which we did hit on Friday. But that was, what time was that? That was like 7:45 my time. There was no way I was going to sell Euro USD over a weekend. That would just,
Yeah.
I know I'm a degenerate when it comes to trading, but even I have my limits. And trading a sell on Euro USD on the weekend, that's one of them. So yeah.
Especially with ongoing Ukraine talks, even if it's a fake out, right? Just any positive chat could open the price much higher or lower.
Exactly. So yeah. The Oracle's asking what is next for ABL. What is next for ABL? Well, I had a meeting about that this morning. Phase 2. This was the alpha. Next comes the beta. New brand, new name is going to be better. Actually, I should say next comes the better rather than the beta. The better, the AlphaBeta. Here comes the better. So next up will be a new brand, new platform that we're building out, but it's all custom built. So it's going to be huge. A lot of work ahead. Yeah, but exciting times indeed. Atish is in as well. BK, good to see you. TechTide, sorry, it's saying GU is not choppy. Do you want it to be choppy?
Yeah, the impulse to end up getting further from euro dollar was that pound breaking that floor a touch.
I mean, it does have a little bit more movement into it, even though London's actually closed, ironically.
Yeah.
So it's a bit like, okay, the Brits are asleep. Let's sell it. Let's screw them over. Let's do one to them. Let's give them something to worry about when they come in on Tuesday morning, having their bank holidays. How dare they? Yeah, exactly. Oracle, AlphaBeta Lab. There you go. That's right. It's going to be better. But it also won't be called ABL. So just so you know. Yeah, but exciting times. GU actually has a nicer structure to it, I think, than EU, to be fair. But similar, I'd be looking for us to come down to these kind of areas and then buying it up, I think, is probably what I'd be looking for. It does have a nicer support down here, just on the 15-minute. Got these nice little wicks here on the engulfing candles suggesting the move up. Yeah, but again, this one also started without a wick. So when Powell started talking, nobody was expecting it. Yeah, he's caught the market off guard once again.
Mm-hmm.
So, but that is why I feel as though there is some rebalancing needed to be done. Yeah, we'll see. What have you been looking at this morning, though?
Pretty similar. It's been very consolidatory from the week. So yeah, we did have that further breakdown in euro dollar. As you can see, we got the slight bounce there. So that trade I took during ABL, like I was saying, ended up jumping out of there after we had that wick coming down. If we go down to 5-minute, once it sort of just petered out there, and we got this next candle, I was like, okay, this is going to come back down. Yeah. Either we need to see a further just aggressive drive higher off that, or that was it. So at the same time, correspondingly, we've had the pound, just like you're talking about as well, coming off. We've been antagonizing these lows, now tapped a little bit through it. We're down to the P1, so the pivot point for the pound. Euro dollar has not quite gotten there. So I'm looking at a potential long on euro dollar around that 116.80. Now it could come to the next level lower. I've got about 116.65 because I think we'd only really get a further touchdown if, just like when you're looking at pound, we actually do. I don't have the moving averages up on here, but there was that MA, the 200 sort of coming through something like that through there, right? So if we get that move down, then euro dollar could go a bit further, and I'll probably look to long euro dollar preferentially, just since it's had a bit of further strength overall. But yeah, apart from that, we've been pretty, not doing too much. Like gold's not doing too much. The Dixie did make that break higher per the Asian high, right? So I'd say, just like we spoke about earlier, and when I was talking to Dirk, we're in that consolidation kind of period after the big moves from Friday, trying to find our legs for the rest of the week's price action. So I'm sort of just waiting for us to get a clear indication either way right now overall. So
this is one of the other reasons.
Unfortunately,
this is one of the other reasons why I was looking at sells on Euro USD. So in other words, longing the dollar was nothing else really that moved that much on Friday. But that really caught so many people off guard. They just suddenly fell through the floor. So again, that's just another one of the reasons why I was just looking for that retracement back down. If we look at how today is forming, sure enough, that's exactly what's happening. We're seeing dollar showing a lot of strength as it stands right now, with the pound, euro, and the yen showing a sizable amount of weakness. We were talking about Aussie yen earlier. I haven't had a chance to look at it. Have you seen anything on there yet?
Aussie yen, I've not had a look back since. Let's see where we are now. Well, we did get that minor pullback to here, and so I would still be generally long AUD yen. Aussie dollar seems to have a bit more strength in it overall as far as the majors. Per the recent comments from Jerome Powell, when we were talking about it earlier in ABL, we were testing this sort of high range. You can see these wicks on here. We did get that minor pullback, and then I would still be seeing that upside overall on AUD yen. It looks quite bullish here. We broke these prior highs, being able to establish some kind of consolidation in that area. We didn't impulsively drive right back. So this looks like it is very much setting up for a move higher on the AUD yen. What
would you need to see for you to feel comfortable taking a trade on AUD yen right now?
To be honest, just looking at this right here, I would even just jump in long at spot, really. But if you were looking for a more critical junction, obviously the prior highs that we had, end of Asia into early London, you see a break of that, you run stops just below this pullback area, and then run higher from there. So that's probably what I'd see as, if I was looking for a specific clinch point per current price action and where the spot price is now.
Yep.
So I think that looks quite favorable as far as a trade. Getting it up that high, maybe not. We may even just come into the head of this candle here before where we fell off last week. But I would say you'd be looking higher towards this these tops overall.
Yep.
So somewhere up there.
Mm-hmm.
Basically what I'd be looking at.
Yeah, no, it looks decent. Tech side, remind me what's reversing to the upside? GU? You're reversing to the upside? Is that what you're saying? That's what you were referring to earlier in the chat. Let me know. I'm not sure I follow. But yeah, let me know.
By the way, guys, for the secret words, mate, keep punching that like button. You guys will get the words revealed. So,
have we had a word revealed so far, or not yet?
We can't tell them, Mike. That's all.
I don't know. I'm asking, has there been any words revealed yet?
You should have been watching the stream, Mike, just like everyone else.
I was busy in a meeting with the bosses. What do you want me to do?
Hey, look, what if I told everyone that? in chat, huh?
Well,
I'm just going to give away the words.
if they know that there's a word already been announced, then they can go back in the chat and find it. They can go back and rewatch it.
That's the point, though. You don't say it. That's why it's a secret.
What? That doesn't make any sense.
Yeah, that's the secret. You got to turn up. You got to watch the stream to find out. And if you missed it, then you missed it, or else you got to go hunting.
Wow,
but
guys,
I can't give those.
He's feeling. LJ's feeling. He's
savage.
Feeling tough. Savage today. He doesn't want to give anything away. All right, okay. I don't even know what the keywords are today. I haven't looked, so I've got to go and check my messages somewhere. Let me see. Do I even know what they are?
It is there. You will know it. Yeah. You see?
I'm hang on. C Trader. Oh, C Trader. We got C Trader.
We got C
Nice.
Trader. Oh, yeah.
Yeah, that's what we like to hear. C Trader will hopefully mean that we can do proper trading competitions on live stream as well.
Yes,
And I'll be able to show like what trades people are in, which would be pretty cool. Jonathan's come down with flu. Secret word. Okay. All right. Cool.
There you go. You got it now. Yeah.
Yeah. Okay.
There you go.
Hey LG. Who's LG?
Life's good. Life's good. That's it.
LG, are you an ICT dude? LG is not an ICT dude, and neither is LJ either.
Yeah, no, I don't trade ICT at all. No.
Yeah.
Nada, zilch.
Yeah.
None.
Exactly.
So.
Official demo saying, what are your thoughts on alts? Wasn't here yet.
Coins?
Altcoins or alt investments? Maybe you're talking about NFTs, or maybe you're talking about art, or whiskey,
Pokemon
or wine.
My favorite.
You know, or Pokemon cards. You know.
I always bring up the Pokemon cards.
You know, maybe you're talking about retro games consoles. All of these things.
Very good point.
All of these things have a very, very lucrative market. If you get into it and you research the right way, you can make some good dollar. So, so yeah.
29.44. Soros is back. He's back
Oh,
again. Good
he's
to see you,
back.
mate. Good to see you.
Where you been, man? Where you been? Did you go time traveling again? I wonder what he's been up to. Can you give us the next move? That'd be great. Or alternators. It could be alternators.
Alternators, yeah.
It could be alternators for cars. So
I'm trying to click at the same time.
Can you check gold like just a peek? Can we just peek at gold? Peek. All right. Okay.
Peek
hang on.
Hang
Hang on.
on.
Let's gold. Right. Okay.
I'll
ready?
just grab some water.
Okay. Are you ready? Are you ready to peek at gold? Are you ready? Okay. There it is. And it's gone. GJ. There it is. And it's gone. Quick peek at gold. That is some horrible price action on the 5 minute. Do not like the look of that at all. I can see liquidity levels either side of it. So I need to see some kind of move, either down here, retesting this area, which was testing this wick, or maybe reacting off this wick here, because you've got an inside bar there, but you have got liquidity all over the place, even just on the 5 minute. So do not like the look of that at all. 15 minute, same story, inside bar there, on the high and the low. So it's levels for price to come and hunt down and take out. We've got all of these up here as well. But just like all of the other assets, everything else pumped on that news from Powell on Friday, as you can see there. Gold had already started to make a bit of a move up, but it left a lot of imbalances in the market with these wickless candles, 1, 2, and this one's the key one. So I don't know if price is going to come all the way back to take all of it, but I do think that we are looking at some sells on gold. Let's have a look on the 11 hour, my favorite. Yeah, it's the 11 hour. This was an engulfing candle to the upside. We've had nothing to change that direction yet. So we're just now pulling back to retrace. pull back down. I would expect us to probably take this low and then maybe go higher up to this area here. 3-4 seems reasonable. If we look at the daily was a massive engulfing candle, as was Wednesday's as well. It bounced off that, what's that, the 100 I think it is. 100's SMA. Reasonable to expect us to come back up to retest this level on the fibs, I think. But we said it last week, didn't we, LJ, that gold is just on a higher time frame is just ranging massively. It's just looking for an excuse to do one thing or the other. I think it's fair to say. So yeah. An official demo is saying, I like all of them, but altcoins in specific. You should have joined me several months ago. If you'd found me several months ago, I would have told you about the wonderful world of Memdex.
Oh, God.
But yeah, less we say about that, the better. I think altcoins is a road to ruin, I think, is the honest answer. Take that one from somebody who's been ruined by it. So yeah, that would be...
They had their season. I don't know how much they're coming back. It's one of those flash and pan things. Just like you had the tech fiasco back in 2000, and then dead for the next years and years and years, decade.
Yeah.
Right. Just
and
be careful. Don't become a bag holder.
Theo is exactly right. It is very much a range and trap. I still feel that there is opportunity for sells on gold, but if you were going to sell gold, you would, if you wanted to not miss the move, you'd basically sell it from where you are here, stick your stops up above the all-time highs, or maybe above this level here, because you got 1-2 confirmations of selling from there, and then sell it down probably to this one here. Would you really want to hold a swing like that for a 2R, 3R, if that's your thing? But you've got to hold it for who knows how long,
Long time.
Yeah. So, is that really worth it for a 2% or if you're risking 1%, a 2 or 3% return? Maybe. Not my cup of tea. But maybe it is for other people. Each to their own. Divorce the gold for some time, or money will divorce you, says Rahul. Ooh, sounds like words of experience there, Rahul. And now forex is asking us to look at pound Aussie. Well, pound Aussie has come off quite nicely and sold off quite nicely today. I think it's broken these previous lows. Looks like it wants to go lower on the daily.
Yeah, it does.
Very much lower on the daily. You've got another inside bar there. You've got another one in there as well. I'd be looking for sells from here down to this kind of area here, 26.1, something like that. Again, do you want to trade that on the daily? Personally, I don't. What's annoying about this one is I had an alert. Did you see that? I had an alert looking for it to come higher and never did. Just missed it. So we'll delete that and get rid of that alert. But yeah, that was my expectation was for us to take this level here and then sell. But we didn't. We did not do it. So yeah.
Close, but
Sorry?
close though. We sort of tapped right into that zone, but then right away.
Yeah. Exactly. So yeah. Random quote from Kavika says, "Money goes from the impatient to the patient." Quite right.
True. Very true.
Unless you're talking about hospital patients, and in that case, no, it doesn't.
Definitely not there.
How can we decide if price will bounce back by just touching level, or we should wait for candle to close? For example, for gold in a 5-minute recent with fib, price moved back from the 50%, says Aniket. Let's go and have a look. The 5-minute. I mean, I don't know where you're drawing your fibs, Aniket. That's the only thing. Where would I draw a fib from on this? I'm not sure where I'll draw a fib from this, if I'm honest. Where would you draw a fib on that? There's two.
I don't know,
Here
the
to here.
New York highs from Friday, to Asia open.
Yeah. I mean,
That low down there, yeah.
Yeah. I mean, you're never going to know. Look, you've got to trade what you see. You've got to trade what you understand and what makes sense to you, right? I trade engulfing candles and liquidity levels. That's essentially my strategy. And I use the engulfing candles to help me determine whether or not price is leaving liquidity behind or if it's deciding to come for it. And that's on higher time frame all the way down to the 1 minute. And that's how I find really tight entries with a tight stop loss.
And higher time frame, you're going to be able to have more conviction about, right? The lower time frame, like we're talking about here, the 5 minute, there's going to be a lot of chop. It's random price action within there. People just buying and selling. So they're not going to hold structure as firmly because it is just stochastic sort of randomness. The shorter and shorter time frame that you get, you're going to have more randomness as an influence to price action, right? Over the larger time frames, you can have more conviction around technical structure, candle structure, that kind of thing. So whenever you're doing something, it tends to be fragmented. You can see the same stuff replicate on the lower time frames. You just have to have a slightly more, take a grain of salt with it. So accept that wider variance, fluctuation around the structures you're seeing.
Yeah, exactly. So for those of you that aren't familiar with how I trade, what I'm doing right now is I'm marking out the tips of any candle where it's an inside bar, it's a wickless candle, so it has no wick. The high or the low is the same as the open or the close on either side, and price simply hasn't returned to that level. So as you can see here, we've got an inside bar on the 11 hour. I color code them just so I know the strength of them. So a thin white one is a much lower time frame. Dark blue is anywhere from the 10 hour up to the 2 day. 3 day onwards then forms something else. Now, interestingly, that means that our daily candle today opened without a wick. But it's also on the 3 day as well. So if we go to our daily candle today, we can see we shot straight down as soon as price markets opened. So that's going to be a level to see price come back and take at some point. This one here, that's going to be a very, very important level, which I would expect we're probably going to take today. So what I would be then looking for is, once I've got all of these different levels marked out, like 12 hour, the 14 hour, all of these lovely levels. So actually there we've got another one on the 12 hour. Then what I'm doing is I'm then marking out the areas where price has reacted from previously. So for example, if we just do it simply on the daily, we've got this structure here, there, down to there. That's the daily zone. So that's the higher the time frame, the stronger the confluence is for a reaction to potentially be seen from that area, whether it be a sell or whether it be a continuation. You've got to drill down and look on when it gets there. But that's basically what I'm looking for. Is I'm looking for engulfing candles or wick rejections, and then is trying to then use that as the bias, and then drilling down into the lower time frames, all the way down to the 15 minute, to the 5 minute, to the 1 minute, as I said, and then again marking out those areas. So once I have an understanding of where I think the bias is then marking out the levels at the extremes to then try and find either a buy or a sell depending on what the bias is. So, but I would recommend anyone who doesn't know how to figure out their bias, if it doesn't just come naturally to you yet, go and check out Gary Langley, aka Scruffy Trader, and check out his bias tool. I think you need to join his community for it, but it's very much worthwhile checking it out and checking out his morning videos and stuff like that. He does a great strength scores video where he looks through all the scores and identifies potential assets to trade on a given day. So yeah. NX Master is asking, what are the best practices for backtesting risk strategies before deploying them live? That should be part of your strategy.
Strategies in general.
Yeah,
that would be
that should be part of your strategy, right?
Yeah. Do you mean something specific to trying to gauge or try and assess what outstanding market risk there is that maybe isn't implemented into your strategy, or what exactly do you mean by that?
Yeah, because it's not entirely clear.
Previous week's giveaway winners will be done tomorrow because Jonathan's a bit sick today, so he'll be coming in tomorrow.
Poor guy has a stinking fever.
Yeah,
feeling rotten.
So like, what is it, like 39 degrees?
Yeah,
Celsius or something. Yeah,
proper fever. Yeah.
So
send me well wishes and your best thoughts, and that'll help energize him to jump back in and do the giveaways. Gold is making a breakout at the moment, actually, on the 1 minute. Be interesting to see if it breaks this structure or not. If it does, I could easily see it trying to break for this 371, this daily open, the Asia high. So I've quickly jumped in on a very cheeky scalp on that. Don't know if it's going to hold or not, but we'll give it a go, and we'll see how it plays out. So looking at 67.66, we got in there. Stops just below, and aiming for that up there. We'll see if it works. Reason for it is this engulfing candle here. This one, you can see it the wick just tapped into this one. So that's the reason for looking at that as a buy opportunity. We'll see how it plays out. So just broken this one, this high here. So in fact, it hasn't even broken it. It's actually created what I love to see, which is a perfect equal high, which means it's a level the price is going to want to revisit to take out. So added confluence for me that we want to go higher, and also where the moving averages are looks nice for some longs now potentially on gold.
I have decent conviction on anything today, to be honest. I don't like any of it. Like, there's been potential trades sitting here and there, but not a particular fan. I want to see the further full retrace of the euro now, where we are, before I jump in heavily or properly into anything.
Yeah. Rabina, it's Gary Langley, aka Scruffy Trader. I'll put it on my screen. Gary Langley. Oh. Trader. There you go. Dubicore, why not? Risking 0.1%. So yeah, I am in this gold trade. We'll see if it holds or not. But I like the way that it moved, and I like the way that it's created this wick, perfect equal highs on the 1 minute. The way that it's also pushed down here and here with no wicks also suggests that it's leaving this trail to come back and take afterwards. So, so yeah. So there you go. Robina, you are most welcome. Ooh.
When it'll be tomorrow, guys. Tomorrow.
Who's the winner? Who's the winner of what? Sorry.
For the prior comp.
Oh, from last week.
Yeah, from last week.
Okay. Yeah. Okay. All right. Yeah. You know, we wouldn't. We
got to go hunting.
Got to go hunting.
All right. Yeah.
But do they need to go hunting, or do they not need to go hunting? Because you haven't made that clear.
Hey, it's up to you, Mike. I mean, if you want to, you know.
I know what it is, but I'm not allowed to give it away if it's not given away. So I'm just, you know, I don't want to get myself into trouble with Jonatan.
You can't give the whole thing. You can give a piece.
I don't know, but
hunting, but depends if you're a bit.
But when's it supposed to be given away? Like, has the first word been given away? I don't even know.
Yeah,
it has. Okay.
Johnson's been in the chat.
Oh, okay. All right. Was it on a high time frame analysis? Oh, well, that's just... Well, thanks, Jonatan. That's just... There I was, trying to make entertainment, trying to make content here, and he just...
Yeah, what have you done, Jonatan? Come on.
Let's see.
That was a good one, though, Mike. Well done.
What's the point? I'm trying really hard here, and he just ruins it. I know you're sick, Jonatan, but come on. My God, man. I'm trying to give you like the links here. I'm trying to do it semi-professionally. Disappointed. There you go, guys. So the first and second word of today is high and volume. High and volume. The third word will come out later at some point. We don't know when Jonatan decides to rejoin and surface from his slumber. So yeah, bless him. He jumps in from his phone to do these things. So he can then come in and like post in the comments. So yeah, send your love and best wishes to Jonatan, and we hope that he makes a speedy recovery. There was something in comments earlier that I forgot.
Which one? Because
this one. Here we go. So, can you explain liquidity? Heard you're an expert on it. Who'd you hear that from? Curious. It is a strategy that I've evolved over the last few years, that I've learned from various different sources and people and what have you. And the concept, very simply, is you look for a perfect equal high, a wickless candle, or an inside bar. And you look for price to take those levels, and then you look for price to react and to sell. So you use that as almost like your magnet area that you're looking for price to react from, and then you're looking for the engulfing zones. So an engulfing zone was something like this, where it tapped in and reacted off here. So the ideal scenario would have been a test of that wick, for example. If I felt for some reason that this wick was going to be retested and then we'd have a buy opportunity, then that in itself could be a trade of a 6R, right? But that's a very, very difficult one to catch because I don't set pending orders. I go with live market price, and I wait to see it form on the time frame. Now, this one, that's why I took this one whenever it was earlier. Let me go back. That's why I took this one, because I saw this structure on the 1 minute and got in, unfortunately, a lot wider entry than I would have liked to. So yeah. So there you go. Waiting to see how it's going to react. Might see it retest this low again. So we'll see.
Sorry, I'm just doing a couple of things.
Yeah, no worries. Sorry, I'm just getting a message. So yeah, that's my That's my analysis on that, basically. So hope that helps answer the question. Let's get back to... I brag about it. Do I brag about liquidity? Okay. All right, if you say so.
We're bragging, Mike. Jeez. Right.
Jesus, I honestly, of all of the things I've been described as doing these live streams, I don't think anyone has ever suggested I brag about something. So, yeah, if that's the case, bad player, then my sincerest, deepest apologies. I shall never mention it again. So, what is the code? What is the code for? What? Huh?
I assume
you're talking about the giveaway.
The giveaway, yeah.
The code for the giveaway. The first 2 words have been confirmed. So you put the 3 words. There'll be 3 words. You put them all together, and that will be the code to unlock the link in the description. So you've got the first 2 words. They're literally in the chat right now. Just go up a few messages, and you'll see that they've been posted in the chat. So check it out, and you will see it there. Better entry would have been in the 200 EMA. Yes, but that's all the way down here, and that then negates the structural idea of it. But yeah, you're right, Kavika. The thing with gold, though, is that gold very often, when it does that kind of test, that's it. It's off to the races, and it won't necessarily look back. So yeah, I could have waited for a pullback further, but you know, you wait and see. So, but a nice structure forming, at least on the 1 minute now, around those. Where is it? The 100 and the 50 smooth moving averages, or simple moving averages, should I say? Sorry. So we will see. I'm super behind. I just joined the stream. Alpha Bright. That's terrible. That's awful. You best go back and recheck the comments, recheck the stream. Make sure you haven't missed any gold insights. Let's go back and have a look at what's happening elsewhere. Strength scores at the moment. Aussie has now overtaken the dollar in terms of strength. So the dollar slowly coming off a little bit. The yen and the euro is still showing a fair bit of weakness, as is the pound. So if we look at GU, for example, GU showing a bit of strength coming back into the pound. Nothing really that I would say negates further sells, if I'm honest with you. The way it started here, I still think we've got further room for the downside. If we go to the Euro USD, same story. I think we've got lower levels to come on Euro USD as well. What was the other one I was looking at? Dollar yen is the other one I was thinking of. Dollar yen, again, doing the same but reversed in terms of Euro USD, and pound USD. Again, looks like we've got some further space up to kind of 147.9, and then maybe look for sells from that area if structure confirms it. So yeah. How is a bull trap from a stop different from a stop loss hunt above resistance? Hang on, are you able to easily answer this without my brain exploding?
Okay, so I mean, this gets into the debate of is stop loss hunting even a thing that exists?
Let's not get LJ onto his soapbox. LJ, just keep it. Just don't let it trigger you. Don't let it trigger you.
Bull trap is just where you've got a certain market structure. There's a clear impulse for the market, fundamentally, directionally. As far as the macro picture, say an example has been this year's theme very much has been US dollar selling primarily, right? So you get to a certain point, sometimes a technical point, or sometimes there's forward coming data right, where everyone's looking for that to continue to push price, you then get that slight tout above a certain key level, right? But then the market reverses that quickly, even though we do still have technically forward-looking impulses that would continue that move. So it basically is when something is being priced in sooner rather than later, and there's certain market participants which are still looking for that to flow through into the market, but it's being priced in earlier by big participants well ahead. They decide to reverse price or hedge out certain levels, and price reverses aggressively, despite you still have the overall market sentiment and structure for, in this case, we're talking about further upside, but the price comes off. So it doesn't mean that that sentiment is invalidated. It's just now we've had it fully priced into the market, right? So you've had very much a buy the rumor, sell the fact type situation. Sometimes you can have that leading up. A good example is stocks. When you're anticipating better earnings, you actually get the earnings release and they do come out better, but then the stock tanks because it's already been priced in, right? So that's basically what a bull trap or a bear trap essentially is. As far as stop hunting, I mean, it's not really hunting. Typically, it's one of those situations where just those are certain key levels that are sensible. If you're looking for a trade going against that overall sentiment or trend, or you think it is priced in, naturally that's going to be a sensible area to take a new position and express that view. So as far as stop hunting, I mean, if we're talking about retail traders, right? Retail traders make up 5 at peak periods, like 10% of FX trading going on in the market. FX trading is massive, absolute monster. Way more money is going through the market than, say, something in stocks. As say the whole S&P 500. Yeah, volume, let alone individual stocks, right? So retail traders will have more effect there because you've got much more isolated pockets. FX is completely different. There's so many moving parts, so many pieces going on everywhere. They're not looking to stop you out. It doesn't help.
With FX, what a lot of people forget is that there's this little kind of forgotten area with FX, which is actually quite sizable, which is it's not just banks just trading FX themselves, but it is also companies trading FX. So if you've got a multinational and they are headquartered in, let's say, for example, the US, but they have entities in all other parts of the world, if those entities are not revenue generating, for example, but they are simply support providing for the business, then they have to be funded somehow, right? So let's say, for example, you have a services business and it's an outsourcing company, let's say, and they have a head office in the US, but they have, like, for example, customer support teams based out of India or the Philippines or Eastern Europe or wherever. They're not necessarily generating income from those countries, but they're providing services from those countries. So they have to fund it. They have to pay the salaries. They have to pay the wages and everything else. So those companies still have to exchange dollars to something else. And that also has a massive impact on the forex, which a lot of people don't realize, because some companies have to change that money whether they like it or not. Sometimes they can't wait for the best price because they've got to pay the wages, right? And they've got to put money in the bank account. So that's often a forgotten element of the forex market, and one of the players that takes part in it.
Yeah, commercials is definitely a massive part. So, and the same way you have, like, say you got BMW selling cars over in America or something, you've got to swap around that currency, bring it back home. Apple, think about all they've got bits and pieces going everywhere. So they're shuffling money to contractors, to outside players, partners, just subsidiaries in other countries. That's always shuffling and churning all the time. And just like Mike said, they have certain payroll obligations, tax obligations in various countries, different establishments. They also have legal as well. So there's constantly just a churn of dollars going around on top of the traditional banking, hedge fund, money management, all that kind of side. And then, sort of active day traders going on all at once.
And there's also the other complication is the added layers to that, right? So imagine imagine this hypothetical company that I mentioned earlier. Let's say they're banking with HSBC. They most likely bank with HSBC across all of their geographies, right? So what HSBC will do is they will honor the exchange of the money for that customer, but they'll use it using their own allowance of dollar, euro, or whatever it might be. And so then they will then have to look to either replenish it or then glean some value off that as well. So
and then that's why they have their traders which go into the market to then and it becomes like a swap lines thing, and they're constantly rebalancing that to facilitate the banking profile for all the people under their structure.
Exactly. So you got to imagine the banks are a bit like you going to the the exchange what's it called, foreign exchange unit when you go to going on holiday, right? You go to the foreign exchange place and they have physical cash, right? The banks are the ones that hold the same essentially for businesses when they need to exchange their money, not because they're going on holiday, but because they've got to pay their bills, right? Kavika, I'm not sure why you think I'm a teacher. My parents,
the glasses,
it's the glasses. My parents were both teachers. They were head teachers, in fact, deputy and head teachers. Both now retired, but that was their former career. So let's say it's in the family. Now I can enter the trade. It says Bright Vision Traders. It's entirely up to you. I'm holding this for the time being. This 5-minute candle hasn't negated the idea. I think we may have actually created another equal high. I'm not entirely sure. Let's have a look. No, we've just taken that high. So let's just lock that. So I still think we're coming for this perfect equal high up here. But again, we're just leaving these levels either side of it that are going to be a little bit tricky and may catch us out. So just keeping a close eye on it. But for now, it still looks like a valid trade for me at the moment. But as I said earlier, I'm only risking 0.1% on this, so I'm really not going wild on this one. I'm just waiting to see if it plays out. Mm-hmm. This one does look less convincing on the 7-minute and on the 11. I've got to say, I want to see how it plays out here because
just range trading,
Yeah, it is. The fact that it took this low here and wicked back up, that was for me enough of a confirmation to say we want to go higher. And as I say, we've got that opening wickless candle at the very top on the daily open. So bit of bullish momentum coming in now. So hopefully that holds. We'll see how that plays out. But again, it's just leaving these cheeky little levels in below on all of these in there as well. So we'll see. Ideally, I want to see us break this high here, and then it'll be this one here, and then I'll be more confident in this trade. But for now, it's all right. We'll see. Yeah.
I think we like we talked about earlier in ABL, I do have that tilt to the upside overall for gold today. I just don't like any of the general short-term structure across all markets, to be honest. So I've just been taking small bites, like I was saying earlier, for you guys. Yeah, exactly, Akram. It's market hangover from Power Speech. So.
Yeah, exactly. There we go, taking those two levels. So yeah, I'm quietly confident, I think. Let's just check. Maybe not. The fact that we didn't break this high, we took the liquidity and we've wicked straight back down. I don't like that. And this trail here, so need to see what this 1 minute's going to do, and I might just close where I am. Let's see. We see another, wait for the candle to close, and we'll make a decision from there. But I don't like that structure at all on the 1 minute. Let's see how it closes, and then we'll make a decision from there about whether or not we're going to keep that trade open or not. Because we
Swiss
still
Post has suspended US goods shipment from August 26th altogether.
Royal Mail and FedEx have already done it. Royal
Yeah.
Mail and FedEx have already done it as well. Yeah,
That's fun.
that's the third postal service, because it's just too expensive for them, and they can't handle it. They can't handle the processes for it. So honestly, the logistics for these things is a nightmare. And then what happens is that you end up with all these postal companies like FedEx, UPS, DHL, whatever you want to call them, and they end up with massive warehouses of all of these goods that the importers don't want to pay the tax on. And they're like, well, what do we do with this stuff?
They just sit there, yeah.
So,
Then it becomes that same situation with oil when it went negative for that same reason. That like, we've got all this oil. We actually can't hold this. We will pay you to take the oil away.
yeah, exactly. I don't like this on the 1 minute, so I'm going to close this because I don't like this structure on the 1 minute. It'll probably break that high now. Yeah, there you go. Just as I closed it, damn it. It'll probably break out higher and keep going. Yeah, it's just broken it. I didn't like that 1 minute, the way it was forming at the time.
Yeah, I was going to say, with this, how can you trade FX on the 1 minute time frame when the spread is around 20% of the risk? There's no way any one of us has at least a 20% edge. What's your take on that? I mean, the spread is not going to be 20% of the risk. It's first and foremost, it depends what spread you're getting, what FX pair are we talking about, on what time frame. Because
what lot size you're using.
Yeah, if you're trading a major, you'd be pretty much at nearly 0 or 0.1 of a pip. So, you know, that would imply, say, if you're in euro dollar with either flat or 0.1 of a pip, plus commission, you must be targeting like 0.6 of a pip, which then, you know, yeah, of course, that's, you know, it's going to be wild. No one would be doing that. So, but if you're looking for several points, then no, it's going to be a fraction of your total take. So I'm not quite sure where you get to that math exactly. Yeah,
if you can explain the math, then that'd be cool. And yes, the 5ers have just launched CTrader.
CTrader, yes.
CTrader is now available. I haven't.
Now we can look at my amazing messy charts, all in their glory. Hell yeah!
Why is that a good thing? Why is that a good thing? I'm not sure I understand. Can you explain to me why is that a good thing?
It's a good thing for me. You know.
I'm going to try and see if I can find it. Hang on. But yeah, no, it's well, to have CTrader is very, very cool, because it will mean hopefully that we can start live streaming the actual trades that the traders who are on stream, the trades that they're taking. So that'd be
you got to plug into that, yeah.
So, and there it is, yeah. There you go. It is available. Very nicely done. So there you go, guys. If you want to go check out CTrader, Ressa says don't really like CTrader. Yeah, I mean,
still got the option. So
yeah, you still got the option. I think the problem with a lot of people will find is that CTrader is just very, very different to MT5, right? That's just the crux of it, right? So you just need to get yourself used to it. But once you get used to it, you'll find that actually it's not that hard. Not that I've used CTrader extensively at all. So yeah. The Saint is trying to guess the last word for the giveaway. How have you managed to get it so far, the Saint?
it's probably a harder one to guess. than some of the others. Some of the others were easy for you guys, but this one's
this one might be a little bit more tricky. This one's very unique. This is a unique Jonatan one in particular. So yeah. Any reason for the 7-minute and the 11-minute charts? I haven't had this question for a while actually. So the 7-minute and the 11-minute and the 14-minute and the 22-minute and all that lovely stuff. You got to go back to the basics of what structure you have when you look at the daily, when you look at the 4-hour, the 1-hour, the 15-minute, the 5-minute, all of those things, right? Any of those, you've got to. Sorry, I just got a message. Person who just sent me a message, that's not true, but thank you. They're all multiples of that, right? So you got the 4-hour, you divide that by 4 and you get the 1 hour. You divide that by 4, you get the 15-minute. You divide that by 3, you get the 5 minutes. So they're all just all of the same thing. So if you get the 1 hour, right, you take the 1 hour, okay, they're all going to overlap. Whereas if you go for something like the 11-minute or the 7-minute, they overlap the 1 hour, for example, closing, right? So if you're waiting for that 5-minute close, the 7-minute or the 11-minute can give you potentially an advanced view on what it may or may not be doing. So yeah, that's kind of how I see it. It just gives you a different perspective on it when you're maybe waiting for different candles to close. You know, for example, if I'm waiting for the 4-hour candle to close, right, I've still got another 2 hours and 23 minutes. But if I go to the 3-hour, I've only got 1 hour and 23 minutes. 2-hour, I've only got 23 minutes. 5-hour, I've got 1 hour and 23, and so on. 5-hour, by the way, looks very bullish, I gotta say. So if you're in those longs, on gold, that looks really, really bullish. I've got to say. So if you took this and you didn't close it like me, then congratulations, because I probably will go higher than what I initially anticipated. What do you think, LJ?
I agree. I think gold definitely goes higher from here. Definitely being the wrong word, but basically back to what I was saying before, I've been looking for general bullish outlook all day for gold. Like I said, in ABL, that was the only asset that I had any kind of reasonable confidence in as far as...
It's ironic given that that's the one that we've had no confidence in for the last week or two.
Yeah. It's still not amazing. It's not, shouting long, but as far as the overall structure and the price action, gold's definitely been one of the better ones, at least today, which, yes, is ironic given its past sort of 2 weeks of chop and just overall grossness. Upside on gold is what I'd be looking for. The other majors, we did have pound after hitting that the pivot point very nicely. We've ran back up. Same with the euro dollar now, so we might actually find, or at least have a reasonable position to, if we're looking for continued shorts, possibly. So you can see here on the pound, we hit that pivot level perfectly in there. We've come right up. We're now approaching the extremes. We've rallied on and on and on. If we go to the 1 minute, you can see we've now just powered right up from there. As general, again, this is just back and forth trading. We're in this range, so we're just retracing again after the falls. We go to the euro. You might have some kind of collapse from here. So ultimately, then I'm looking for some form of long from lower points. If we start accelerating, this sort of confirms itself as a move of euro dollar continuing lower, I'll consider shorting into this. So this is a 15-minute outlook. You'll be looking at these prior heads now that we've actually sustained this kind of price action down here. Once again, however, though, we're very much range trading. So we could just pause here, not really do much, not kick on either way, or get a further retrace back up to 117 and a bit past that before actually coming off. So yeah, the price action today, particularly on the major FX pairs and the other tangential FX pairs, is not at all I don't know, high conviction, put it that way.
Gold has actually struggled at that top level, taking that liquidity level that I was mentioning earlier. It's just pulled back on the 1 minute. So yeah, we'll it might be an opportunity to get in here. This structure here. See how we've tapped in there. Might be an opportunity for another entry, but I don't like the way that we're wicking away from this. So we've still got another 5 minutes left. But we'll see.
I think the majority of my trading is going to come in tomorrow rather than this evening, given that price action. So
yeah.
What else is there?
Yeah, exactly, guys. If you want the giveaway, you gotta hit the likes. Hit the likes.
Yeah, you guys got to punch the likes for the next for the final word.
Don't get anything for nothing. You gotta give to no. You gotta give to receive. Yeah, you gotta give to receive. So, do you believe in the power of words? I'm glad you said words there, because otherwise we were going down a very different topic, and I'm not sure that we're the right channel for that.
Wait, what topic would that be?
Religion. Do you believe in the power of? Yeah, exactly.
Right.
And let's not go down that road. So, and Kukubi Hindi, the AlphaBeta Lab is a project that's being paused for a little while, but we'll be back in a new form in the future. So yeah, this is our last week on the 5ers live stream, and we'll be back in a new form in the future. Wealth would like to see Aussie USD, and there is only one man for that.
Can do that.
Only one man.
$1. Ideally, I would have wanted to see us push up further through London. Obviously, we had euro dollar, pound dollar come back off, and then that's basically killed that that break that we had, a small break we had here on the Aussie dollar. From now, we did get this sort of relative double bottom in here once pound dollar, euro dollar paused. I probably have the slight preference for shorts here now on Aussie dollar for the rest of today, given where the pound is, where the euro dollar is. I'd like to see another, tap down into the lows from Asia before considering longs. So that would be my preference for Aussie dollar right now. But again, it's basically just map this out, top to bottom. This is your kind of range, each of these levels through here. Nothing spectacular going on, unfortunately. But yeah, so slight tilt down to the downside. We've got euro dollar here starting to curl over again. We've got to wait and see if euro dollar actually starts to pick up. Similar with pound dollar, we're now approaching, this has been a pretty sustained drive here. So wouldn't be surprised if we then pause somewhere here, pull back a touch, and then see if euro dollar further kicks on and potentially actually breaks these lows and runs to its more penultimate retracement point for today. On that case, you would see Aussie dollar probably pick up steam and follow along. Only difference being, I wouldn't say Aussie dollar will crack new lows. We basically approached the pivot point for today on the Aussie dollar earlier during Asia. So any retracement would probably get capped by those Asia lows. There you go.
Cobb, I'm not sure I understand, but I'm pretty sure that, I'm in Poland and I have no problem trading a funded account. And we have German traders, so I don't believe it's a problem. But if you're concerned, please reach out to support and they will be able to answer any questions that you have. I will not be the Oracle, but LJ will be here in abundance. You will get so much of LJ you won't know what to do with it. It'll be an LJ love fest. So yes, you will have LJ in droves in the 5ers live stream. In fact, you already do since last week. In fact, the week before. LJ is literally the foundation rock of the 5ers live trading room these days. So you'll have plenty of LJ, and we've got loads of new traders coming in as well. We've got the likes of Samir and Derry and Ashley, loads of great traders that Jonatan has been working with. We've got Ellis, we've got Griff is still going to be joining, I think, on a Tuesday as well. So the ABL segment won't continue, but you'll still get plenty of great insight and analysis and stuff like that from all of the great traders that we have in the team. So it'll still be around, just changing the format up a bit. And Mike won't be here so much, but he will, I'm sure, dip in on occasion to say hello to you guys, just to
I might dip
let everyone know that you're still live.
I might dip into the chat. The chat. So streaming probably not so much, because it's going to be quite hard for me to jump in, jump out randomly, because we have a schedule and everything else. So yeah. But my hope is to be back at some point in the future. But we'll see. Maybe I'll do my own stream at some point. Don't know. We'll see. Marina, good to see you. Long time no see. Hope you're well. Hope you are doing well, my dear. Always lovely to see Marina around. Euro Aussie.
Euro Aussie. Asking. I would assume Euro Aussie will be lower today. Yep, very much.
Mm-hmm. Yeah.
Let's go up to 1 hour. Have a further look. We're tapping into these heads now, I guess. That would be the point to look at. I think we did have a look at pound Aussie earlier today, didn't we, Mike?
Yes.
Deal.
Yeah.
Yeah, similar deal. So Aussie dollar, definitely as far as the majors, is outperforming on a relative basis. So hence we've seen this move lower. You are coming into these heads now. So I would start to hold caution about getting further long, at least for today's price action. If we go back to the 15, you can see we've ran through the pivot today down to S1. We're approaching the S2. You have those prior head levels through here. So I would just expect this to decelerate and potentially find some interim bottom, at least for today. You're also around that round number at about 180 here. So if you didn't catch this move earlier from today, like we've moved pretty substantially, I'd probably just be cautious. I'd say this is one of those pairs that you likely want to, readdress tomorrow. You have this head through here and these bottoms. Can make that a little bit straighter. Zoot, 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 zoot. Basically through there. So if we draw a box, we'll highlight it better. So these heads over here. To this prior head through here. This is basically the sort of support liquidity junction that you're looking at for today. So we're coming right into there now.
Apparently we got it wrong.
Wait, what? No, LJ, you're Aussie, some word, but nice.
That's Oracle. That's trying just a little bit too hard. Come on. That's just a little bit. Come on. I've got Adil asking about Euro NZD looking bearish. Yes, it very much does look bearish to me. As far as I'm concerned, Adil, looking at the 2 hour and the 1 hour, we've broken the previous lows and we've got room to go aiming for the 200 moving average. So I would say yes, that does look good for shorts.
Yeah. So Euro Aussie is going to be very similar to Euro New Zealand. Obviously, Australia, New Zealand, similar profile, similar geographical location, slightly different in terms of trade, but very, very similar, right? Yeah. And they often tend to follow each other. Today, obviously, Aussie dollar is outperforming. So hence we've seen this, we've got a similar structure here, but just the Aussie dollar chart has accelerated much quicker. So if you were to pick one on that same basis, Euro, New Zealand dollar would probably be your better shout, whereas Aussie crosses have probably already approaching their limits for today.
But we know that Adil likes his more obscure. Adil. I think Adil has a secret plan to take all of his profits from the market and move to New Zealand. He's got a secret love affair with the New Zealanders. So yeah, we've got a couple of questions regarding the NASDAQ from David and from Nicola. I reckon we've still got a slight bearish lean on the NAS at the moment, just looking at the 1 hour, but I don't know how far we're going to go on that one, if I'm honest. What do you think?
Yeah, I agree. So this is not a trade I took, but this was something when we were talking about earlier in ABL. You had this relative low, again, this area of support / liquidity coming in. You'd have potential trades coming through here, and then find some decent, way to size out the trade, risk reward, etc. If we go over to, that's the wrong one, probability distribution for the 0 DTE options that you guys often ask about, I'll refresh it just to make sure nothing's changed. So 23489 for today. That level comes up about here. Touch below there. There you go. 23489. So that's right back up here into sort of the midpoint of today's range from Asia and London. So you could see some kind of retracement through here. Stops below the recent lows. Take a stab at that. That's not a terrible shout. But overall, again, just like the wider market, we're trying to digest Friday's comments and see if they actually stick, or the market decides to, vomit them up and say, no, we're not agreeing with the current outlook. At the moment, they are relatively sticking, and then so hence we're just trading back and forth in the range. But yeah, if we did get the push back up to that's where the options level is. Fair shout that we actually keep running on. The other piece to remember, we are going to have NVIDIA earnings and such coming out going forward. So keep an eye for that. Keep that in the back of your head. The market will be looking towards that now for direction for indices overall, because NVIDIA is the heavyweight in the market and tends to not just then draw NVIDIA itself, which is a massive portion. It then ripples onto all the other major tech stocks, and then they all shift together, right? Because they're all in that boat of doing AI stuff going forward, etc. So you get a much larger domino effect at the moment.
Absolutely. Dubical wants to know what's your pivot indicator, but it's just pivots, isn't it?
Yeah, so it's just pivots, this one. I bring this up here. This is literally just the standard pivot points indicator. So if you just search pivot point standard, or say if we do go, you can see how many variations of types of pivot points that you can find based on combinations of pivots with other indicators, etc., that people have made. This is just the standard bread and butter pivot points. So the others, if you want to do that's when you've got a specialized approach or outlook for something and you want to, put something specific together.
Yeah. Gold. The guys want gold back again. Gold. I actually got in here. I didn't have a chance to tell you guys, but I got in on this retest of this section here. So second trade was this one here, just stops just below and taking it up. I still think we're going higher. We've just stalled a little bit because we're just trying to break past this this opening candle from the this opening high from the day. But I'm confident that we're gonna go and break that and head on higher. If we look at that 5 hour candle, That looks very, very, very bullish right now. So I think we're good for the longs at the moment. But we'll see how it plays out. It may still want to come down and retest this area before going higher, but it's not showing anything of great significance at the moment. This little retest here was a nice one. I don't like, hang on a second. No, that one's okay. It's left that inside bar just there. And then it created this 1 minute engulfing candle. So looks good for longs for the moment. As long as we don't break this low, then I think we're still good for longs on gold. And I'll be taking them up to the same. That's just breaking last week's highs and taking us higher. So there you go. And chat has gone away from me once again. How is C Trader working with the 5ers? Not sure what you mean, Jatin, but you can use C Trader as a trading platform instead of MT5 now. So when you go to purchase an account with the 5ers, you can choose which platform you want to trade with, whether you want to trade with C Trader or MT5. It's all there on the platform when you go to purchase an account. Fabian, good to see you, mate. Hope you are well. US 30. Haven't looked at US 30 to be honest with you, Fabian. But we've talked about US 30. We've had this conversation. It's the pensioners index. It's just not going to do the same kind of stuff that you want it to do, like the NASDAQ. The NAS does. Maybe the S&P will give you something, but the S&P, you might as well just have the NAS, right?
Yeah.
So yeah. We were looking at a Aussie JPY earlier, so keep an eye out for that. That'll be one that we were talking about earlier. Atish says gold can retest. What's this? November. This your one? Did you pull that up?
Yeah, I pulled that up. Yeah. So in terms of that kind of somewhat seeming like a repeat pattern cyclical thing, I touched on this with Dirk much earlier, a couple of hours ago, in the stream as well. We were talking about how Q1, Q2 tends to be a lot better, particularly for stocks. You come into Q3, things tend to dip off. You get the European summer. There's covering, take profits. We're always in a sort of a flux period with a number of the central banks and data coming through. And then you come into Q4 and you get that Christmas rally and the like. What I will say with those things, especially through all of these periods, you have to be very careful, because we had obviously COVID, the resultants of COVID, inflation, all those bits and pieces that have to be taken in context with the moves as well. So always make sure you're not just taking it blanketly, like you've seen this happen, it's going to repeat again, because it doesn't always work that way, right? Sometimes this is a very small data point, right? So it can purely be coincidence. But just like Dirk was saying with one of his other fund manager friends, he makes all his money in Q1, Q2, and then Q3 and Q4 is basically about protecting those gains from the first two quarters. And so it's more defensive. And that's why, you do get a bit of that drawdown, and then come into Christmas, you get the Christmas Santa rally. But just take it within context whenever you see patterns like that in the market in general.
Yeah, exactly that. Gold has just stalled, as I said, just below that open from today. I do still think it's an area that price is going to want to come and retake. It's stalling a little bit for the moment. But I would, for now, as long as we don't break these lows, I'd still be looking. I love it when that happens. I'd be thinking about getting out of that trade now. So I'm out of that one, taking that out and taking that profit, because I think we've got too much liquidity here. I'm not sure this is going to hold necessarily. and it's forming several engulfing candles to the downside on the 1 minute, so looking like it wants to sell. So and there is this trail here that price might want to come and sweep before we open up for New York properly, but we'll see. So yeah, if you're in this one, the original one, the one that I closed early, then that might still go, but that one I've just closed it just there. But this original one still seems okay from my perspective to hold it. You just want to see how does it form over the course of the next hour or so, I think, especially as you get closer to the 4 hour. But yeah, that for me is definitely bullish momentum for the moment on gold. So yeah. Guys, that is it from me and LJ for today. It is time for us to hand over to Samir and Derry, who are waiting in the wings to take over from us. So we will run a very quick outro from ABL and we will hand over to those boys. Pleasure as always, LJ. And yeah, we'll hand over to the gents, shall we?
See you guys later. Ciao.
Cheers, guys. Take it easy.
See you tomorrow.
Mine's not showing my side to be able to do it. Oh, there we go. There we go. Okay, cool. How's everyone keeping? How's everyone going? Samir, nice to meet you, mate. First time I think I've been on with you, so how are you going?
Hey, bro, what's up?
What's up, mate? What's up? What's going on? How's your trading been going today?
I'm good, man. Yeah, let's see if we get any trades or not. I'm just gonna be waiting for my setup. I'll just trade NYSE, so yeah, let's see. We still have time for that.
For some reason, it's not that LJ or anyone in the background might get out, but it's my screen won't share for some reason. Do you know any?
Some buzzing sound is coming. I don't know from where.
Ah, there we go. There you go, Samir, you're on, mate.
This buzzing sound is coming from your microphone?
I don't think so. Is there a buzz in there, yeah?
I don't know, man. If it is
Anyone
from
else?
mine.
Can you hear it as well, LJ, that buzzing? What was that then? That's strange. Where's that coming from? Go on anyway, Samir. I'll try and sort this. Go on, mate, you're on your screen if you want.
I don't know. This is a little bit disturbing.
Is it still there, LJ, you know? Or Samir?
Okay.
That's weird. I don't know what's going on with that. Anyway, Samir, what are you looking at, mate, for today? You looking at anything?
I'm looking at NAS 100. So I'm just going to be waiting for a liquidity move, either to the upside or to the downside. I don't think so. We have a lot of space to the downside. So, of course, it can happen. I'm not going to be, marrying to one thing. It can happen. But as of now, I think this liquidity push makes much more sense to me. This area.
Close to that draw.
If we can go slow.
What's that, LJ?
Try to mute. Can you mute for 1 second? I just muted. Now it's coming. I am now unmuted. I'm gonna mute myself once again. Now it's gone. Now it's gone. Yeah. So let's just come to the point. So I'm looking for this push to the upside, and then I will be waiting for my entries. I will just wait for some structure shift. I'm not gonna be aiming for this, bigger move. I'm an intraday trader, so I'll just take my 1 to 2 and I'll just get out. Mondays I do trade on Mondays. Tuesdays are not really good for me. So tomorrow, either I'm gonna be going for 1-to-1 or just a small trade. But today, I am definitely gonna be taking a trade, and let's see if we get any. So yeah.
Nice, mate, nice. Is that buzzing stopped now, just quickly, before I go on? It's still there? I don't know where that's coming from. That's strange.
I'm gonna mute now. Let's see if it goes, it goes away.
That's my mic for some reason, I don't know why. Let me know if that's any better. I'm having a nightmare today.
Oh, never mind. I don't know what is wrong, man.
Yeah, okay. Give me a sec. I don't know why it's doing that. I'll be back 2 minutes.
Yeah, now it's gone. The buzzing sound now is gone. I think there's a microphone issue. Yeah, there's a problem in his microphone. Let's see.
Hopefully that's better. Probably not though, is it? Probably still the same.
Yeah.
You can hear me properly, right?
Oh, what is wrong, man?
You can still hear me though, yeah?
Yeah, you can just
Yeah,
continue.
that's
I think it's fine.
Okay,
yeah.
Just go through the. Are you an ICT trader, Samir? Someone's asking.
Yeah, these concepts are by ICT only. I'm not gonna be saying I invented it. I just tested few things and it is working good for me. So yeah, ICT model. Yeah, I don't really know the name of the model, but definitely this liquidity, these type of things, ICT traders and even IC YouTube channel. You can find it there.
Yeah, for sure. To be fair, I trade exactly the same, Samir. It's just someone asked the question in obviously the chat. If anyone wants anything to break down, let us know. Obviously, I only trade Euro, GBP, but I will look at other stuff for people if they've got any questions on that. What do you trade, Samir? Just NAS?
I just trade NAS 100. I used to trade, a couple of pairs, Euro USD, these type of pairs, but I'm seeing NAS 100 is giving me a little bit consistent results. So yeah, and my mindset is also good. Like I'm trading one pair. If I don't see any setup, I don't even just turn on my PC. I'm just good. It really keeps mindset good. Yeah.
100%. That's the reason why I did in the beginning was I used to trade with 30, 40 pairs when I first started out.
Yeah, I used to do the same thing.
Mindset-wise, it absolutely battered me. So I just swapped just to the two pairs and obviously just back tested that, which helped me massively.
Yeah. Even I used to trade almost every pair. No doubt I did got some results from it, but that was not really consistent. I really wanted something consistent.
Yeah.
So I found this type of thing like trading one pair or one indices, whatever, asset class you want to trade.
Yeah.
I think it really can helps. It really helps.
100%. I think it's more for like organization as well for me. I used to come in and I used to have 30 pairs on here. And then I come in on a Monday, I didn't know where each pair was. Now I know exactly where the market is. It's just so much easier. So much easier.
Yeah. Atish, nice setup. Thank you, bro. I'm just reading comments now.
Yeah.
Buzzing back. Okay. Hello, guys.
I should get that buzzing sorted for the next stream. I don't know why he's doing that.
I think it's some earthing issue. I don't know.
It's a brand new mic as well. Maybe that's the issue.
Yeah. You should switch back to the old one.
But I'll just run through something that I actually took this morning for people to see. Obviously, I trade GU, EU GU. So for me coming in this morning, we'd obviously swept this external range high here from a 4-hour perspective, and then obviously stepping down into 1 hour. We had what I call, you probably use it as well, Samir, is a change in the state of delivery. So we had the change in the state of delivery here. We ran through that last bullish candle. We came back and tested that from the 1 hour perspective, and the same on GU. The markings have disappeared on here, but we had this change in the state of delivery here on GU as well, which we obviously came back and tested that, and then obviously we had that rejection wick there, and then from there then obviously we knew we had that rejection wick from here on that change in the state of delivery back into that fair value gap, and then as soon as we had this wick, I dropped down into lower time frame. Lower time frame wise, we had a 5-minute change in the state of delivery here. We run through that, we came back up and tested. At the same time, GU put in a 1-minute soup just here. Let me just get EU up, it's easier. What time was it? At 8:07, so 8:07. GU didn't quite sweep the high, EU took the high, so that obviously gives us the SMT here. We put in the soup, so sweep of the high, sweep of the low. We then got, from a 1-minute perspective, a change in the state of delivery, and also that fair value gap open up, and we got back in on the top of this fair value gap. We did almost get manipulated, but GU put in another soup, and then we obviously targeted those 1 hour lows. So we caught this on a live session, total of 7R. With partials, took about 4% on this one. So that was my trade for this morning. Again, I only trade once a day, whether that's a win or a loss, and then I'm done. So this one here, I didn't take this. This was just marked up. And then now, from sort of like a 15-minute perspective, we swept that that low there back into equilibrium of a 1 hour price leg, or just shy of equilibrium into this 1 hour price leg into the FEG. Then obviously 15-minute wise, we've had that change in the state of delivery, change in the state of delivery to the upside here. We've come back, we've tested that, changing the state of delivery, and then obviously we got that reaction from there. And then from a 5-minute perspective, again, we came back, tested the FEG here, and then 1 minute, if you were looking to enter on here, we swept the low, changing the state of delivery to the upside. We ran through that space, cleanly through it, and then if I was going to trade this, I would have had my entry here on the close of that candle, stop below the low, and then I would have been looking for that high to be taken out. 2 reasons I didn't take it. Obviously, it's out of my trade now. I was only traded either London Open, New York Open, so I don't trade this, and I've obviously taken my trade for the day. And the reason I don't trade is because I find I don't have that much success between sort of sessions. Do you know, after like 9:30 UK time in the morning till New York Open, I find I don't have as much success. So that's why I don't trade between sessions. Sounds like you were talking into a laptop's mic. Very Halloween sound. It's mad as well because it's actually a Yeti mic. It's not a cheap mic, so that's very weird. Why it's doing that? I'll have to look at the settings. There's too many settings on me. I'm a bit of a technophobe, so I trade, but computers and mics are not my thing.
Yeah. It's okay. You can just test here and there, you can find your settings, and
100%, we'll get that. Change in the mental state of delivery, aka reversal.
Yeah. Samir, no, but we are, somebody's asking if I have YouTube channel. I don't, but we are planning with the 5ers. We will create really good content for you guys, so that you get education and everything. Just stay in touch with 5ers, and I'm just looking at NAS 100 right now. It's really doing nothing. Let me see if there is any news today. I haven't really checked the news or anything like that. I'm not even trading so actively this week because it's my payout date this week, I think. It's Friday. It's on Friday, actually. So I'm not going to be, touching my accounts, which are already in profit. Why will I risk my profit? I never did that. So I'm going to be following my same plan until I get the payout in my bank account. I'm not going to be trading, but definitely show up every day. I see charts. So this way I know what things are working, what is not working. So today Mondays are usually my day only, my trading day. Tuesday I don't really trade on Tuesday, as I mentioned a couple of times. What's happening if I were on calls last week streaming or something? Let's look at other pairs.
Do you want to just share your screen, Samir, because mine's there. John, if you're in the background there, can you just swap to Samir's screen? You won't let me do it for some reason, mate.
How can I do that? Share media. No. Can you do it for me? My screen is shared right now.
Yeah, 2 seconds. There we go. There we go.
I don't know how to do it.
Perfect.
But yeah, this is gold for you guys. So most of course, many of you do trade gold. Let's go to the weekly actually. Let's do the top down analysis for you guys. So if you are just trying to short this thing, I don't think so it is gonna work. If you're a swing trader or anything like that, don't short it. Okay, intraday traders, yeah, here and there you can go, but let's just zoom in now. Weekly candle, we took out this low on the weekly. This liquidity is gone. This last week liquidity, and we closed really. It's a really strong close to me. So we definitely maybe targeting this resistance or this liquidity area, whatever you want to call it. I know there are some fancy words people like to use, but let's just say, let's just call this area. Okay, price may can tap this area as we close really good. Now going to the daily, look at this daily. We took out this daily low, really beautiful close. Look at this, and we closed above this, all these rejection areas. Okay, so we did closed above. So now we definitely are bullish. To me, definitely we are bullish. Going to the 4 hour now. 4 hour, I have trained my eyes. Once we have this kind of thing going on, let me change the color. Once we have this kind of huge fair value gap going on, price usually do one thing, is just liquidate this last low and then continue to the upside. I've seen this a lot of times. So now it comes to where to place ourselves and or where to enter. Okay, how you can enter now. So you just have to wait for this low to be gone. Let me again change the color. Okay, so wait for this low to be gone and then look for your entries. Whatever strategies you are using, break and retest, ICT, patterns, or whatever strategy you are using, just try to look your entry for buys around this low. Once we liquidate this low, if you want to be conservative, just go to the 15-minute, and just wait for the price shifting in your direction. In this case, we will wait for buys only. Okay, I have taken this trade aggressively around this area in past. Not really great win rate I have got from this type of setups. So according to me, let's just wait for this, and you can just enter your buy. Just wait patiently for gold to align with some kind of this. And of course, if it didn't happen, we just gonna go bullish, and then you can once we break this structure, then you can find your new retracement areas, because I'm a continuation trader, continuation guy, you can say. So yeah, definitely this is the plan for gold, and I'm just gonna be looking at NAS 100 only. Actually, I did took a trade on Friday. One was a loss and one was a win. Let me explain you the trade. Okay, so this was a liquidity point according to me. Okay, these areas I have marked, these areas. Okay, we took out this area in the morning in the London session. As I'm a very strict, I have a very restricted time window. I cannot trade this, as I only trade NYSE open. Okay, after that, so once 7 p.m. my time, I will start to look at charts, and then whatever price action is happening after the NYSE, I will try to place myself in that time window. Okay, and this trade was not for me, so I just mark my highs or lows like this. Okay, we broke this. This was a news push. So of course, funding challenges. There are restriction. You can't really trade new, so you have to wait. And I also have marked the yesterday's day before that. It was Wednesday. I marked the Wednesday high. We took this high also. This high also. Now I have to place myself in cells. Okay. I enter my cells at this some kind of a retest of this support. I place myself here. This was a stop loss for me. Okay, I was targeting 1 to 2, so this was a stop loss for me, and I took the stop loss. Okay, and once we again broke this high, and look at the 15-minute where we was I think it was 30 minute. Okay, we was filling all these feg areas. Okay, and this was a kind of supply block. Let's just not make it too complicated, but by just seeing this area we are filling the feg, and we do have some kind of pause here. As you can see this wick, we do have a pause here, so maybe price can give you a pullback. Okay, so I was looking at some kind of move. So once we break this high again, I just waited for a structure shift, which was here. And once we broke that, I just set in my sell limit here, which executed right at this retest. And my stop loss was this. I was targeting 1 to 1.5 only, because look at this. It was almost the session close, at if you talk about my time zone, it's almost like 10:30. I want to sleep, I want to go to peace, I just want to sleep peacefully. So I just closed my trade somewhere around here, and of course if I held it, my 1 to 2 would have been hit already. So yeah, both of the scenario, even if I close it, still a win. Even if I hold it, it's still a win. Okay, I did recover my loss and made 0.5% more, so I am happy with the result. So today, as I mentioned, I'm just going to be looking at the same thing, just going to be waiting for this high to be gone or this low to be gone. The high chance this high is gonna go, or we are not gonna do anything, we're just gonna consolidate for today, and in that case I cannot really trade. Okay, then it's not gonna be a trading day for me, just gonna wait. So yeah,
What other pairs did you trade, Samir? Is that just it? Is that it, just NAS?
I am trading only NAS 100.
Yeah.
From past like 3-4 months, I'm just focused on this pair. I used to trade gold, euro USD and JBP USD, these kind of pairs. I used to target 1 to 1. I was trading like random pushes. Okay, the higher highs and higher lows, structure based trading, and that also gave me a good results. For an example, somewhere around here, it was London session. We are making lower lows, as you can see. So I will just place myself in sells either on the breakout or on the pullback. In this case, I would have just taken the sell here. My stop loss would have been huge. Here, I would have targeted 1 to 1. This kind of trading I was doing, and it also gave me decent results. So yeah, but of course the win rate was taking hit sometimes, and we are a prop firm traders, so we want a little bit decent win rate. So I think with NAS 100 I'm getting at least 50% win rate with 1 to 2. I don't really have to look at other things now. And I'm at the mental state right now that I have, it's really good. I don't really have to worry about a lot of things. So on Tuesdays, I know I don't really have to take huge risk. On Monday I can do trade, on Wednesday I can trade, on Fridays I can trade, Thursdays are also on and off for me. I have noticed in my trading, I'm just trading for 6 years so far. So with all the with all the pain, whatever you want to call it, I have came to this conclusion. Whatever I'm saying, Tuesdays and whatever I've mentioned, these are not really good for me. And of course our viewers, so I will also suggest you, whatever your journey it has been so far, just look at your journey. Okay, just see what you have done. Just take a pen and paper and write few things that is coming to your mind, and you can make your plan accordingly. Okay, that will surely help you.
100%. Do you know, that's something I did constantly through my journey, and I always say to like my students and things is journaling not only your trades but how you're feeling along the process, because you'll go through those tough days with trading, like that's inevitable. That's trading is stressful, but when you get to the end of that, you can look back on that when you're profitable and have a sense of achievement. And if you haven't written those things down, you can't think. I find when I write things down, I find there's more meaning to it, because I look back and I think I remember that day because I've written it down. So it's good to look back on those things as well. And again, yeah, very educative. It is definitely, and it's something I did as well. I was literally journal not only the trades I took, but the way I was feeling and things like that as well, and what helped me not feel sort of stress and anxiety through my journey, which was really, really good.
Yeah, even I have been here, I think 3-4 times, and every session I have given you education regarding mindset. I'm not really a big believer in the strategy part. If your mindset is not strong enough, I don't think so any strategy is going to help you. So I'm going to repeat the same things again and again, because I do think Only this is the fundamental. If your fundamentals are not strong, let me tell you my journey, how it has been. I have made in 2021, I have ran one account for, I think, 5 to 6 months. I did made profits from it. I was getting withdraw every 2 weeks, but my fundamentals, my basics, whatever you want to call it, it was not that strong. So I was hesitating positioning myself in a trade. I was not confident.
Yeah.
All these things that you're getting, I was getting nervous. Even if I'm hitting a loss, my day was bad. I was not even willing to go to the gym. All these things, because my fundamentals, my mindset, my perspective, my vision, it was not really founded in a well manner, I should say. So now I have trained myself. I have watched few podcasts of these hedge fund guys. I have read Market Wizards also, that book.
Yeah.
So I think that has really helped me to overcome my these things that I mentioned, and to set my what do we call that, perspective or vision in a right way. Because I, for 4 to 5 years, I have been trained by looking at these guys, by looking at these influencers making huge amount of profits or making huge amount of percentage is normal.
Yeah,
But
no,
if
it's
you
not.
if you study the big guys who are really trading, it is bullshit to them.
Yeah.
They will never believe these kind of statements or whatever you see online.
Yeah.
So for 4 or 5 years I've wasted my time just believing in this kind of
Yeah.
this kind of thing, making 10, 20, 50, even 100% a month. It is achievable, and let's just do it. Trying to waste my money, my mindset was not really in well state. And let me tell you one thing, you all can be a good trader if your mindset is in a right state, if your vision is in a right state. If you eliminate this kind of thinking, making 10%, making 100% a month is very achievable. If you eliminate that thing, all of you will be very good traders, let me tell you. Even if you make 2% a month, 1% a month, 5% a month, and maybe some months can be negative 5% negative, and next month maybe you make 10%, and next month, let me tell you, my this strategy in July I made I think 20%. But this August is very slow. I think June was
Yeah.
also a good month, and before that it was kind of negative month, I think. So all of you are already a good trader. You just have to, just take few bold steps, follow the right people, read some right things. Okay, just eliminate the dust that is in your head right now. You just have to eliminate it real quick. It took me 4 years. I don't want you guys to be there. Just believe in some kind of thing which is holding you back. So if you train, if you make your foundation in a right manner, I think you will be in very good state. Your mental state will be good, and other things you can perform well. You can perform well in trading also. And yeah, that's it.
100%. I agree. And there's something you touched on there, is the mindset wise. You can have any strategy in the world and be taught it correctly and still not be profitable if you haven't got the mindset to go with it. And I always say, when you're sort of trading, any strategy can work if you've got the
Yeah,
right
exactly.
mindset, like any strategy. And it's just got to, like, a strategy that you enjoy and that you actually nail yourself. You can nail 100 strategies, but it may not suit your personality and the way you like to trade. So I 100% agree with that. And again, like, you could teach someone, or someone could learn the best strategy in the world. There is no best strategy in the world. All strategies are good. They all work, if you can get them to work and you have the right mindset for it. And people don't
Yeah.
understand that. They seem to think that it's the strategy. It's not actually the strategy. It's the mindset that goes into that strategy, and actually understanding how it works and having
Hmm.
that bulletproof mindset,
Exactly. Yeah.
setting the rules to actually execute on that. And you mentioned as well there, Samir, it's something I'm massive on, is confidence and conviction in a trade. If you're not confident, and have got no conviction in a trade because your mindset's poor, then you're not going to get anywhere with it.
Yeah. Exactly.
And that's the thing, is massive. Something I'm massive on is mindset. Always have been. You said books. I read books upon books upon books about mindset and continue to try and
Hmm.
develop that even to this
Yeah.
day.
Exactly.
There's always things that we don't know. Um, and I think that's the hardest part of trading that people don't
Hmm.
understand, is this doesn't work. It's not that it doesn't work. It's because your mindset hasn't actually sort of hardened, or it's not used to actually seeing those numbers or pulling the trigger or having confidence in what you're actually doing.
Yeah. Exactly.
Just reading some of the comments. Great English, Samira. Where are you from, Samira?
I'm from India.
Oh, yeah, nice.
You're from UK, I think.
Yeah, from
Alice
Wales.
mentioned me that. Yeah, he just messaged me and he just mentioned to me that already.
Yeah. Your English is good, mate. Very good. Small percent of profit is important.
Okay.
That's exactly what it is. It's just an edge over the market. That's why you hear the term so often is an edge over the market, not a strategy. It's what I like to call my strategy is an edge, because I've just got that slight edge over the market. Like Samir said, if you make 1 to 2% one month, that's awesome. You've come out in profit, and then the next month you can do 5-6%. Then you may have a break-even month or a losing month. But it's about coming
Exactly.
out and
And
actually
these all our viewers are already a good trader. If you just have to eliminate few things, you just have to adapt few things. And let me tell you, in 4 to 6 months, you're gonna be having your own different self. You will see yourself in the mirror. You will see a different person basically. You just give yourself 4 to 6 months with the right things in your head, and yeah, it's good to go.
100%. Just reading these. You can small percent of profit. Yeah, that's the one.
Okay, let's take a look at euro dollar. So you primarily trade euro USD, GBP USD, and gold.
I don't trade gold now. I stay away from gold, Smear. I got burned too many times when I started about 11 years ago, and I probably went in circles for 2 years trading gold.
Yeah,
Trying to flip accounts.
gold has never given me, good results. I've just quit trading gold.
Yeah, it's awful. I hate gold, but again, a lot of people love it. But yeah, it's too volatile for me. Used to manipulate me all the time. Yeah, not for me.
Okay, somebody's asking what are the right things to have in your head. So first thing, I will mark this percentage or just staying in the circle which is right. So if you're seeing the influencers or whatever online, whatever things you are seeing, these guys who are just flipping their accounts almost every week, every month, you should stay away from these guys. Okay, first thing, you do this. And second thing, just give yourself 4 to 6 months with a strategy. Of course, you might be having a little bit of experience as you are watching this YouTube channel, and I'm expecting you already know trading and you already know prop firms and you already know forex or these indices. So seeing yourself in this journey, pick one strategy. Okay, or I should not say pick one strategy. Whatever your eyes are trained to see, just do that. And I'm assuming that by now you already know few things. You know how chart works. Whatever your eyes are trained, or you can spot in a well manner, just pick that and give yourself 4 to 6 months. That is it. Two things: set yourself with the right expectations, and just pick one strategy, and add and subtract few things. Of course, don't change it. And yeah, 4 to 6 months, I think you will get good results.
The brains to begin with. That's right there, Victor, mate. Me here trading gold on the 1 minute. The sage trading gold on the 1 minute is a recipe for a heart attack, I think, mate.
Yeah.
I to be honest, I trade
the 1 minute.
Yeah, EU and GU on the 1 minute. That's where I get my entries from predominantly, and that's bad enough. But when you're trading gold from a 1 minute, yeah, not for me. I'd end up in accident and emergency.
Yeah, I've tried trading gold the 1 minute. I remember it was a disaster for me.
Just too much anxiety and stress.
Yeah, but yeah, if 1 minute is working for you on gold, then yeah, just trade it.
Yeah, exactly, and
I
that's
don't
not.
think gold is really shitty pair, man.
Yeah, but
This is my point of view.
Yeah,
Our
exactly.
viewers might be getting good results with that. Just my point of view, I don't really like gold, man. I don't really trade it. I don't even keep that on my watch list anymore. If you can see, I just keep NAS 100.
Yeah, so I'm the same, and that's bang on. Is like 90% of ICT students don't get Michael's point. He told us to find what's in the box, but no one tried. So try even how I said it's not logic. So no one tried to. So even the way how ICT trades.
Yeah, and that's the issue is a lot of the time people slate strategies and things, and like I was saying earlier, some people may not get ICT to work. For example, I couldn't get support and resistance to work, just because, like Samir mentioned, there is with his sometimes your eyes adjust to different chart patterns or different strategies better than other people.
Exactly.
So one person may not be able to trade it, and another person may, and I've had success for it for a long time. But Samir actually mentioned there as well, we are talking about gold here, and it's not for me and Samir, but if that works for you, that works for you, and don't listen to what anyone else says. If it works for you, then stick with it.
And as you mentioned, like your eyes are trained, as we talked about this, it's really hard to delete from your mind. So it's better to just mold your system in that way that your mind and eyes are trained, over this journey that you are in this trading thing. If your eyes are, seeing a certain thing, just mold your strategy in that way only, because it is hard to rewire, or you can say delete that thing from your mind. I would say just add or subtract few things from it, because it is going to work anyway.
And the same goes there with strategies. You may find, I think Jonatan was mentioning the other day, he's got bits of certain strategies that he's sort of put together and sort of like different bits from different zones and things like that. So again, it's you may have a core concept, like you talk about ICT, you may have a core concept, but you may have a different entry method to myself. So
Yeah.
it's all just understanding the concept and what your eyes see and things like that. And Smithy, I think that's how it's supposed to be Smithy there. To be honest, use what works for you. To me, ICT and SNC is all noise. That's bang on exactly. Like, and I never ever slate any other strategies because I know they work. But yeah, that's right. If you find ICT SMC doesn't work for you, but support and resistance does, that's awesome, and keep trading it. So yeah, Derry, where in Wales are you from, Butty? I'm guessing by the way you've said Butty there, you're from Wales as well. I'm from South Wales, a place called Maesteg. I'm from in between Swansea and Cardiff. You probably know if you used the word Butty there. That's a Welsh thing, Samir. Butty in Wales means like mate, friend. So if anyone's watching, wondering what that is.
Yeah, I was like, what is that? What you just mentioned. Sometimes I combine the SMC, ICT with SND.
There we go.
Yeah. Everything works in my opinion. You just have to add or subtract few things in your data in, let's say, 4 to 6 months. I think that is enough. Price is ranging. Yeah, maybe. I don't know if any news is there or not. Let's see what this week is gonna do. This week. So today is pound holiday. Tomorrow we don't really have any heavy news going on this week. So maybe that's why we are ranging.
Yeah, there's nothing this week at all.
But doesn't mean that we cannot get entries. Let's see. My time is still, we have 1 hour left for the NYSE Open. So I'm still gonna wait for 1 hour. I'm just gonna talk to you guys. I'm not even gonna look at charts that much because my time window is after NYSE only. So yeah.
I'm pretty much the same as well. I'll switch over to it. I predominantly trade futures in New York sessions, so NAS or NQ and ES.
Yeah.
Derry, do you only trade EU and GU? Yeah, so obviously, yes, forex, yes, I only trade EU, GU. Sometimes I'll trade GBP, JPY if I haven't got correlation with EU and GU. And then obviously with New York session, then I'll switch to futures most of the time. Not all the time, but most of the time I'll trade NQ and ES.
Yeah. Sage is saying be patient, give your strategy setup to show up. Yeah, definitely. You just have to wait. That's it.
What's Euro USD? Euro USD at the minute for me again. GU, you've had, it's come back into equilibrium on the change in the state delivery on the 1 hour, and it's also come back to the FEG on the 30-minute, and now we're just heading for that low, whereas EU has given a change in the state delivery to the upside and is showing potential to move to the upside. But having said that, GU is extremely bearish at the minute. Yeah, go on, Samir, because it won't let me share my screen.
Yeah, you can just switch. We have taken this high out.
Yeah.
We have this high too. We failed to close above this high, so technically this can be a liquidity push. And let's see, smaller time frame. Again, that very abnormal price action. So this type of price action I have avoided most of the time when we have huge one candle like this. So now we don't know where it is gonna go. In my opinion, we don't know it is gonna reject or it is gonna continue. So in this case, you can just wait. Just 1 or 2 or maybe 3 days or wait when you are not confident enough in a move. So I would have just I would have not done anything in this case. Of course, we have a very good correction type of thing which maybe give us another impulse and then maybe a final move. So yeah, but as of now it's nothing is clear, so I will not you know take trade in this kind of price action.
Yeah, I can see. I think you've mentioned that a few times, Candle Slayer. The entry on GU, you're looking at that the 1 hour CISD, or I call it CISD, in the 30-minute. But for me, at the minute, just because EU's not correlating with it, I'd be staying away. And obviously, it's outside of my session. But I can see what you're seeing. I can 100% see it, at least to that low, the low at 134.841. Looking at
Yeah,
that.
Wesley is saying my previous day high, previous day low, what are your triggers for entry? It's very simple. So once we liquidate this, let me give you an example. I took a trade on Friday. One was a loss and one was a win. I have actually explained that, but I'll just explain you once again. So once NYSE open, my previous day highs and lows are there. So this is a previous day high and this is the last day high, like before that. So I will just wait for this to liquidate. So going to the 1 minute. Okay, we liquidate this, but this was a news push as we cannot trade a news on the live account. So I just have to wait. And even you should not trade news. Okay, it's just pure gambling in my opinion. So my entry point is just waiting for the break of structure and just entering on the retest or any fair value gap. So in this case, I enter on the retest of this structure. My stop loss was here. I took a stop loss here. I always target 1 to 2. I took a stop loss here, and then I again wait for the same thing. We broke this high. I gave only 2 chances per day. Okay, if both of the trades are lost, I just shut my screen and just do whatever I was gonna do anyway. So yeah, so once we break that, and now what we have to do, we have to wait for a structure shift. This is a structure shift. Once we close below, you can set your entry either at this fair value gap or the retest. This is a fair value gap, so you can place your stop loss and you can target 1 to 2, which got triggered today. Actually, you have to in this case your trade went for 2 days. So very simple. This is my strategy, and I back tested it. It gave me I think 30% in 6 months if you risk 1%. So if you risk 2%, then you're gonna get 60% in 6 months. Of course, year data might can give you maybe higher results or maybe break even, whatever. But in 6 months, I found 30% was there. If you risk 2%, then your account is gonna be 60% up. If you follow these kind of things on a consistent basis, and if you don't mess up, let's say you take a loss and you just double down your risk, and then you are down more. And these are the things that is not gonna work in a long run.
I wait for MSS and a retest for FEG. Yeah, Wesley's very, very similar to what I do. I wait for CISD instead of MSS. So market structure shift. Very, very similar. Shan, guys, I'm struggling with finding the right symbol to trade. But I focus on only a single head and read well, but then I get I lose money. So, Sam, that's a great question there. Is if you find you're having more success with only trading the one pair, and you've actually seen that and you've proved it yourself, only trade the one pair. They haven't success with, because if you're chasing moves, then you're not going to be profitable. Stick with one pair, you get literally your own pressure price going on. confuse you, mate. Or for me personally, and I think if you're sort of early on in your journey, having all those pairs on your screen, because each pair has different market conditions as well and different market behaviors. So if you find you're having better success with just single pair, stick to that, mate. You don't want to be chasing, like we were saying earlier, 30-40% a month. If you can get out of some months 2-3% up, and then the next month you have 5-6%, you're doing good, mate. So stick with the one pair would be my advice.
Yeah, it also takes a very hard work, I should say, to just build your perspective, your vision that way. Because most of us are we are greedy, we want more money. So it
It's
is
human
hard
nature.
for us to mold in this way where we are fine with the negative month, or maybe even 1 to 2, even 5% a month. We all are greedy, of course. So it is really hard, but you have to overcome this. Okay, if you want to be a good trader, you have to overcome this. Of course, there will be good months when for an example, July was really good month for this my strategy. I was hitting back to back wins. So August is really slow. We are having, I think, 40 50 40 60 kind of 40% win rate and 60% kind of losing days. So of course there will be months when you're gonna be getting opportunity to make huge money. Okay, so just wait for that month. And of course, if you are in the process and your foundation is right, then you will know when this kind of period is going to come, or when to maybe increase your risk or when to decrease your risk. If your foundation is not right, you are just risking more and more, and you are revenge trading, over trading, these kind of things that you are doing, then you will never know when to do the right thing. Okay, when to increase your risk, and when is your good month, you will never know. So if your foundation is right, if your mindset is in a good state, if your mindset is a trader mindset, then only you can think about these things. I'm sure you are not even thinking about these things that I'm talking about. You just want to pass your from today, you just want to get your payout today, and that's it. This is the very wrong mindset. I carried this mindset for 4 years, 4.5 years. Let's say 5 years actually. So if you want to waste your 5 years, you can keep up with the same mindset. But if in your heart is little bit, even 1%, I can make improvement, this live stream can make improvement, then I think it is a success for us.
You're right. Even sitting on your hands when you don't see a setup and your preferred pair is really hard, then often psychological effect. So when you say that, Sham, do you know you're not. When you actually think of it, though, if you're having success with only the one pair and you haven't got your setup in that pair, what you need to do there to overcome or combat that is you need to sit there and I'm guessing you journal by the way that you've set up. If you don't journal, start journaling, and then you can look back on your journal and go, okay, but if I now want to scratch my itch essentially, or I want to trade just to get my fix, as we call it as traders, then look back on those journals and then understand that if you do that, you're not going to be profitable. So why are you doing it anyway? And it's really hard, like Samira was just saying there. It's human behavior to want to chase big wins and have fear of missing out and all the greed and things like that. So sitting on your hands is actually more beneficial to you than actually trading if you find that you really want to have your fix of trading for the day, because you look back on your back testing, your journaling and all this, and you're not profitable when you do that anyway. So why are you actually doing it? I know it's easy to say and hard to actually practice, but when you start understanding that it's and you start actually practicing it, what you'll realize then is, oh, okay, this month I've done 2%, last month I was minus 8%, because I was trading all these other pairs as well. And it is a hard thing to do. It's against all human behavior. Anything we do in trading is against human behavior. And that's the hardest part about trading. And it really is. Me and Samir touched on it at the start of the
Yeah, exactly.
session, is trying to sit on your hands and actually sort of do that is so hard. But you can have any strategy in the world, but without that mindset, it'll be nothing.
Yeah.
You could literally go to the biggest bankers in the world and pay them whatever they would charge to teach you to trade, but without the mindset, you've just wasted your money, because that's not going to work.
Just keep this thing in the back of your head. You can write it down every day. Just recite yourself, just do the self-talk, these things that we are mentioning, these mindset things. Of course it is not going to get to you in a day or even a week, but eventually within a month, 2 months, 3 months, your subconscious mind, your mindset, if you say this thing every day to yourself, then you will overcome this thing. But if you are unaware about these things and your expectations are wrong, you are not even talking about these things to yourself, then you will never be able to be a good trader. You will never be able to overcome these things. Now we are mentioning it, you know these things exist and you should focus on these things. Just keep that thing in your mind, okay? Of course, in one stream you cannot do it, but just do a self talk, and I think within a couple of months you will overcome that. So this is how you might be thinking, how to overcome this thing we are talking, but actually how to do it. So this is the right way to do it. There is no cheat code, there is no course that we can tell you to do this and you will get there. There is nothing like that. You have to go through it, okay? It's a process. Just do the self talk, keep these things back of your mind, back of your head, then slowly you will adapt, okay? But if you're not even aware about these things, you are going in a wrong track, you will never adapt. You will adapt in different thing, in the wrong thing. So yeah,
I think for anyone struggling with that sort of thing is trading. I was just about to say about a book. I forgot what audiobook I was listening to. It says trading is a game of logic. Yeah, so that's but a book I find for obviously building habits, like habit building. Everything you do in life is sort of compound effect. That's just the way the universe works. But you think of compounding your trading account, anything you compound anything, mistakes, negativity, positivity, everything you compound that. So small negative thoughts become bigger negative thoughts, then bigger and bigger and bigger, and that's how it works. But the same in retrospect with sort of your positive thoughts, little positive thoughts in the morning. I wake up and I go, I'm grateful for being able to wake up this morning. I'm grateful for having a house this morning. These things obviously build up and become bigger compound things. But if you read the book Atomic Habits, honestly, and practice Atomic Habits, that changed my trading massively. I was profitable before I read that, but I read that and it just made everything, not only my trading but my life, much better as well. So I saw someone mention a book there. That's a really good one for that sort of thing. Atomic Habits, read that book, really, really good. I'm not seeing anything at the minute from here. Any other questions there? Yeah, Atomic Habits is a really good book.
Yeah. I haven't really read it, but I would definitely give it a shot.
Yeah. Do the audible version of it as well, of course. It's so good, Samir. Really good book.
I'm definitely gonna give it a shot.
Yeah, it's so good, mate.
Can you teach me how to scalp in 5 minutes? But you have to find your way, man. We can show you a setup, do this, but at the end it's you only who have to do it.
Yeah, and again, you say, please, can you teach Nelson on there? And I mean this in a good way. Please, can you teach how to scalp in 5 minutes? You can scalp in the 5 minute. So the markets are fractal. So whatever strategy you trade will work on majority of time frames. Like I trade ICT, and I trade from sometimes the 4 hour, but mainly the 1 hour, all the way down to the 1 minute, just aligning time and price. But you could scalp using trend lines, support and resistance, ICT, SMC. It's all relative to what strategy you're trading, but the markets are fractal. So essentially, whatever you do on one time frame, you just mimic that on every single time frame. So if you've got a strategy for higher time frame, use the same strategy in the 5 minute. Test it.
Dubakur FX.
Very easy. Buy and sell.
Buy and sell.
I like that one. Buy when it's going up and sell when it's going down. Simple.
Really good, man.
Keep the comments coming. It's good.
It's just a waiting game. Everything is ranging. We cannot do anything. Look here, we just move only 30 points. That's it. In 2 hours. Secret word is not work. Okay.
I know Dupakur. That might be easier for you to read, Samir. Sarcasm, I know, mate. I know. I always say when people ask me, I get stupid comments sometimes, and I always say, they say, how do you know what you're doing? I just say, easy. Buy when it's going up and sell when it's going down. So that's why I was laughing at that one.
I don't even tell my friends, whatever new people I meet in the gym, that I'm a trader. because they think it's a gambling.
Yeah,
I'm
they
like,
do. Yeah.
yeah. I'm like, how will I explain them? This thing works like this. I cannot waste my time and energy, you know. So I just say whatever thing comes in my mind. I do that. Like I'm a job guy. I'm a student. Whatever comes in my mind, I just say that.
It's all well and good until you go into the gym and speak to the same person that you forgot the day before, and you told him you were a gardener the day before. Now you're a chef.
Yeah. Sometimes I'm like I'm a sales guy. Sometimes I'm like I'm a student. View on Fibonacci's. Fibonacci's are really good. I have been trading with Fibonacci's, you know, back in the days. On gold, actually, it really works well. Let me tell you. You just have to use only 71% retracement on any time frame. I mean, you will get 1-to-1 most of the times, okay? 1-to-1 got. You can draw like this. If you take here, stop loss here, 1-to-1 was also secured. Here, actually, here you never got a break of structure. You cannot draw the Fibonacci this way, okay? So you have to draw it this way. But if you draw it this way, then it was a stop loss, of course. But if you draw it this way, then also I think your 1-to-1 was there. 70%, yeah. On gold, you can easily secure 1-to-1 with this strategy, okay? You just have to find a very good push, and that's it. Your breakoff structure is here. Now you draw a Fibonacci from here to here. It never came from here to here. It did came near the 70%. So let me put your stop loss. 1-to-1 was there. Okay, we got a breakoff structure right here. You will draw a Fibonacci from here to here. Got your 1-to-1. We never broke the downside, so you cannot really draw the Fibonacci this way, okay? You can do this on 30-minute, 1 hour. I think that is the best time frame. You got a breakoff structure right here. You can draw from here to here, but the leg is very small. I will not suggest you. You got another breakoff structure, so you can draw it like this, okay? So look at here. You can enter. Let me share a losing scenario also. Okay, if you assume this is a breakoff structure, if you draw a Fibonacci like this, then this was a losing scenario. Beautiful trade. Look at the way price is correcting. You just take your entry, 1-to-1 secured. Okay. If you just take your entry like this, still there was a 1-to-1 actually, I think. Oh, before the move, you still got your 1-to-1. I was gonna assume that this is a loss, but you got your 1-to-1. Let's do more testing. Okay, if you draw like this was a stop loss. So yeah, with the trend, with one time frame, with 1 hour 30-minute, just delete everything. 30-minute, 1 hour. Try this Fibonacci thing for at least 2-3 months, and I think still you're gonna get good results. You just have to stick to this, okay? Stick to whatever you're doing. This was a stop loss actually. If you assume this is a push, stop loss. If you took this push, this was a win. And yeah, you can add or subtract few things from it. Whatever your eyes are trained to see, you can add that thing, okay? If you're a supply demand trader, you can add that. If you're a support resistant trader, you can add that. If you are a breakout trader, you can add that. You can just use the Fibonacci in this way. As I mentioned, trade 70% retracement. It really works good. You will get 1-to-1. I'm not really even saying target the highest point, just target 1-to-1. And of course, you can avoid few setups, like in this case, this was equal lows, okay? ICT guys knows this kind of move is a liquidity push. So instead of drawing a Fibonacci from here to here, you can wait, okay? So these are the couple of things you can do. You can add or subtract a few things from it.
Sage currently break even in EUR USD, entered at 16944. You entered off that 1 minute fair value gap. Absolutely lovely trade, mate. That's exactly what I was looking at when I jumped on this stream. Lovely trade. If you've got that 2 or 3 pip stop loss, I'd be looking at 80% pass through in that. If I was in that trade, my stop would have been at 16916, and I'd be looking to take 80% at 17036. It's about a 5R, just to that external high, and then obviously the 1 hour, I'd be leaving 20% runner onto that 1 hour high.
You can share your screen if you want to.
It's not letting me click on my screen now. If Jonathan's in the background, I'll ask him if you can change it, if you can hear us. So it won't let me change it.
Caught it with the 3 pips.
Yeah, 3 pip stop. There we go, mate. If you caught that, mate, it's exactly what I was explaining when I first come on. I'd be looking at, again, that's your own strategy. It's an unreal trade, but for my rules, I'd be parceling 80% of that trade at 7038. Very good trade, mate. Very clean. All the time frames aligned.
I don't know how to, switch screens. Try to stop it and reshare it.
I don't think I've got the permissions on it. I think that's why. Yeah, that's okay. ICT, yeah, I can tell you trade ICT Sage, same as me, mate. That's a really nice trade, and it was something I was looking at when I mentioned when I first come on. But I've taken that trade this morning. That did 7R. With parcels, did about 4.5%. So I'll be staying away today. I'll just trade futures this afternoon. But that is, of course, outside my trading hours as well. But that trade is beautiful for what we trade. Absolutely beautiful. Questions? Did you guys take a course in ICT? Yes, I didn't. I had a mentor I did, mate, to learn. He does have a lot of it on YouTube, but on YouTube a lot of it is sort of missing. Sort of the more in-depth stuff. But yeah, a lot of it is on YouTube. ETC, Bitcoin. Samir, someone's asking, can you have a look at Bitcoin? I would do it myself, but again, it won't let me switch screens for some reason.
Yeah, let's do it. So you want to go with the weekly time frame? You can share your views. We are just doing support resistance type of thing. Resistance turning into support. Even if you draw a Fibonacci like this, still it is bullish to me. It's a very good area to invest if you're looking to invest. You can invest your 20% here. If you decide to come down, 20% here. And if you decide to, come at support, and if it liquidates the support, if it taps the FVG, then also you can do. But as a trading perspective, let's go to the daily now. We already had a push actually from this area, so now it's a very tricky move.
Have you ever traded Bitcoin before in the past, Samir? Or not?
No, I haven't really traded Bitcoin.
Not me, never.
I was trying to play with it. I bought a 10K challenge.
Oh yeah.
I was just entering random trades on Sunday, and the market was closed. Not really the best luck I had back then. Other than that, I haven't really traded Bitcoin. So yeah, we broke out of this trend line type of thing. I think this can be a liquidity. You just have to wait for BTC to show you some higher highs and higher lows, and then you can plan for buys. Okay, because we are moving up and up only. Let me.
Great in the back. Yeah, there we go.
So we are moving. We are making high highs and higher lows only. So it doesn't mean that one trend line break we're gonna shift the whole trend. So this can be a liquidity move. So you just keep your buys bullish. Now you need entry areas. Okay, for the entry areas we have nothing right now. We are just making lower lows. Okay, as you can see. So you just have to wait for some kind of high move. Let it dip to some kind of supply demand area. Let's say this is a demand area. So let price come here, and once it taps this area, go to your small time frame, 4 hour, 2 hour, 1 hour. Just look for price making high highs. Then you can position yourself in the buys. Until then, until this area, yeah, you can get an intraday move on the 15-minute. You can short it for whatever this, I think it is 1000 points. You still have 1000 points range for the price to go down, and after this area I think your buy should be bullish only, as we are just going up and up. BTC go down 95k. I think we should not predict that it should go there or there, at a area. This is your 95k. Going to the weekly. Yeah, if it doesn't hold this area, we definitely can expect more move to the downside. But as we are just trading the trend, so we are not expecting this area. We are just interested in buys only. So yeah, if you ask me, I'm just looking for buys. We already have a push right from here. We might be liquidating this low and this trend line low to involve more sellers, as they are seeing trend line breakout and the support breakout. After liquidating all these people, I think price is gonna go up.
No problem. Did you catch that, NX Master? Did you catch that trade, as well? Nice. Hello, Victor, as well, mate. Nice to see you.
Hello.
Yo, Victor.
Hi.
What's
How
up?
you going?
Hi, everyone. You two gentlemen, and everyone watching us right now. How is everyone? I'm full of energy. It's Monday, the 25th.
Yeah,
Are you guys? Have you hit the market already? Are you waiting for a move, or what's the status on your action?
So I got a pretty nice one this morning. Did 7R with partials, did about 4.5%, and then I broke down a trade as I jumped on here, obviously outside of my trading hours, but I've already traded as well. But I think a few of the guys actually caught the trade. So yeah, pretty decent.
Did you just say 7.5% profit?
7RR, so 7 risk reward, up to 80% partials. I took net profit 4.5%. Yeah, 4.5%.
Okay. Perfect. That's beautiful. Could you? I'm pretty sure you shown this to the audience already when you started streaming sometime in the last 70 years. But could you do that again? So for those who just joined, me included, could see can get a view at the beautiful trade you just caught.
Yeah, of course. Can you put my screen on, Victor, if you can? It won't let me switch it for some reason. In 4 minutes, so let's make it rapid. Perfect, there we go. So I caught for the guys. Some people may have already seen this, some people may have not. But from 4-hour perspective, I always look for a sweep of a high or a sweep of a low. We swept a high, so 4-hour down into the 1 hour. We had something that I call changing the state of delivery. So similar to a market structure shift, but a break of that last bullish candle in that price leg. So, and we obviously left behind that FEG as well, so the fair value gap there. We came back up to test that. You can see it exactly came back to what we call a change in the state of delivery and the fair value gap. So from a 1 hour perspective, everything's met there as well. Then from the 5 minute perspective, exactly the same process again. We had change in the state of delivery here. So we pushed through that. We came back up with this wick here, tested it, and then pushed to the downside. So 4 hour took the high, 1 hour change in the state of delivery, 5 minute change in the state of delivery, and then from my entry we had same thing again, exactly the same process as what I was saying earlier. The markets are fractal, so we had a sweep of this high here, which put in an SMT divergence on GU. So GU actually held this high, which gives me a good indication that we're going to push lower. We then had a 1 minute change in the state of delivery with that fair value gap left behind. And if you can just see here, this was our entry, the wick of this candle here, that just came back into that fair value gap. We went into a bit of drawdown, and then obviously overall profits, we were at that 1 hour low. I partialed 80% around this area, and then left the rest run then, which gave me an overall 4.5%. This was the trade from this morning.
Awesome. It looks like a champ, I have to say, Deary. How often do you catch these high risk reward ratio trades?
To be honest, 7RR in the last 2 to 3 months, not that often, but the big expansion moves do seem to be coming back. Like Q1, we used to catch them quite often, and more recently it's been like 3-4R, 2 to 4R around that area. But the last week or so, these expansions have been very big. I know a lot of my students have been catching these on the regular the last 2 weeks. So these seem to be, market conditions at the minute seem to be nice again. Last week I missed so many trades on live sessions. I said to my students, I'm taking this trade, and they were all gone, I'm in, and I was like, I've missed it, and it just went without me. So all my students caught it, and I didn't. So
it happens. It happens to all of us. We even though we set alerts, we come to the charts often enough. I still miss trades. I have to be honest about that. It happens to all of us, I think.
Yeah, 100%.
Samir, how are you doing today? In terms of your trading, how many, what action have you been having so far?
So last 2 weeks after my withdrawal, I think I've made 4%.
Wow.
On one account, I think 2% on one and 1.4 something. I'm not going to be trading now this week because it's my withdrawal date on 29th. So, but definitely I show up every day, So today I will take a small risk, I think 0.25% just to stay active in the markets, as Monday is my trading day. Tuesdays, as I mentioned a couple of times, I don't really trade on Tuesdays.
Mm-hmm.
So yeah, I am looking for trades. We have, I think, 20 minutes left for the NYSE Open. So once it opens, so these are my highs and lows of the previous day. Let's mark the.
Let's first push your screen on. Let's see if I can.
Samir, just while you're doing that, I'm gonna have to shoot. But it's been a pleasure again, everyone. Thanks for all the questions, and have a safe trading day, everyone, or a safe trading week.
Derry, take care and say hi to Uncle Scrooge.
I've taken him off. I've moved my office round. I need to put him back up. Thanks, guys. I'll catch you again.
Well, take care.
Bye.
Let's see. We have. I'm not sure if. Let's see. I think.
Can you put my screen? Yeah.
That's your screen. Yes.
So these are my previous day areas.
Mm-hmm.
So I just want these highs or lows to be liquidated right after the NYSE. So once it is liquidated, then I will look for my entries. And as of Friday, I took one loss and a win. Overall, I was up like 0.5% on Friday. So let me explain you the trade, that trade also. So these was my highs and lows of Friday. So after we swept this high, this was a news push, as most of the prop firms don't let us trade the, what do we call that? The news. Let me do this. Okay. So once we liquidate this, now of course, as per my strategy, I want to take sells. So I just waited for a structure shift and a retest, which happened right here. We shifted the structure at this small structure was brick. It was broken. So I took the trade right here, 1 2, which of course was a stop loss here. Then I again gave a try. We liquidated this move and the structure was shifted right here. Actually, we broke this move also. So now the structure is here. So I took the trade somewhere around here and my stop loss was this high, and I was targeting 1 to 2, which got triggered today. But I closed my trade at 1 to 1.5, somewhere around here, because I didn't want it to hold my trade through all the night, because it was already 10:30 around this area. So I had to sleep also. So I just closed my trade because I didn't want it to end Friday in a loss, and I don't want to spend my weekend thinking, oh, Friday was a loss, now I have to trade on Monday, Tuesday, whatever, next week. So here I made 0.5% profit for Friday, and I was happy with it. And today, of course, looking for the same kind of move that I explained. It's a very, simple strategy. Just have to wait for either this to go, I think. Yeah, that's it. I'm just optimizing this thing also. Like this was a very huge volume push. So I'm thinking, why not to take the trade on the second liquidity point. So I'm just testing it. Once this kind of move happen, I might can shift my trading, my trades on the second break or the second liquidity point, which happened on Friday, which happened right here. This.
Okay.
So today, yeah, let's see what NYSE can give us. So
Yeah,
what
that's
you are looking at in terms of you took any trades on the last week?
yes, I did take a couple of trades. To be honest, I wouldn't be able to tell you in precise the way you guys just did. How many
Mhm.
hours each one of them are. I typically, I take the trade and I move on. I don't.
Okay.
So in terms of, it's not too present. Okay, I got that exactly, that loss. I just move on, and but anyways, I was
Mhm.
gonna ask you the overnight. Is that a hard rule that you follow? That you try not to have overnights, or even through the over the weekend, or is that depending on the situation, depending on your previous P&L or your that week's how it goes and things like that? What governs
Okay.
uh, your your rules about holding trades longer than just one day?
What governs, as you mentioned, there are only two things. I was
Okay.
already up 3% on my account.
Mm-hmm.
So I just wanted to take a trade as it looked good. I was thinking I might can make 5% or I might can make maybe 0.5% depending on upon the situation.
Mm-hmm.
And I took the trade based on that. But now, as I'm already up 4% on my live account, why will I want to risk it? So now I am not going to be entering the trades. But to answer your question, as you mentioned, what governs me, it is just if I'm entering the fresh trade, like this is my first trade after my love, like I'm gonna get withdraw now. It is gonna be
Okay.
my fresh. My account will be reset, and now I have to take the fresh trade. I know my data 1 to 2s often do get hit. Okay, so
Okay.
if it is my first trade, I will hold the trade. If for an example, if let's take this Friday's example, the TP was triggered today. No matter when, maybe that similar day or the next day. Now my TP is done. Now I may will not enter further trades. If this was a loss, of course I have to maintain my performance to get the payout. So then it's a different case. Then I have to take the trades again. But it is my if it is my fresh trade, I do like to hold. Or if I'm in a drawdown, I have no other option because my strategy works like this only, and I do like to hold. But if I'm already in profits, then why will I wanna ruin my mood on especially the weekend?
I
I'm already
understand.
up 3%. Why will I wanna think about that? I don't even wanna think 1% about trading. Okay, if I can just cut that emotion right there, I will like to do that. Okay, of course I'm not robot. I know I have made in trading I am profitable, I know, but still I am not a robot. Okay, so I still have some emotions. I still i still have bills to pay. I still want to look after my family. I still want to look after me. So considering all these things, I was already up 3%. I just want to make 0.5% or maybe 1% for the day. Even if I have to close the trade, I will just do that. I don't want to um, put burden on myself. But if it is a fresh trade, then yeah, my strategy works like this only. I will just hold the trade no matter what happens.
I think that's very wise, Samir. You're ideally we want to be trading based on your expectancy, based on the data, and if the rules are based let's say your trade plan tells you need to hold this longer,
Yeah, yeah.
then that's you need to definitely do that. But that's ideally. In the real world, you have emotions and you know your limits, and that's exactly what you're telling us right here, that
Hmm.
that that's going to make you uncomfortable, that's going to risk you perhaps do something you're not supposed to do, right? Because
Exactly.
if it goes too much against you, it will start pushing your buttons, and you might do something that's completely against your trade plan. For example, if it goes into somewhat of a drawdown, maybe just because you got scared, you might close it at the worst possible moment. Does that happen to you? Not, I mean,
Yeah,
you
yeah.
necessarily, Samir, but I mean, everyone watching here has, I mean, it has happened to me a lot in the past. For me to know to know what I'm talking about, it's the exact moment where you shouldn't be closing the position. That's where the emotions get the best of you. When you look back, you say, why did I close it right there?
Yeah.
The thing is, the market, if you're not aware of these things, the market will push you, will, put you in a corner, push your buttons, and see if you're, gonna bow down, basically. And the only way to do it, or there's a couple of ways to do that, but one thing you mentioned is knowing your limits and
Exactly. Yeah.
maneuver the market, so adjusting your rules for these things, right? Before the news, or yeah, before the news is one, but before weekend, before overnights, and things like that. And the other one is to do to lower risk and detach completely from the results of any given trade. Samir, I think that I think you said 3 or 4% last week. That's amazing.
Yeah, it is the best, I think, week after a very long time. In July, I had a very great results with this strategy.
Mhm.
August has been a little bit slow, but yeah, we ended up. I think every bi-weekly these payouts, I'm securing something, so I don't really have any problem. So even if I make 1%, I'm happy with it.
That's great to hear, Samir. Awesome. And I checked while you were explaining. Fear not, I was paying attention. But while you were explaining, I checked, and last week I had 4.5R profit, which is actually quite slow for me, because my risk value is quite low, much lower than most people. 4.5 isn't, it's not like 1R is 1%, so it's much lower,
Okay.
which is low for me. But I mean, I have these weeks all the time. I'm happy with any positive week. There's obviously a gap there with the strategy itself, because I do miss some trades from time to time. But
Hmm.
I mean, that comes with being a real trader who is actively in the market, doing not only in the market but doing other things as well, besides just watching the chart completely 20, well, not 24, but something like 12/5, right?
Yeah, yeah.
I look at the market roughly 12 hours, not constantly, but I mean, that's my trading window, 12/5 basically. And that's if I don't take any days off, or do other fun activities as well. All right, so Mir, saw you were looking at the Bitcoin. So without going into all details, because you mentioned you're not a Bitcoin trader per se,
Yeah, yeah.
but your technical analysis, what does it say in a couple of sentences? Are we gonna have another push likely, or are you seeing perhaps the market slowing down, or has it broken perhaps some structures that you might think we might be ready for some retracement? What is your take? I don't know, for the day, for the week, on Bitcoin. Is there anything? Sometimes there isn't anything to be said, right? It's not always.
Hmm. In my opinion, we are just testing this resistance turning into support.
Okay.
But
All
as
right.
I
So
mentioned, on the 4 hour, we are moving down. Okay, we are just printing downwards leg. So right now, if you wanna be a buyer, you just have to wait for any structure should be shifted.
mhm.
Actually, it already shifted right here.
It
So
shifted.
if you would have taken buys here, it was a stop loss scenario for you. So now you have to wait for another shift of structure, something like this. Then you can plan your trade for buys. Until then, of course, we are bullish, but at the same time, we are printing lower lows on the 4 hour. If you're an intraday trader, then definitely you can look for one more push to the downside. But our high time frames are telling us to go for a buy. So I will not suggest you to sell this thing. I will just suggest you to just wait for the 4 hour time frame to align with a weekly time frame, then you can take your actions accordingly. But if you are just an intraday trader, then of course the 4 hour time frame is enough for you. Let's just do the intraday or scalping type of analysis too. Okay, so we are at the support, we have liquidity the support actually. So I have realized this thing: don't take actions near support or resistance. We don't know if this is gonna get liquidated or this is gonna get hold. Of course, you got your push right here. If you was in a buy here, you made a decent profit. But if you again try to go for a buy, but maybe this was a stop loss day. So right now you have to just wait for either a very impulse move, and then you can wait for a retracement, and then you can place yourself here. So as per my experience, of course it is also 50-50. If you try to execute around these type of areas also, there is another probability. But I have realized, don't take actions near these key areas. So now again it is a waiting game. So if it regains its strength, then of course you can look for buys, and you can assume this was a liquidity push. And then once, of course, you need a little bit of volume. If you see your price getting inside, let's just go for a buy. And then of course it's a FOMO type of entry. You should not do that. And right now at this point of time, you just have to see how the price is reacting. Okay, there is not I think you should not take action around this type of area. Of course you can say, oh, price broke this support, let's take this sell. But at the same time, we can regain its strength. Why not to just wait for that extra confirmation? Okay, the intraday traders just wait for the extra confirmation. And if it tries to go below with the volume, of course you're gonna get a little bit of pullback. Of price cannot move for forever, and then you can catch this small impulse. Intraday traders, okay. For the investors or kind of swing trader, you have to wait for the 4 hour to align in your favor. Okay, either way, both of the traders, you have to wait patiently at this area. If it would have been, let me give you an example. Like this was a resistance area. If the price was already in the middle, I would have told you the different story. I would have told you to go buy in this scenario. Okay, but right now we are at the key areas, so you have to wait. You can't really do anything right now. Wait for the reaction, and then wait for your entries. Okay.
I like that. I like that, Samir, how you just mentioned to not be cautious about taking entries right where it is the intersection of the market, because that's what these areas, these supply and demand areas are, right? They are intersection where the market can choose to go further down or to reverse from here in the case of a demand zone, of course. It's always very uncertain until we
Mhm.
leave, until we with some conviction we leave that area. But until then, you are somewhat in limbo, right? That's the thing.
Exactly.
And I like that. I like
Mhm.
that to
It,
highlight the
yeah, we got
uncertainty
this
of the area.
reaction,
Mm-hmm.
but now we already have this reaction. We
Mm-hmm.
cannot expect this again. So right now we are in a, it's not even 50-50 right now. It's lesser than that. If price was in the support, then yeah, it would have been different story. We already got the reaction. I'm sorry I interrupted you.
No, that's problem. No problem, Samir. I agree with you. I can, a trader recognizes another trader just by talking to them, and that's what I'm seeing here. You are what you're saying with using other words are exactly what we always talk here for those who are watching us very often about the first retest and the second retest. What you just mentioned, in other
Mhm.
words, in different words, in your own words, but it's the same thing. Whenever you have the first retest, that's the first move, that's the first reaction, that's the best chance you have. On the second retest, it may still have a chance to react, but the chances are inferior or less than before. And recognizing that can help you putting the odds in your favor. I like that a lot, Samir. I'm gonna show my chart, Samir, just here to contrast. It's not really contrast. Actually, it is showing the same asset, that is Bitcoin. This is on Oanda, and I believe Oanda is not. I believe I know Oanda is not, is CFD not open on the weekend,
Yeah.
so you have to be aware of that it doesn't consider, it does not print all the weekend bars. However, doing the analysis on this price feed, what we can see is that actually on Thursday already, using order blocks and quasis, we can see that this is the neckline. That's the established downtrend, the reversal, break of that neckline, coming back to one of those in the first, one of the two entry order blocks for going long, and the first one didn't react on the daily time frame, right? So I left it in so you guys can see that it went through it with no reaction. The second one, even though the market did actually have that reaction, as Samir was explaining, to me, at least in this time, this price feed, it had already invalidated the whole reversal area by closing that bar below the entry order block on the quasi. Now, it can still move back. It can still reverse. Doesn't matter. It doesn't mean that it's always going to, crash down. But, in using my data, a close there on any time frame, right? Whatever time frame that you're seeing the quasi on, a close there already is a sign that the chances that it will still reverse are quite lower. So that's one thing. And it did have the reaction, even though to me I wouldn't be interested anymore. The only thing is, and you can possibly see that the reaction has to do with the fib that we had from that swing low we had, right? It hit that level, that fib retracement level, and had that reaction. But in the end is already below the area. And as long as it is below this entry order block, I'm not interested, although I wasn't interested already because of that close. So if we look at this, I'm not doing the typical top-down analysis from the monthly, but if we look at the weekly, we don't have anything left in terms of order blocks, right? You can have other break and retest levels. You can have support lines or resistance turn support lines that are higher, but in the weekly time frame, we don't have anything other than this weekly order block, which starts all the way from 104.825. So on the weekly, there isn't any other bearish or bullish order block to be mentioning for that, for price to react on. And if we go to, let's say, the daily, we can actually see that this was the last bullish structure that was broken already, was invalidated at the end of the day on Thursday. And in that time frame as well, there isn't anything left for price to hold on to or to bounce to other than a daily bullish structure, which sits on top of that weekly. Probably, of course, we don't know the future, but I would assume that it will have to tap into that weekly structure before it reverses. And, we could see perhaps, I don't know, perhaps some reversal and that continuation from the trendy bullish movement we've had in the last couple of weeks. So a bit of a retracement of Bitcoin I see as well, quite likely for the coming days and perhaps even a week or two, who knows. So that's on Bitcoin. There's a couple of questions. Someone asked for Aussie dollar, and we'll take a look at that if time permits, as well as the dollar yen pair. All right, let's see. And someone asking also our opinions on gold. We can definitely take a look at them. Probably not all of them at the same time. On the same time, but during this stream. But what I want to, there was a couple of other questions. Someone asking about the continue button on the giveaway link. I will relay this message to our team of support agents in the background and have them take a look at this for you, Kapu, and everyone wondering with the same issues, if that may be a thing. I also saw, let's see if I can... Let's see. Someone asking for my Instagram or YouTube link. That is Jay Kishan. I'm sorry for not being able to pronounce your name right away. I don't have one. So there isn't anything to be shared. I don't have one currently the best way to find me is here at the YouTube channel and in the Discord server. Actually, in about 1 hour and 15 minutes, I'm going to be holding a workshop there for everyone who's interested. It's going to be fun, and you can be part of it for free as long as you have an account with the 5ers. The smallest account is only $39. With that, you get access to the Discord community and all of our workshops 5 times a week on the weekdays. And these are focused on your growth, on helping you as much as we can on each and every of these workshops to make you a better trader. Because if you win, we win. That's how we operate here at the 5ers. One other question we have here is Sham, or Sham, yes, I think Muhammad is asking if there's any chance that the 5ers could make CTrader available as a platform for challenge and funded traders. Sham, it is your lucky day. Just today, we announced that we are launching since today CTrader as a platform, as an alternative platform for you to trade on. Isn't that great to hear? So it is an awesome news. I don't know if that was the most appropriate background sound, but I try my best. CTrader is, today is the first day. This is the launching date of CTrader as an option for every trader to trade with CTrader. So check it out. If that's something you've been waiting for, then today is a very great day for you. And if not, check it out. It might have some features that you might be wanting to add to your workflow, the platform you are already trading. That's awesome. I'm very happy for that announcement, because CTrader, having more options in terms of platforms is a good thing, right? You can mix and use different platforms for different applications, for different things, depending on their strength. And even though I'm a diehard MetaTrader trader, I'll have to admit, you are too, right, Samir?
Me too, yeah, from the day one, MetaTrader always.
Yeah, same here. But I have been using CTrader for some time, and I can say I like it. I'm not gonna leave MetaTrader at all, but CTrader has some very neat features to it. So I really like them. Not the least the looks, to be honest. MetaTrader is, the one platform, number one platform for retailers. But the look is a bit isn't exactly as sleek as others. So that's not gonna make me switch, but it's a good thing to know your options in any case. Sham, your request has been granted in terms of DC Trader. So let's look at the market. Which of the pairs, Samir, would you like to analyze? Aussie dollar, perhaps, or dollar yen, or gold, or anything else? Is there anything?
What is your view on euro dollar, as it is a most liquid pair, I've heard?
Yes. Would you like to see mine, you said?
Yeah.
Sure.
You can tell me what is your views on euro dollar.
Let's do that. I'm going to switch here. Someone asking for Kiwi, the Kiwi dollar as well. All right, we can. I'll not promise all of them, but we will try. We will at least try. So you can actually see my screen for some time now. Let's see. Well, the top-down analysis, right? Doing it properly all the way from the monthly time frame, and that is what we are seeing here. You might see all kinds of lines. If you're not familiar, it might even be, I don't know, not very clear to you. But the things you need to follow is, in any case, is that we have from these two yellow horizontal lines, they are defining basically the range that we've had since some last couple of years, many years actually already. And the last swing high and the last swing low, the extremes of that range. We have in the we've had on the monthly time from a quasi, which this is the head, the left shoulder, the neckline. Breaking of that neckline, as you can see here, created a right shoulder, but because it broke again, it kept on expanding that quasi into a much bigger one. And this is a possible second right shoulder, at least through the ways that I look at the markets. And I'm going to, let me clean this up a little bit. Right, so, okay, so there. So we have in, considering the quasi, right, the quasi that I just indicated here, right here, and has actually it's the whole structure is all this. That quasi is one of the, it has two entry order blocks on the same time frame on the monthly, which is one bigger one and a smaller one. And that's the reason, at least for me, that's the reason why the market had this reaction. Even though it was very, very bullish, it reacted because of this structure. That wasn't a coincidence, right? But even though we had a big bearish reaction from it, the candle to me, right, the bearish candle only was a retracement. It didn't negate the whole candle here, meaning that whenever it switches back, we could be looking for that continuation and possibly price going at least to retest the same levels, but possibly even go a little bit higher at least. Because this order block has been touched and tapped into, but it hasn't shown, the market price action doesn't actually show, didn't show that the sellers really took control, right? They couldn't create a bearish order block after touching this monthly. So let's go to the weekly time frame. And what do we see here? After this is, of course, that's the same structures we saw before on the monthly. That is this purple shaded area here. We had the touch, and we did create the weekly order blocks on the this time frame, the weekly. And however, we bounced very neatly from a bullish weekly structure, meaning that it wasn't the first one. We did create and eventually invalidated a previous bullish structure. But this one was before we actually had the monthly tapped. So, and it did contain the retracement we had, right? So the retracement from the monthly was actually contained by this weekly structure. And that tells us that the market is still holding on, even though it had a quite big candle on the monthly, as we can see here, big bearish candle closing very, convincingly as a bearish candle. We can see that on the lower time frame, it still is looking not that weak at all, because it was held by a weekly bullish order block. It didn't need that much to reverse back into bullishness. So now we are currently retesting one of the two order blocks it created. This one is still being retested as a immediate retest, and it's going to it doesn't look exactly very strong as a bearish candle, since it is it has been this is the immediate retest, and we don't see, even though we're waiting for that push, we don't really see much of a bearish move. The only bearish moves we had was yesterday week, if that's a word, the previous week, but that one was corrected, or was bought back in the same week, meaning it left a one big, very bullish looking wick behind. That's not a sign of weakness. On the contrary, that's a sign that we are likely, perhaps not this week, but soon, maybe this or the next week, or maybe the one thereafter, we might be finding some support, some buying pressure coming in, and perhaps have that push that I just mentioned before. So that's on the weekly. The daily, That looks so the higher time frames, I would expect price to continue to look, at least price action is telling me that it's likely to be pushing higher. It might be this week, might be next week, but it's likely to eventually be taking out this high. And the only way to do that is, of course, price pushing higher from current levels. The other thing is, though, that we do have a bearish quasi on our chart, which is this. Let me mark it for our viewers. Remember, as we are breaking down the market, don't forget to hit the like button. That's the way you can support us and make these streams continue to grow for your benefit. All right, so we have, this is the established uptrend. That's the neckline. Price creates and leaves behind just one entry order block, and it's been tapped last Friday, which is quite interesting, because I am now, because of that fact, even though we have on the monthly and the weekly reasons to believe that price will likely continue to move higher, on the lower time frame and on this daily, I'm looking to actually short this if possible, right? Why? Because of this quasi, because the weekly and the monthly scenario that I just laid out doesn't need to happen today or tomorrow, or even this week. It could happen a week, 2, 3, or even next month. And if, well, 2 weeks will be next month, but you get the point. The thing is, in between, we can definitely have some very nice reaction from these areas, perhaps going to a lower order block, perhaps on this daily, and that could be all we need for this week, for example. So just because we have a bullish outlook for the weekly and the monthly doesn't mean we cannot take a short on the daily or lower time frames. Of course not. So I'm looking for this order block to see if price is going to reject it. Isn't the case yet, and as long as it's not the case, I'm not going to front run and get into anything. Just waiting for price to confirm that, and then I could hold or enter that position and hold it for a couple of days probably. So that's one. So we're touching a daily bearish structure on the quasi, and on the H4. Let's see what we have. So we are currently in a bearish order block, which has been retested. If you can see it here, right? Bearish order block that we are being retested as fresh, right? It is fresh. It hasn't been retested before, so it's the first attempt. But the problem is that the market is at all not reacting very bearishly. There is actually an H4 order block right here, right, which sits on top of the daily. This is the daily. Let me mark this, right? So this is the daily. That's the order block, the daily, and we have this H4 which sits, partially on top of it. So that already tells you that the market is quite weak in terms of, the sellers are not exactly strong, right? The sellers are in a weak position because they should be not allowing price to even squeeze this above this order block by much. And the other thing also that I consider is that once you have an area, right, an order block, right, so you have an order block like so that is being squeezed, and if it touches another order block, and this is a valid one because it's part of a quasi, I know that this order block isn't the relevant one, isn't the one you want to be watching. You want to be watching the other one, the extreme one. Why? Because as you can see here, this is not convincingly reacting or impeding price from going higher. But so far, this is, right? The current, the one that I'm selecting, that one so far has been much more successful in holding price down than the one below. So that already tells you that this daily structure is not a very good one. If anything, you want to be taking it from above. So let's see. That means that the order block, right, instead of looking for the quasi, instead of looking for the, this is a possible trade that never triggered. But instead of looking at the overlap of the 4-hour, right, with the daily to get your entry, we should be looking to short this, right? Because this one it's actually taking using the daily structure that is more relevant, and it has alignment with that H4. So I would be looking not at this order block, but the one one above, and the overlap of them, right? So that's one thing. And if we go to the lower time frame, there isn't anything here for me to be shorting. There's no reason for me to be shorting. This H4 might be a reason, but I want to see it confirm on the lower time frame that it is being, bearish structures, reversal patterns are being formed. Otherwise, I don't want to participate. I'm just going to leave it and watch price continue. The other thing we need to consider is that we have a huge, right, the order flow. What's the order flow on? Yes, it is. Price has been going lower, right? We are in a downtrend. We were in a downtrend. Lower lows, lower highs. That very beautiful downtrend. But this move has basically broken that trend, right? So the question is, yes, it can come back and push higher, and I would be interested here to get long. But what if the order block? What if this move isn't over yet, right? We might see something, and we see this all the time, where you have an impulsive move. Sometimes it does retrace and come back to the area or multiple areas where it came from. Other times it just holds on to that level and then continues without that deep retracement. And that looks, if the current candle closes on the H4 the way it's printing right now, it's showing right now, I would say, chances are looking increasingly good for price to just push higher from current level without that deeper retracement. So overall, I'm looking to look for sells in the overlap of that H4 with that daily, or any structure here that has H4 reasons to be shorting. But the macro expectation is still it's a bullish one on EU because of that big, huge candle we have here. Obviously, that was Jackson Hole Symposium having its, those speakers, those Fed policymakers speaking and talking about the interest rate in the US that made this big candle. Nonetheless, right, regardless of what the fundamental background was for that move, fact is, even if you knew nothing about the fundamental news, this big candle tells us a lot, right? And that move may continue. It looks like it is still that possibility of a continuation is still there. So on the lower time frame, even though the weekly and the monthly, I expect opportunity in the daily as well, opportunities to short perhaps from this level. On the lower time frames, I'm looking to be longing the euro dollar. That's my view on euro. Let us know in the chat if you have any requests. We have about 9 minutes. Time flies as we are here. Samir, did anyone ask anything in the chat that I haven't looked at before while explaining? Let's check.
Let's check. Yeah.
There's someone asking.
One, I don't know.
Yeah.
I don't know where my chat box is.
There's a little triangle looking to open it up on the sidelines. Or yes. Maybe I don't know if you on the left. It usually it
automatically got yeah. Now it's fine.
We have someone asking about the time sessions. Do you use time sessions indicators, Samir?
I don't really use, because I know when New York Stock Exchange or NYSE opens.
Mm-hmm.
So I don't have to. If somebody is new, then according to my time zone, it's 7 p.m. and it's 9:30 Eastern. So yeah, you can just mark your charts that way. But yeah, there are few indicators. You can use them if you want to use them.
What is your time frame, Samir?
Like,
I mean, time zone, not time frame, time zone.
time zone, it's Indian Standard Time Zone, so it's really good actually. I can trade in London. I don't really trade, but yeah, who are here living in India, they can trade London, they can trade New York. Asian session, they have to wake up early. It's in the I think 5 in the morning they have to wake up. So I think it is really good time zone to trade forex, because in the evening you have a New York session, in the morning you have London session. I know guys in the US, they have to, stay awake to trade London session. So yeah.
Exactly. Let's see. Yeah, I have them here on my chart as well, but to be fair, I rarely use them, because I know, we do this every day. I know exactly what time it is, and I mean what time I need to be trading. It's the same thing as my trading plan. It's a good thing for someone who is starting out. It's actually a solid advice to write it down, and to have it in front of you all the time. But after you've been doing that day in, day out, week in, month out, a certain moment, you can dream it with your eyes closed, right? You can see it in front of you without watching it. So I don't I
Even in
don't
Forex Factory, we have this tab known as a session, so you can use that information also.
Yes, indeed. That's exactly right. I say hello to David. Hey. Hola. Hi there. So we have some great viewers with us here today. Thank you all
I'll
for
be I'll
your.
be hopping off in like 6 minutes. I have to hand over the key of the apartment to someone.
No problem. No problem.
Guys.
We're finishing in about 3 minutes.
Oh, that's amazing.
All right. So yes, I thank you all for all your good questions. We are unable to answer all of them. Let's see. Someone asking about the C trader, if we're able to switch. To be completely honest with you, I don't have the details as to, what are the guidelines when you're supposed to be switching, or you can switch. But you can hop on our website and talk to our live agent they know all the details. I know, but I don't want to give out the advices that are exactly accurate. So hop on the live chat, or on the live agent on the website, and they will be able to help you, with the best information.
Yeah.
That's the best way to get your dose of the 5ers updates. All right.
Next
So
master. One
beg your
last
pardon?
question. NX Master is asking, do you wake up early in the morning? I am not a early morning guy. I wake up like almost a decent time, like 10 a.m. or something like that. Waking waking hours are really bad, but when I was in my apartment, so I used to wake up 8 in the morning. So my trading time is in the evening itself. It's 7 p.m. So yeah, it really works well for me.
Yeah, that's the beauty of being a trader. You can adapt and look for strategies that suit you better, whether you are an early riser or you're someone who stays up late. I've been both, but last couple of years I'm an early riser, so I can I mold my trade plan to be to fit my lifestyle, which is awesome, to be able to do that. And we have someone, Sergio Salazar from Colombia. Hi there, Sergio. Thank you for watching. And we have Marina as well. It's always great to have all these great members watching us. Thank you all for your support.
Thank
Samir,
you.
it's been a very enjoyable moment with Deary and you in the time that I've been online today. Sadly, we've come to the moment where we have to say goodbye to our viewers. Any last words you have before, any advice or anything you want them to think about while we are, while they're waiting impatiently for our next stream?
Just hit the gym until next time, whatever your time zone is. If it's morning, it's best to hit the gym, and if it is evening, I'm gonna be going to the gym now. So yeah, after that, just tomorrow watch the stream. And if you are new to trading, this is the best place to take advice from people who have done it. So yeah, and slowly, as you are in the process now, you all are in the process, you are already a profitable trader. You just have to eliminate few habits, and yeah, that's it.
Perfect. Perfect, Samir. Thank you for all your great advice, some wise words from Samir. I know what he's talking about because I've gone through many of the things he
Yeah,
just
exactly.
explained, and I know the value of them hearing it from someone who has been through them as well. So, if you are interested in watching authentic traders trading and talking about their trading experience live, join us tomorrow again. Hit the like button in the process, subscribe to this channel, join us in our Discord community, and keep safe. See you guys. Bye bye. Till tomorrow.
Take care.
Bye.